you got a cold in your throat. Oh no, just call your boss. Take a crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Friday to you both. We made it.
Hello.
Woo-woo! Where's your heart?
What?
Where's your heart? It says, my heart is a...
Oh, in my heart is a Christmas tree farm.
Nice, nice. I don't think I've ever been to a Christmas tree farm.
Well, tomorrow, on the 13th in 1989, on a Christmas tree farm in Pennsylvania, Taylor Allison Swift was born.
Oh my God.
Oh my God, is that what that is?
That is.
Yeah, it's a song. She's saying it's a good song. It's called Christmas Tree Farm. It's a good song.
Is that just where where they did the deed, or is that where she was actually born?
No, she lived on a Christmas tree farm briefly in Pennsylvania.
Oh, wow. Okay.
The more you know.
The more you know.
In my heart is a Christmas tree farm.
I can't wait till I whip out that fun fact.
Whoa.
That'll be a good one. Do you have a Christmas tree up yet, Vanetta?
There's not room to put a tree in my place. Like there's nowhere to put it. Do you have a tree up?
No, not yet. But I've done the little small ones.
Yeah.
Those are fun, but no, I don't yet.
How many trees do you have, Bat?
No, I just have the one. I just have the one tree. I did do two trees for two tree for a little while, but one tree now.
I think Jenny is our leaderboard winner. I think she has 6 trees.
Yeah, Vinny has a small one in his room that he does for himself. I don't even count it. It's more like a bush than a tree. It's just like a little thing. You know what I mean? But yeah, Jenny is over the top when it comes to Christmas. I don't even have my inflatables up this year.
Wow, you're turning into the Grinch as you get older. This is sad.
Yeah, it's the natural evolution, son. I mean, I will, of course, I've got a granddaughter coming in a couple of days. I've got a 2-year-old grandson. So it'll start to go full circle again. We'll get him out the next year or two or so.
I can't believe there's a baby girl coming. How's mom doing?
Doing good. Doing
good.
I think by Tuesday.
That's not how that works, but
we may induce on Tuesday.
Sure, that's how that works. Yes.
Yeah. If nothing happens. So by Tuesday, kind of excited. Everybody's got their bug out bags waiting over here. So excited. So pictures yesterday. Oh my God! Like Nick.
Oh, I hope you didn't see pictures.
No, pictures are great. They're like color pictures, and you can see like.
You mean an ultrasound? You're creeping people out here.
Yeah. Ultrasound. Yeah. Well, ultrasound. Nick, with your ultrasound, it was just like black and white lines, and they would say, "Oh, that's his foot, that's his head," and we would say, "Oh yeah. Oh, look, it's perfect." I had no idea. It didn't look like anything to us. I mean, they just were not there. Today, it's like a color picture. You can see nose. She had her tongue sticking out. I mean, she had a foot up by her head. I mean, it's crazy. It's crazy.
I mean, if I remember correctly, Gina looked. We thought it was or you guys thought it was a boy.
Gina was a boy for a good 6 or 7 months.
Because Gina has the biggest balls in the family.
That's right, she does.
And the biggest penis, you could say it.
I am a Gina stan. I love Gina.
Yeah. For about 6 months, 4 to 6 months, something like that. Yeah, we had boys' names picked out and everything.
Mm-hmm. So that's always a fun question, Nikki. What was your girl's name?
I don't know. I know the decision was between Nick and Tyler. And I think Tyler is kind of ambiguous. You could kind of do that for
You could not pull off being a Tyler.
No, I don't think so either.
That's exactly what I said when I saw him. He was, oh my God, I do not make pretty babies at birth. I will say that right now. I mean, he was, oof.
That's not what I meant.
Oh, I'm saying it, oof.
Wait, but Bat, you didn't have a girl's name picked out for Nikki?
I liked. Well, it was a little bit of a discussion. First, he has it not completely correct. It was Tyler. There was no other name for a boy. It was going to be Tyler, which I hated, but I knew I had to wait. I had to play it right. Like this was a very strategic thing. I had his mom really want. I mean, she should name him. She's giving birth to the child and stuff like that. So, I had to bait her on with Tyler. Yeah, Ty. Oh, Ty. They'll call him Ty, which I couldn't stand. I'm like, oh my God. Yeah. Oh yeah, he'll be a CEO of General Motors. They'll call him Ty. I'm like, oh my God. This is gonna be horrible. Like Ty Bingington, that's great. You know what I mean? Ty Batista.
It doesn't sound right.
Doesn't sound right.
It's got to be more Guido. It can't be.
Yeah.
Ty. Ty is too simple.
But she was drunk with motherhood, you know what I mean? It was her first baby kind of thing. So she was, she wasn't thinking clearly and everything. So I just let her do that. And girls' names, I liked boys' names for girls, like, Frankie or
and now you're gonna set off Frankie in the chat.
I like boys' names for girls for some reason. So she didn't like that either. So he had to come out as a boy. We really didn't know. And he came out as a boy, which was beautiful. And we just sat there looking at him, and he had infant acne and a pushed in nose. He looked like the mafia had worked him over already. You know what I mean?
Wow.
So I said, we couldn't call him Tyler. I go, he's not pretty enough to be a Tyler. Let's call him Nicholas. How about Nicholas? She's like, that's beautiful. But she was now, instead of drugged up, drunk with motherhood, she was drunk with all the drugs that they put in her.
No, I thought I was natural. Gina was the. She didn't.
Natural comes down the birthing canal, and birthing canal.
Yeah, I don't know if
to a baby's face. Gina was natural too.
No, I thought after me, my mom was like, "I need all the drugs."
And there's no shame in taking the drugs,
correct.
Ladies.
Yes. Yeah. Yes. With you, she went too far, and they couldn't do like an epidural and stuff like that. They had to give her something. Yeah. She felt a lot more of your travels than she did with Gina. Which Gina, she was basically all the drugs. You are correct. You are correct about that fact. You are right. Yep. Well, anyway, so that's the story. I'm sticking to it.
That's funny. Do you know what the name is going to be for baby girl, or have they not disclosed it?
I do know the name. I'm not allowed to say it.
Okay, that's fine. That's fair. I do not go against mom's
It's like
wishes.
Beetlejuice. Like, if you say the baby's name, horrific things will happen in the universe. It'll be pandemonium. Can't do it.
I'm guessing it's not going to be a Batista type name.
It is definitely.
I'm guessing
a Batista type.
It's definitely not a Nicholas, a Vinny, a Tony.
It's in the realm
Gina.
of Kristen.
Yeah.
Yeah. It's not. Yeah. It's beautiful, is what it is. It's beautiful.
Yes, I'm sure.
She's going to be a tiny little Christmas princess. I love that.
Actually, she's real big right now. I think they say she's over 7 pounds. I mean, I know that 7 pounds is normal, but they're like, she's got to come out because they gain weight pretty quickly in this last, Well,
the two of them are like modern day giants. I mean,
yes, they are.
Tristan's like 99th percentile. We're calling Alabama for early.
Yeah, he's actually filling in for Vinny in hockey now.
He's going to play with Vinny.
Vinny was so funny last night. First of all, we had a hockey game that went. We didn't go to bed till 11:45. Okay, the game started at 9:00, and we went into overtime. And they just did a shootout, and we went to like 8 kids. And we finally won the shootout, which was nice to win. It's such a late night and everything.
It's like at least you won.
Yeah, it was nice. It was nice to win, but it was a late night. But he took a shower, and he goes, "I think I have to see endocrinologist. Is that would that be a adolescent doctor? Somebody?
If he's worried that he has diabetes."
Oh no, he says he has hair on his stomach, and that means he's done growing, and he's not tall enough for his liking.
No, that could be an endocrinologist. It could be too. Yeah.
Yeah. Just get him some HGH or something. Can't you? They have stuff like that now. I mean, or you get him the
peptides. He wants peptides.
Yeah, or the leg extenders. You can send him to Turkey. You get him like they give you like 1 or 2 inches on each leg, and he could be like a daddy long.
All 3 legs or just the 2? Do they?
All 3.
I don't want to. Nope. Nope.
Nice. No, I told him I was a late bloomer. I said your brother Nick was an early bloomer. He was like 5th grade.
Do you have a 5 o'clock shadow in 5th grade?
I did. I think I was the first. I was shaving in like 8th grade.
Yeah, his back. He was shaving his back in 8th grade.
Yeah, I was early. Yeah.
Too funny.
That is why I don't know what this morning segment has been, but get into it.
I told you I went to bed at 11:45. I'm a little and the wife forgot to put water in the coffee machine, so
why didn't Tony bring water for Tony?
Hey, we all have our roles. I mean, I should be on my 3rd cup of coffee right now. This is my first. This is that's all. Don't take advantage of me, you two.
Nikki, what did you get up to last night?
I watched that horrific football game, which I
saw that. I saw the ending of it, the field goal for the win.
Wait, who played?
It was Tampa Bay, Atlanta.
Oh.
And
I should say with those 2 teams.
I cared because I had Tampa Bay -4.5. They were up 28-14 going into the 4th quarter. I was like, okay, we got this. No big deal. And then they just blew the entire lead. It was really, really
and lost the game, right?
And lost the game. Yeah. It was horrible. It was horrible. So the pick'em pool is getting tighter here. I'm squandering the win that has been in my hands all year.
That you counted on already.
Mm-hmm.
What is your insight? We're getting a Shedeur Sanders debut in a very frigid Soldier Field. Bears, Browns, Beats. Who do you got?
I would like to say Bears because the Bears need to win to stay up in the playoff picture. So, yeah, I'm going to go Bears, obviously.
Yeah.
What's the line?
I think it's like 6.5 or 7. It's a lot of points.
The Bears are favorite?
Bears are favorite. Yeah. And it's going to be like -20 degrees.
It sure is.
Wind chill. That's wind chill. That's wind chill. We went through.
It doesn't count. Doesn't count, right?
So are you going to be in the stands bat nips out? As if it's the wind chill and it doesn't matter.
No, I exhibition games are the only football games in Chicago that I'll go to.
But you could be the exhibitionist.
No. I don't like the cold. I'm a heat guy. I'll run around naked in the heat, but I'm not putting a big C on my chest and being part of the Chicago Bears. I'm not doing that.
A long time ago, maybe 10 years ago or so, I went to a Bears game with my dad because a fraternity brother of his was able to get us tickets. And we went to a game in December. My nacho cheese froze.
Oh. I mean, the first mistake is getting the nacho cheese. I
love nacho cheese.
Oh, that's the worst one with those tortilla chips that are like stale and gross.
Nom.
Yeah.
Well, it was fine. I couldn't eat it anyway. It was frozen.
Yeah.
Donk. Anyway. Hey, we got a great show for you today. A lot of good content headed your way. We made it through the week. Hopefully you guys will be okay to get some of your holiday shopping done over the weekend. You are running out of time. Or maybe just order stuff. Make sure you're getting stuff by the shipping deadlines. But on today's show, we're going to deliver for you. No? Okay.
Yes,
At the top of the
there
8
you
o'clock
go.
hour, the week in stocks. Jamal, he didn't even title it. Normally he has like a funny title, but it just says the week in stocks. A little disappointed, Jamal. Not gonna lie.
We all are.
No, but things to recap. Obviously, some big earnings like Oracle and Broadcom. We'll talk about that today. We had the Fed come out, and Jamal's got a lot to recap, so that's going to be at 8 o'clock. Then we have Fast Market at 8:40s, where viewers write in with their trade ideas, and the bats do trades. Nikki, how did Johnny trades go yesterday?
They went good. We have a Lulu put spread, which should look good. That was from the first Johnny trades that we did.
Lulu had earnings. It's up $18, so direction right there.
Yeah. And we got on we did a bullish, a bearish, and a neutral trade. So we got one of every flavor, like Ben and Jerry's. It was perfect.
Yep.
Okay.
Yeah.
Well, we will see what our fans have cooked up for today. Then at 9 o'clock, we have a market measures wrapping up the past 5 days of the trading email series part 1.
A little bit of a long title, but really we're just wrapping up the last 5 days of content and giving you a little summary.
And finally, at around 9:20, I want to do this, singing it in the style of Chicago. It's like, who's that girl that they all want to see? Marty. Because Marty from the trade desk. No musical theater fans.
Quentin's back.
Roxy, like Roxy Hart. Anyway.
I think Quentin's back for this one. Marty, he's done his stay in the limelight has finished. His watch is.
You can never dim a star as bright as Marty.
He's used to this. He's done his time.
He's done his time. There you go.
Whatever. He's not new to this. He's true to this. Well, then that's fine. Well, you will have Quentin in the house then, recapping the top trending tickers over at Tasty Trade. And that is our run of show for today. Do you guys want your daily dose?
Sure.
Hit me with my theme music. Let's go.
Our leading story. Breaking news.
Across
the wire. Leading story. Top story. Just in.
Today's headlines.
This just in.
Breaking news.
All right, everybody. Today is a fantastic Friday. It's December the 12th. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Are you ready for the news?
Ready for the news.
Oh. Hey, let me see. Getting to the first headline of the day, the Dow and the S&P 500 ended at record highs because investors feel good about the economy. I wouldn't go that far, but okay. Beyond the AI boom, I should say. So the Dow led higher by stocks like Visa, S&P, both scored a record finish. We're not going to talk about the NASDAQ, but what are you taking away from how we are finishing to finish the year?
I mean, we're at all-time highs. We made all-time highs. I mean, seems like smooth sailing, climbing any wall of worry that might be there. And today's market looks a lot like yesterday's, with even the S&Ps and NASDAQ lower and the Russell and the Dow higher.
Yeah, it'll be interesting to see if this keeps up. I was having this convo with Vecchio. It doesn't give you good feelings when it's the Dow and the Russell as the strongest of the group. I mean, I know it's a rotation, but
I mean, I agree with you. I always say that too. The NASDAQ the NASDAQ and the S&P are the leaders in the clubhouse, should be the leaders in the clubhouse for a strong breath to the overall market. But they're just, to quote Vanetta, just a nipple out away from all-time highs. So, it's not like they're down 10% for the year. I mean, they're just one day and, you'll have...
and you're back. Yeah.
Visa was up 6%, Nike up almost 3%, and Goldman Sachs up around 2.5%. So just interesting what the standouts were in the Dow. Coupling, though, with that, is the small caps, the January effect. I didn't even know there was something called the January effect, but it's arrived early. Small caps are roaring past the Dow and S&P 500. This is normally the most bullish time of year for stocks, but normally the second phase, the January effect, where all the small caps that had been dumped in December rebounded in January. Well, we're getting it early this year. What are you doing in the Russell?
I don't really. I guess I have a little bit of short Russell via the micros, but I don't really have much in the Russell. Most of my trading is in Nasdaq type stocks, so I don't have a ton there. We did buy the dip on J.P. Morgan, which isn't Russell, but it is a banking stock, and banking stocks are a big part of the Russell there. So the XLF, if you look at XLF, it's the banking sector ETF or financial sector, really. It is breaking out to new highs. So
What about KRE?
KRE as well, same kind of thing. Banking stocks, very, very strong.
Yeah, XLF, which you just mentioned a moment ago, probably had its two best days of the year, the last 48 hours, pretty close to it.
Yeah.
And KRE doing the same. I mean, they almost look identical in the charts.
Wow.
Yep.
Hey, this is crazy. China's IPO mania gives investors just 0.02% at owning a stock. This is crazy. Investors who successfully secured 500 shares of the AI chipmaker More Threads technology at its IPO last week in China would have realized a profit of 500% on the first day. But retail investors, you had a chance of 1 in 2,750. Chinese regulators have been steering IPOs towards strategic industries, but there's not a lot of opportunities for retail investors, meaning that, you have maybe a 1 in 3,000 chance of getting a hot IPO in the Chinese market. I just thought it was interesting.
Okay.
Yeah, it's kind of messed up.
Yeah, I know. I mean, China's going to China. Please don't kill me.
I'm sure it was a really fair random drawing of who got those shares as well. Yeah, that's
No problems at all.
I can tell you ours in the U.S. is probably 0.04. I mean, it's going to be double, but not much better. It seems to be an inside club.
Yeah. But the Chinese market's seeing record levels of oversubscription by retail investors. So good job, China, I guess.
Yeah.
Hey, this is interesting. The House has passed the Invest Act, and it wants to ease investment standards and boost capital in markets. As you know, basically, it's very hard to be what is called an accredited investor, and that's basically only determined by wealth or income. But under this new act, investors could become accredited by taking an exam approved by the SEC.
Wow.
I thought that sounded great.
Yeah.
Like new ways for people to lose their money. No, I think this is great.
Never happy. Yeah, I agree with you. Seems like it's happy. I mean, listen, I get why they want you to be an accredited investor, but yeah, I get it. Why not?
why? Why do you get it? It makes no sense. Anywhere else you go in the world.
Well, you want to make sure that people have the financial cushion to take these lofty, maybe bets on companies or something like that.
Which I agree with Nick. I didn't finish my thought. Is BS. Like it's almost like the patent day trading rule. Like I understand why they did it. Again, a lot like some of this administration's ideas. There's good ideas, bad application of doing them, bad way of going about it. Same thing here. Patent day trading rule was there to protect the individual investor in times of turmoil. It handcuffed them, and it's one of the worst rules that they've ever come up with. Accredited investor, they want somebody who has, means to be able to do this. You don't have to protect me. As an individual investor, I could do my own thing. It's okay. You don't protect me anywhere else. Let me do my own thing where I can invest. So I agree with both of you that I think this is an awesome idea.
The bill would also lift the cap for how much venture capital firms can raise and how many people can invest before they're subject to stricter disclosure and compliance regulations. The bill increases the number of investors to 500 from 250 and increases funds to 50 million from 10 million. So.
All right, beautiful.
Putting that out there. Hey, copper hits fresh all-time high because I can't talk about something that rhymes with ilver. But copper is hit fresh all-time highs after the Fed delivers a rate cut. Copper advanced as much as 3% to 11,906 a ton in London. I know I saw some people online being like, can you buy copper in America and hedge it with London copper? And I was like, y'all are doing too much. What are you doing in copper, if anything?
I've got a little bit of long delta here, so Vecchio put me in some long metals, which I have enough short silver, as you said, that we don't like to speak about it. What silver did look like it was going to give it up last night. If you were watching, it was down
trade under 60, traded down to 63 and change.
Yeah, it looked like it was going to be finally my savings grace, but not too much today. Gold having a strong session, which is helping a little bit. I'm long a little bit of copper via a out of the money call spread, and then I've got some FCX long delta, which is one of the bigger copper names.
Yeah, HG is not a future that I want to F with. So I would
shot trade. It's small.
Yeah.
No big deal.
Okay. Anything going on in gold
gold, like Nick said, gold's having a big day. I mean, gold right now is up 1.5%. I'll round up and say silver's up 0.5%, but that ratio is still quite low if you're long 2 gold and short 1 silver. It's working overnight tonight, but has not worked for.
Today's the day, Dad. We're getting it. Today's the day. We're gonna have gold up 100, silver will be down like $1 or $2. We're getting it today.
Manifest it.
I can feel it. I'm manifesting it.
That's what you got to do. That's right.
Yeah.
Good job.
Do Kwon, the South Korean cryptocurrency entrepreneur behind 2 digital currencies that lost an estimated $40 billion in 2022, was sentenced yesterday to 15 years in prison for what a judge called an epic fraud. I guess Do Kwon is going to do time. Nope, sorry. The fraud was on an epic generational scale. In the history of federal prosecutions, there were few frauds that have caused as much harm as you have, Mr. Kwon, said the judge. Lots of people lost their life savings. He founded the Singapore-based Terraform Labs and developed the Terra USD and Luna currencies, which were then plundered to the tune of $40 billion.
I remember that one. That was a wild time.
I don't know how I feel about this. I mean, I think 15 minutes in jail is a long time, but I don't think 15 years suits the crime. I think it should be a lot more. I mean,
life.
Yeah, I agree. I mean, I don't know if you want to deter. I mean, like, here, $40 billion crypto scheme, right? Let's say he was able to skim off $2 billion. Would you do 15 years for $2 billion?
I don't know what he skimmed, but that 40 billion was like retail losses.
Yeah. I know, but I'm just saying at some point he's going to put his hand in the till if he's a thief.
Oh, for sure.
So let's just assume that. Yeah. I mean, I don't know. It's not enough. I shouldn't see daylight in my eyes.
Yeah. So there's a lot. You can read more about the story, but at least he's doing some time. So we'll see what happens. Hey, getting to earnings from last night, Broadcom beats on earnings and revenue and says that AI chip sales will double in the current quarter. And it still wasn't enough for what I don't understand. Like, read this headline: beats on earnings and revenue and says sales will double. Market was like, hate it. down 35.
Yeah, I think people get caught up in that headline and think that it means something. I mean, the market, the stock is up 200% in a year or two. Like it's had.
But you give them numbers, they beat those numbers. Their forecast is good. What more do you want?
Well, let me put it in perspective for you. It's back where it was December 1st.
Yeah,
April 12th. Now, I mean, this is what we kind of talk about, or Nick's really talked about it more than I have, how a lot of if this news would have come out a year ago, the stock would be up $40. And the stock is, to this point, has rallied, 300 points, 250 points in the last year. You're setting yourself up when the stocks move that quickly, that fast, where you have to come out with numbers like this and say that kind of guidance just to keep the lofty valuation that you have.
Yeah, it's already like the value of this headline is already in the stock, or at least that's what it seems like markets are saying. Given the move today, the stock down a little bit. It's not down a huge amount. It's like,
and the day's not over. I mean,
yeah, it's not over. It could be back at 400 by the time we open the market.
Look at yesterday. A lot of these high flying stocks were really getting hurt yesterday, even though the market was basically unchanged, not really down that much, and rallied all the way back. So who knows?
Bonkers.
Yep.
Sorry, I lost my place. Talk amongst yourselves. Costco topped Wall Street sales and revenue expectations. Sales rose 8.2%, and digital sales jumped 20% compared with the year ago quarter. The Warehouse Club did not share a full year outlook, but the company did bring in revenue $67.31 billion versus $67.14 expected. I'm in there a little bit responsible. You're welcome, Costco. What'd you do in Costco, if anything?
We've got some long delta. It's basically unchanged here at 881. We have the 850, 825 put spread that should work out nicely. We also had a call diagonal spread where we legged out of the short call. That one probably won't be great on the open, but leaning long, so it should be all right.
Costco hasn't had an uptick in what seems like since the summertime, right? When it was trading over 1,000.
We still didn't get our split. What the hell?
Yeah.
Come on.
I think the split's gonna have to wait till next quarter. But
the hot dog is still $1.50, and more importantly, they switched from Pepsi to Coke in the food court, so your girl can get a crisp Diet Coke as she's shopping for her Korean beauty products. Okay?
Hell yeah. It really is amazing.
Oh, it's a cat. This show is greatly improved by there being a cat.
I feel about this. Mommy cat's coming home tonight. So
whatever, you're a cat daddy. You love it.
I'll know that.
I'm gonna abstain and wait for you to leave the show to tell you about my cat story.
No.
I know that'll be the indicator for me that I have to start looking for homes. The dogs are kind of on their way out, but I could see him having a litter of kittens, like that kind of thing. Like you find one around the block or something, and somebody posts.
I have a litter of kittens. There's going to be a pole involved and loud music. Okay.
I could have a litter of kittens to your house by 3 p.m.
I do not want that. No.
Hey, is this the top of all tops? Investors fear that Time Magazine just jinxed the AI market rally by naming AI as its 2025 Person of the Year. Whole lot of discourse going around about this cover in that iconic photo, if you remember, of the building of the skyscrapers, with the iron and steel workers from back in the day. But then they just put Mark Zuckerberg and Elon Musk and then like Jensen Hong, and people are like, this isn't giving. Oh my God. I just want to give her kitty cuddles. What are your thoughts, one, on AI being Person of the Year? And if it's really dedicated to the workers, these are just the CEOs. Anyway.
Yeah, this doesn't leave a good taste in my mouth. I mean, give a person his cover.
It is pretty creative though, to make the, that iconic picture an AI generated picture. That's a pretty good one.
Right, and then put an artist out of work. Yeah, pretty innovative.
Yeah.
So the future today. That's what they're doing.
Well, we will see if it's the top or not. So that's
this was number one on the prediction markets though. So
I saw some guy had bet that Mark Zuckerberg would be in there somehow, and he ended up cashing out because he's not wrong. So
yeah.
I don't know. Whatever. I'm sorry. It just fell off after Taylor Swift won it. So I'm just going to leave it.
Of course.
Oracle's lease commitments jumped by almost 150% as the company builds out to meet AI demand. Oracle is simultaneously planning heavier CapEx and signing up for leases to meet demand for cloud infrastructure. Post earnings, just a big old swing and a miss. But Bat found some post earnings opportunity, put on a trade for his options trade today. What are you doing in Oracle?
Yeah, Oracle, well, I mean, it didn't catch a bid, but it did catch a bid after it came out on its lows for earnings. And luckily, option trade today comes out around 10 o'clock in the morning Central Standard Time, and we were near the lows, got a little bit of long delta in Oracle with a Jade Lizard. I'm almost a $2 profit on it. I'm hopefully with Oracle. Yeah, Oracle unchanged this morning. Maybe if volatility contracts, because the Ivy rank's still 49. It's still up there in volatility. That contracts. Maybe we'll have a quick little ding here. 24-hour, 48-hour Jade Lizard $2 profit. We'll see.
That'd be great.
Yeah. Markets are a little wide in there, so it could have just been a good mark too. So we don't know. I'm about it's about $1.40 winner right now.
Disney is making $1 billion investment in OpenAI, and for the first time, it will license its characters to OpenAI's Sora AI video generator. The company said Sora and ChatGPT image users will be able to use it to make AI content with Disney's copyrighted characters. So get ready to see all the ways Mickey's gonna violate Minnie. I don't know. I'm real concerned about this.
Yeah. Yep.
Real concerned. But Disney, House of Mouse, what are your thoughts?
I mean, what's the next step? So we've gone from, the NVIDIA, we'll call that like the top of the investment scheme. We've gone from NVIDIA, then you get to like the Walmarts, the shopping cart for Walmart. Now we got the Disney, characters. What do we go to next? Like, what's the next one? Is it like
we're getting erotic Chat GPT or Chat GPT adult. We're getting that in 2026.
Okay. Yeah, that could be the next one.
Could be.
Yeah. But I don't know. Disney 111 and change. I feel like it's been here for 3 years.
Yeah, Ivy rank of 7. Not very interesting unless you're you're going to be directional in Disney. And Disney's really just been going sideways. Pays a small dividend. I don't know. Seems like a place to go die.
I will say last night I did have to come up out my pocket and give Disney my money because I had to get another Disney Plus subscription because I didn't have one. Right. And because I want to watch all the Taylor Swift stuff. So I pay Disney money now. And I don't think I'm the only one who literally at the 11th hour last night was like, okay, fine.
It's like the last stocking stuffer you need. You spend a little bit more for it because you need volume. You don't have enough, right?
I know. And my parents have it weirdly, but I was like, Dad, just give me your password. He's like, I don't know no damn Disney Plus password.
I'm like, okay. He's trying to make you leave the womb is what he's doing. That's all he's doing. He knows.
Okay. Well, fine. Anyway. Hey, in other news, OpenAI is launching GPT 5.2 after a code red push to counter Google's Gemini 3. OpenAI launched the latest iteration of its model yesterday after Sam Altman had reportedly issued an internal code red. I wanted to look at Microsoft and Google.
Microsoft. Go ahead.
That's funny. Microsoft had a nice little bounce yesterday. Closed out some puts that we sold.
It's at the near end of its most recent range, not like the overall market or the Mag 7 that it is, right? I mean, like Google's near its highs over the last 2 weeks or so, just a skosh off of it. But Microsoft is not.
Apple has won
we have a Microsoft Google position, don't we?
We had it. No, I closed it yesterday. So we had the NVIDIA Google pairs trade. I closed it out for a small loss, but you had Google down like $7-8. It's a big move, and just figure you take the money and run there. I guess it probably hasn't even moved today, given that Google's basically unchanged, up $1, and then Nvidia's up like 80 cents, 90 cents.
Right.
Apple has won a partial reversal of sanctions in its Epic Games antitrust lawsuit. The Ninth Circuit Court of Appeals said in the lawsuit that was brought by the Fortnite maker Epic Games, basically Apple can now open up its fee store again to get commissions or fees tied to consumer purchases that don't take place on the Apple platform. So walking back some of the restrictions that had been placed on Apple, because of course Apple's going to Apple. But bravo for Epic Games, taking on a tech titan and taking it to the courts. But what are you doing in Apple?
The little giant, right? The little Goliath. Good for them. Yeah. Apple's trading at around 277 and change, down around 50 cents, basically unchanged.
Okay.
Yeah. Near high.
Go ahead, Nikki.
I was just saying it's one of the stocks that's near highs.
Yes.
With Google, it's kind of been one of the outperformers.
Tesla's U.S. sales dropped to nearly a 4-year low in November, despite the launch of cheaper versions. What are you doing in Tesla? And are you worried about maybe some alienation of affection from Musk now that he's doing this big SpaceX IPO push? Like, what about Tesla? Like, I thought he was supposed to be working to get his $1 trillion tranches and turning the company around, but all I hear is SpaceX.
He's already partnered with the aliens, so he has inside information.
Yeah, but Tesla's sales are cratering globally, so fix it.
Let's give the man a little credit here. I mean, how many car companies have been started and become probably the number one car company in the world, close to it, competing with everybody else? I mean,
is he writing you checks as well?
Getting rockets everywhere. I mean, let's give.
But I'm saying, but you agree? There's only so many hours in a day. Like, I'm just saying, it's hard to be so devoted and focused and doing everything for all companies.
And that's why a great founder or manager or CEO puts people in place. So there could be 150 of them instead of just one. It's the reason why I had to work for Tom Sosnoff 15 years ago and not be Tom Sosnoff, because Tom Sosnoff diversified with hundreds of other people to make money for him. His funnel got so much bigger than my funnel that was just singular.
What is Tesla stock doing?
447 is where it closed. It looks like right where it's going to open. It's been sideways at the top end of its most recent range, which is near the high.
Yeah, near the highs. 450. It's been chopping around here.
Yep.
In an interesting move, Rivian yesterday unveiled their first custom computer chip for self-driving, meaning the company is shifting away from using NVIDIA's processors, and they will also have a new paid driver assistance package called Autonomy Plus with prices far below that of rival Tesla. You could get it for around maybe $2,500, but that did not stop Rivian shares from dropping 8%.
Yeah, down to about 1640, which, I mean, listen, if you remember, Rivian was hanging out around that 1012 number forever. So Rivian caught a little bit of a bid here at the end of the year. So good job on Rivian, I guess. I mean, it did start the year, like I said, around $13 or so. It's $16 right now. I don't know. We'll see what happens. There's no trade here in my eyes. Good IV rank of 39, but when you look at the option chain, even in January with 35 days to go, the at the money straddle is $2.50. What are you going to do there? I think you have to be directional.
We've traded this a couple times. It's one that's got
sell puts or something like that on a down move, right? Yeah.
Maybe we look at that this morning.
Yeah. I forgot to make a slide for this, but Lululemon shares continue to surge higher after CEO Calvin McDonald announced he is leaving the athleisure retailer at the end of January. The departure comes after the retailer's largest shareholder and founder, Chip Wilson, called for changes at the company following more than a year of underperformance. Lulu up, I think, around $20 pre-market.
Yeah, you are right. Rounding up around $20, 206, closed around one. Well, maybe call it 207. I'll give you the $20 for the win right there. Lulu, has been going absolutely nowhere in the doldrums for forever. Finally catch itself a little bit of a bid. Remember, it started the year closer to 400.
Yeah.
So if you like Lulu or you were waiting for the good earnings or something, you still got plenty of room to run if you think it's going to be the stock that it once was.
Yeah, it's similar to kind of the move that Adobe had, where it was kind of left for dead. Lulu was another one where it was left for dead. It was kind of like, there's so much more competition now, and it's not as sexy of a brand. And you kind of reach a point where it has to be a little bit cheap. So you kind of found that here. So.
Did you put on a Lulu trade this week, Nikki?
I did. I've been scalping puts in this account, and then in the Johnny Trader account, I have a short put spread. So it should be net a very good week for my Lulu trades.
Nice.
Yeah.
I buy my fake Lulus at Costco.
That's okay. That's okay.
I know it is. I'm not mad at it.
You're a Costco stan. I mean, the Costco stands are probably the highest revenue advertisers they have.
I am ride or die for Costco. Let's go.
Yeah, they pay you nothing, and you will go to the end of the earth for them. It's amazing.
I love it.
Great links. Yes.
Hey, first of all, are the men okay? Because college football is reaching new, like Real Housewives level of drama. But to take maybe some heat out of the University of Michigan situation, not even getting into that, but I am obsessed. Cannot wait for the Netflix documentary. But Notre Dame now catching some smoke because Notre Dame, I guess, had a secret pact with the college football playoff to get like favorable treatment, and then everybody found out. So now no one wants to play Notre Dame next year. Girl, why are college football so messy?
I don't know, but it couldn't happen to a better organization as far as
Right? I'm not a fan. But Notre Dame's has a memorandum of understanding that grants the Irish preferential playoff access starting in 2026. Athletic directors in other leagues are threatening to freeze Notre Dame out of future schedules. Oh.
Yeah, it's an interesting spot. Like the pendulum has kind of swung to the ends of both ends here. I mean, you had probably a not right situation where these kids were, making the universities huge sums of money and getting basically none of it or getting some of it underneath the table. And now you have everything, NIL now, and nobody really cares. And it's kind of lost the competitiveness or at least the pride aspect. So you're kind of, I imagine the pendulum will swing kind of into the middle in the next run here.
But there's also been massive conference consolidation, and Notre Dame won't play those games. Like they gotta. I think they should be in a conference, but that's just me.
Yeah.
I agree. I always hated college football, the way they do their rankings and everything else like that. It was so ambiguous, but
they're trying to make it better. They introduced the playoff system, but having,
I love the playoff system. I think it's great.
Yeah, but having backdoor clauses for certain schools, that's shady.
Let's be fair here. Let's try to just. How about this? We let the field of play dictate where you
go.
Right? I mean,
settle it on the field.
Yeah.
We'll see what happens. Well, fans of FIFA, fans of soccer have accused FIFA of a monumental betrayal after the latest ticket prices for the World Cup began circulating online yesterday. The governing body allocates around 8% of tickets to national associations for games involving their team to sell to their most loyal fans. If you remember in the push for next year's FIFA, they said, you're going to be able to take your family to the game. We're going to have $60 tickets, an analysis of the tickets and prices and seats available. Just one list published by the German Soccer Federation revealed prices ranging from $180 to $700 for group stage games in the corners of the stadium. And the lowest price for the final is $4,200. The highest is $8,000. So people are just really mad. I would encourage them to attend my seminar So this is the first time a man has lied to you. I have a lot of tips and tricks to help people get over, because sometimes this is people's first time. Like they don't know.
Do we have a tell? Do men have tells? Like, is there like, do we touch our hair or nose? Is there anything?
You have to sign up for my course, but it does suck. Real talk.
I will say, in similar news, and I don't know how I feel about this, but it was announced the other day that Twisted Spoke, a very classic West Loop institution, which closed, is now going to be a hockey bar or a soccer bar.
Wow.
So they're going to have international soccer games there. I don't know if I love that.
Yeah.
I want my Bloody Mary and wings and football.
Yeah.
Yeah, I guess
that's crazy. $800 for a game, that's wild. But you do you. Hey, finally today, because it's Friday. Every Friday, I like to scour the internet for a trader taste test. And Nikki, this one is specifically for you. It's going to be frigid this weekend. I know you love some Trader Joe's. So I like these hacks I see online where you get all of the ingredients for one thing at Trader Joe's. And this looks like a really good sandwich to make and just watch some football. Check this out.
I had a viral Trader Joe's sandwich the other day, but I saw this girl named Trin make a different sandwich. She also utilized this focaccia bread. $4.99 for this. But this time we're gonna cut it open all the way around. Open it up. 400 for 12 minutes. Basil pesto sauce. Nice and crunchy. Italian bamba. Bruschetta sauce. Prosciutto. Salami in there. I'm not sure how to pronounce this, but I think it's capicolo. Burrata. Super wet. Comes with 2 big balls. Oh, spread that around. Balsamic glaze. Salt and some arugula. For some color. Now we cut it up. Trader Joe's sandwich. I guess this is Trin's way. She's the only person I saw make this. That looks pretty freaking insane. Got all those cured meats in there. This focaccia bread does taste better since I sliced it open before. I've always loved the density in focaccia bread. Could use some spice. Melinda's garlic habanero. Wow, yeah. This is actually pretty freaking spicy. There's 4 pepper signs. I'm gonna put some more. One of the first videos I ever made on social media, ever, was mimicking, Sebastian's focaccia bread sandwich. It tasted just like this. 8-9. I made that viral.
There you go.
It looks great.
Are you hitting on me, Vanilla? This is so right up my alley. That.
I said it was for Nikki.
Yeah, no, it looks great, but you have to be realistic about this. At the end of the day, it's about a $47 sandwich. Because you got to buy all the stuff because you don't have any of that stuff. Yeah, but
once you buy it, then you have it for more sandwiches in the future. You just have to buy the bread.
You have it into perpetuity.
It's cost effective if you eat it 3 or 4 or 5 times within a 2-week period. Before all some of the stuff expires. If you can get it off before then you're perfect. If not, if you do it once and then forget about it, it's $47 and you're better off just going to Bari.
JP Graziano's girl, but I get it.
JP, either one.
Bat, what's coming up next?
We're going to take a quick 90-second break and come back. We're going to talk about the market, and we've got confirm and send your viewer emails immediately following these messages. Back in 90 seconds with Tasty Live.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
tastytrade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number 1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st. Only at Tasty Trade.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Nikki, we are back, my son, and you know what that means. Time for a little bit more Tasty Live with Confirm and Send. But before we do, let's take a quick look at the market. E-mini S&Ps basically unchanged, down 75 cents here. Fairly tight range of 25 handles last night. If you look at the trade page and go to the right-hand side, you'll notice that the expected move is around $25 for all day. So we should have an inside move, but you know that's subject to change. Just look at yesterday. Same thing had happened. Volatility expanded right after the opening. I think we're going to get a little bit of that too today, going into Friday and the weekend. NASDAQ down 100 or so. Russell up around $1. Dow up 115. So you got the Dow up about a quarter percentage point. You got the NASDAQ down, let's round and say about a third of a percentage point. NASDAQ trying to bring us lower. Dow trying to bring us higher again, trying to make a new all-time high as it did yesterday. Volatility basically unchanged at 1845, but you can see the last 2 weeks, huge run up in the market, huge move lower in volatility. Volatility 1845. Bonds down 28. Man, we got out of our bonds just in time. Flirted with 16 and a half. They're now 14 2/3, down almost a full point, 29 ticks, 32 ticks in 1 point of a bond. That's a big 3/4 point move lower in the bonds after the rate cut. We rallied and then sold off now. Bitcoin up 500 and change, traded down to just under 92 to just at 93. We're sitting at 92 and a half, call it mid-range. Ethereum doing the same on a percentage basis too, up $19. Oil basically unchanged, but on or near its recent lows, down 7 cents. Gold up $62, traded, flirted with 4,400. It's 43.75 right now, up around 1.5%. And look at silver, can't get out of its own way, basically unchanged here, Nick, at 64.60. It did trade down to 63.12. Looked like it was going to crack 63. Looked like it was going to give you some reprieve and get back into the lower 60 handle, 61, 62 area. But no, 64, 65, back near its highs. Nat gas down.
Today's the day, Dad. Today's the day. The gold silver pair. Today's the day.
Come in.
I think you know all the peeps gonna wake up. They're gonna be like, oh, it's gold's turn now. Gold's gonna go parabolic. You got to get out of the silver trade. I'm definitely not talking my book here, but I think it's the day.
You're not talking your book?
I'm joking. I am talking my book, but I think there's going to be a catch up here. I think people are looking at that gold silver ratio. And I think that's just, thinking gold has got some catch up to do. So
I
think we're going to get it today.
Remember, you're supposed to be, if you do it the way we normally do it, not the way you butcher it, but if you do it the way we normally do it, you'd be long 2 gold, short 1 silver. You'd be up 3% on that pair right now.
And that's a big number.
Yeah, basically catching up. So stay with the ratios. Don't let genius fail.
Yeah, not really catching up. I mean,
3% more today than it was yesterday. You probably have another 3% to go.
Oh yeah, I mean the gold silver ratio is still below 70, so
Yes.
I mean, we're bouncing a little bit, but it's not.
Got down to 67 or so, didn't it?
Yeah, it's 67.32 right now.
Yeah.
But yeah, I think today's going to be nothing. I don't think you get any big moves today. Equities.
Okay, very good. Well, we'll see. So far, it's setting up to be a snooze fest. We'll see if that happens. Yes. Let's get to confirm and send, where we have viewer email. Sound good to you?
Cool.
Friday, December 12th. I mean, Christmas is around the corner. Less than 2 weeks to Christmas Eve.
Crazy. Time flies.
Time flies when you're having fun. First question, please. Do you do any sort of tax harvesting before the end of a typical trading year?
I mean, not really. In the account we're trading here, it's not like we're holding any long-term bags here. So there's, most of our positions are closed and rolled, and that's kind of done with. But I mean, there's certainly a place for it if you are a stock trader or you do longer dated options, sure, but it's not something that we do it naturally just because we're trading on a 30 to 40 day time frame. It's not like we're holding a ton of stuff for long durations here.
Yeah, tax harvesting, or I think it's better. I think it was originally like tax loss harvesting.
Yeah,
is what it really should be called. People say it's an investment strategy. I don't see it as an investment strategy at all. But basically, what it is like you're selling securities, like you said, mostly stock. This is like old school, old time stock trader talk. You're selling the securities or the stocks that you have at a loss to offset capital gains that you'll have in other products because you realize the gain or realize the tax loss, realize the loss to help with your taxes. I mean, for us, this is not, to answer the question, this is not something we typically do. We don't really have stock positions to take advantage of this. And like Nick said, we're really churning every 45 days, or if it works out, really every 3 weeks, right? I mean, hopefully the strategy we put on from our research work within a 3-week time frame. So this becomes a non-event for us.
Yeah.
Next question, please.
I have a bullish opinion on an underlying over the next several years. I don't know if I'll be right in the next 6, 12, or 24 months, but I feel confident that in the long term, the stock will go higher. Would you use a very far out in time leap for something like this? And if so, how?
I'm trying to be nice here. Nobody knows when the stock is going to go higher or lower, whether it be 6 months, 6 minutes, or 6 days.
Mm-hmm.
I would caution you on this long time frame that you have, that you probably are going to want to, and again, using stock is the least capital effective. So I'm going to go to the option side. Most people, I think, would say you buy the stock at some percentage that you can afford to hold on to for your 24-month time frame or more and just sit with it. I would rather see you buy a long-term leap, couple of strikes in the money, maybe one at the money, and sell something farther out of the money in a 45-day or 60-day time frame if you want to look at it less and benefit from that reduction by selling some premium on it and have that delta. I would look to have long delta of plus 50 or more on the strategy that I was doing.
Yeah, I mean,
I'm not waiting 6 months to do it, right? Because I don't know.
Of course.
Right.
Yeah, I mean, it depends on For me, I like to trade a lot of out of the money leap options on stuff that I'm bullish on. And it's a shot trade. And you want that positive gamma. And especially if your time horizon for life and investing is a long period of time, you can afford to take those risks. Yeah. And it gives you a high, you have an asymmetric risk profile, especially if you're directionally correct and you have this opinion. So yeah, I think using options for longer duration ideas on your own is a good thing to incorporate in your trading. I mean, it's very hard to look at Nvidia and buy 10 shares of stock for $2,000. If I buy a out of the money leap option, I lose that $2,000. It stinks, but it's not going to ruin my life. But that $2,000 turns to 10 if you're right, as opposed to the stock where it goes from 2 to 2,500. And that I think is what
the option provides leverage, right? And then the strategy
you get leverage. You have some gamma. But you have to be right on your conviction. And I agree with what my dad is saying. Is you should structure it so that you can sell something against it. Buying a at the money call and selling 40-day calls against it allows you a little bit of that buffer to not have to be so right off the bat.
So directionally correct. That's right.
Yes.
Yep.
Yes.
Good on you.
Yeah.
Do you still take strangles inverted when they have gone against you? First, tell everybody what an inverted strangle is.
Sure. So when you start with a strangle, you start with 20 delta on either side, 16 delta, 30 delta, whatever your preferences. We're somewhere in that range, the 16 to 30 delta for the short option. At some point in time, if the stock moves in a big way in either direction, as you're rolling the option, the untested side to reduce your overall delta exposure, you're going to get to a point where you're either at a straddle or where the put and the call are inverted to each other, where the put is at a higher strike relative to where the call is. That is an inverted strangle. And really you get there because a stock has an outsized move and you're continuing to reduce delta and exposure, directional exposure in that stock. And you have to get to that point, right? So if you continue to pick up 10 or 20 deltas and the stock keeps moving against you, at a certain point, you're going to have to go inverted. And so to the short answer to this question is yes, it's not something you plan for or anticipate or want to be doing, but at a certain point you kind of have to do it. And that's kind of the point that I was trying to make there.
You have to do it to reduce delta, which is, it's going to happen. Remember, markets do move against you at times. And sometimes, even though it's moving against you in direction, going in one direction too quickly, it still could be a profitable trade or a small scratch trade, a small loss, small profit, depending on how much time has gone by. Now, we at least I do, I would look at a strangle that was inverted at some point to take it back to a regular strangle, only because an inverted strangle uses more buying power. It'll use more buying power by how much the inversion is. If you're $5 inverted, it'll use $500 more per contract than a regular strangle at the same short strikes, not even changing the delta on the position. So I will look to take it into a regular strangle again or change the position in some way, but you must reduce delta. Delta is king on a trade for you or against you. So going inverted is something that we do for sure. Yes. Mm-hmm. Next question, please.
I sold puts and I'm up 50%. The IVR is high and I'm still bullish. If I want to keep long delta position, what are the pros and cons between rolling my put up, rolling out in time, or simply not closing and trying to make more?
Again, this all comes down to delta, so it's hard to answer this question with what I would do, but I'll give you some different scenarios. You sold a put and time goes by, the stock really hasn't moved, and now you're at a 50% profit and IV rank is high. I would probably move it to the back month. If the stock went higher in a very short period of time, a week or something like that, I would probably, if I'm still bullish and I still want the delta, roll intra-month. So it depends on, the time frame. Am I closer to 21 days or 45 days? If I'm closer to 21 days, I probably roll the back month. If I'm closer to, 45 days, I probably roll up to catch my delta just by doing a simple, sell a put spread. You're short put. You're going to buy that back, and you're going to sell a higher put. Maybe it's $5 higher or whatever the case may be. I don't know how high it is, but it really comes down to keeping your delta. So if you started out with a 30-ish delta put and you got to something like a 15-ish delta put, it's probably time to do something. Either just taking it off, rolling it to the back month if there's not enough time in the front month, or rolling it up closer to the money in the front month. What about you, Nick?
You can also change the strategy, right? So if you sell the put, you sell the put, you make your money, that's great, and you want to still lean long, you can close that put and roll to a closer at the money put spread further out in time. You can roll to an at the money call spread. You basically finance that at the money call spread with the profits that you made in the put spread and kind of double down, or at least try to double down on that position. You can go to a call diagonal spread. You say, you know what, maybe the stock kind of stays here or goes higher, but I don't want the downside risk anymore because the stock is rallied already. You do something like that. So you can change the strategy and still have the same directional assumption without having the same amount of downside risk into a stock that has moved higher. So that's another way you can kind of massage and change the position a little bit.
Totally agree. Good job out of you. Let's take a quick look at the market here before we get to Jamal and this week in stocks. Take a look at what's been happening this week. You basically have an unchanged market with the E-mini S&Ps down 3 and the NASDAQ down 100. On the other side, you've got the Dow up 100 and the Russell up 2. Very similar to what we looked like yesterday. Remember yesterday we sold off in the beginning of the day and then rallied for the rest of the day. Volatility basically unchanged at 1846, and bonds are one of your biggest movers, making new lows at 114.22. Crypto doing well this morning, hanging in to its 92 level, 92.5, and oil continues to go lower. Gold is up by about 60 some odd dollars, and silver is up by around 20 cents. Gold has a 1.5% move. Silver has about a third of a percentage move, both to the upside.
Do you have any interest in bonds here? I mean, we scalped out of the bond puts that we had on the shorter duration. Are you interested here at like the 114 handle, 113 handle, a little bit further out in time, maybe into January?
January, you're going to January with 42 days. Ivy rank really, really low here.
Yeah.
I would maybe a bond spread. I mean, I'm not looking to buy bonds, but maybe something like, you were in the 25 delta option. You were selling last time we sold bonds that had around a 20-ish delta option. It was around 37, 36, 37, 38. Now the bid is 33, 35. So if I
those had like 2 weeks, 3 weeks to go.
Right. Now you got 40 some odd days.
Yeah. So I hear you. All right.
I might abstain. We'll take a quick 90-second break and come back. We got more Tasty Live with This Week in Stocks and my man Jamal.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
tastytrade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now. exclusive to new Tasty Trade customers.
I love to take risks. I love the instant pain, the instant gain of trading. I would describe my trading style as a calculated risk taker. I like to play towards volatility, which is something that you can quantify high and low points of. My favorite strategy currently is the diagonal spread. I like the idea of having defined risk, but while also having a little bit of positive decay that works in your favor if you're not directionally correct. But the best part about it is the positive gamma that you get from it. I really like that the position can grow and get bigger as you're more correct on that position. So I think that the variable of trading on a day-to-day, hour-to-hour, minute-to-minute basis is really powerful and really fun to have access to.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st. Only at Tasty Trade.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Nicky, we are back, son. You know what that means. We've got my friend Jamal in here, and This Week in Stocks. How are you, Jamal?
Gentlemen, how are we doing? Tony, I don't know if you know, Nicky did double duty this week on Christmas pictures.
Oh, wait until the audience gets to see these Christmas pictures.
Yeah.
See, I will say, Jamal, there's a significantly different vibe from sitting on top of your dad, like a family member, and like getting real close, and then sitting on a coworker's lap. It's a little. I feel we've gotten really close. I feel like we're like family now, Jamal. It's really. It was really something.
Listen, we have known it. I've known you for 4.5, almost 5 years since I've been here. We've traveled together, all that. I don't feel like I've known you as much until yesterday. I mean, yesterday. The relationship went to a new level. There's no doubt about it.
There was a lot of very close touching, very close faces, bodies. It got very intimate. It was one of those things. It was probably an HR nightmare. I think I could use that. I think I could put that in my back pocket if anything ever goes wrong here, and I need to sue or something like that. I think I could probably use those pictures as evidence.
Listen, guys, I'm gonna after this statement, we're gonna talk about the week, but I'm just gonna tell you guys listening and watching the show, if you ever want to get close to somebody, do some Christmas pictures with them. That's the best way to do it.
Yes.
So this week was defined by 5 things essentially, right? Oracle's earnings, Broadcom's earnings, which we just had tonight, stocks down now. Silver touching 60 for the first time ever. I mean, I had to double check it just to remember because again, we know what happened in the 1980s. The last time silver was going ape was 2011. Both times, 1980s was like 30 and change. Of course, silver hit. 2011, silver hit 48 and change. 60, guys, and it's at 64.
We're so through 60. We're flirting with 65 last night.
Yeah, we're on our way to 70, as the good doctor would say.
Dr. Jim said, Dr. Jim said he thought he was trying to buy silver.
That's why I'm holding my short, Jamal. We got it. We got them right where we want them.
I think that's a good idea. Honestly, I thought once we touched 60, I was kind of looking at the idea of maybe we go another $3 to $5, depending on the fashion. I mean, honestly, we haven't had like a early, what was that, October gold move? Remember the move early October? We haven't seen that kind of, I know it's going, kind of little ape right now, but we haven't seen like this like $4 or $5 spike in one day yet. I feel it's been more like $2, if we see like, I don't know, we'll see. But that's, silver touching 60, Russell and the Dow at all-time highs. And then of course the Fed meeting, which was probably the catalyst for a lot of this. So those are the 5 things. What'd you do for earnings in Oracle? What'd you do for earnings in Broadcom? What's the deal?
AVGO should work out well for us. We sold a put spread against an at-the-money call spread that we had left over from an Iron Condor, but the call spread was meatier and closer at the money. It was a 20-point versus a 15-point on the downside, and it was right at the money. So this should be just about as good as it gets for us for that AVGO
You might
position.
make money on both sides of this trade.
Yeah, I think so. And the Oracle trade ended up, I scratched the puts we sold. My dad put on a Jade Lizard as well in there that, was good timing.
Post earnings trade.
Oh yeah, with your podcast, right?
Yeah. So I didn't have that earnings problem of it having a directional move outside the expected move. Ivy rank was real good in there, around 46 or so. Seems like it's hanging in there. So maybe still room for somebody else too to sell premium in there.
Yeah. So the interesting thing about both of these is that I feel like you could have traded them beforehand. You could also trade them after earnings, I feel like. And so like I traded Oracle beforehand, small calendar call spread, didn't really do anything. And actually my long was in Jan, so whatever. Big move to the downside we saw. But then, you were able to actually put on vol trades yesterday in Oracle as a result of the vol still being bid. And, I feel like AVGO could end up being the same thing.
Yeah, and you have to remember markets are a little bit wide in there too. So be selective with your pricing. If you're going to go in at mid price, go in a couple of points selling premium, go in a couple of points above mid price. If you're trying to sell, going below mid price, and then walk the order up really as you watch the stock move. If you have a little bit of short delta, then you don't have to be as aggressive if it's rallying, and if you have a little bit of long delta and it's going higher, you got to be a little bit more aggressive. So. Just be aggressive with your pricing. AVGO looks like it down around $20-ish, maybe a little bit more now, 22.
Silver, I have, what do I have in there? I have a Super Bowl, I think, in silver. I put that on earlier in the week for the idea that it was, when it touched 60, I'm like thinking it's going to go 65. Sure enough, this is kind of where we are right now. How much longer I hold, we'll see. I don't know what you guys got going on. Well, you just said
I'm choking. I have been praying to the gods today, and I think we're gonna get it today.
What's your vehicle?
I am talking my book, but I'm short the SIL.
Yeah, that's a good one.
Which have gotten big. Do you think they're small? They're big. And I'm long gold as well. So gold is hedging me a little bit, tiny bit.
Nice.
And I've scalped silver a little bit, so I'm just about at the pain threshold where I get into the fetal position and cry on the floor. I've got about $1 or $2 more until that is the spot that I'm at. Where you start to look at like second mortgages and whatnot.
Yeah.
But
it's reminiscent of the 210 spread from 2022.
Exactly. Where you're like, how could it go further? It can't possibly.
Right.
We're at an extreme, and then every day is a new extreme. But I think today with the move in gold, I think you can get a chase in gold and a little bit of a sell-off in silver. And if I get that, I'll be out. I'll run like a thief in the night. I will pat myself on the back and be done with this thing.
Nobody's more confident of silver turning around than Nick, while SLV, which is the silver ETF, is up another 80 cents.
Do you see my eyes? Deep down, I'm crying. Okay.
Yeah.
I'm crying inside.
And then, this Fed was probably the last biggest catalyst of the year. We ended up going to the upside. It was kind of quiet, right? For the previous 7 days or so, small ranges, and we finally got a breakout range after the Fed. So I don't know. We'll see what happens the rest of the year. What do you think? Is it a clear path to 7,000 now that the Fed's done, or what?
There seems that way.
I will give you this from my friend Brad, since he always talks about just expiration day, the pricing from Thursday to Friday is very bullish. So bullish sentiment going into the end of the year, to your point of view. Over the last 27 expirations, it's been down 11, up 16. The average down is around 16 points. The average up, although there's more of them, is actually a little bit less at $8 or so. So it seems like smooth sailing, but anything can change here. Bonds are going lower, so rates look a little bit higher. The market's been kind of hinging on and relying on this interest rate cut. We've had 3 in a row here. So we'll see. It's going to be an interesting market going into the end of the year. I love my SPX call. I think it's spot on.
What's that?
SPX 68 50-ish, right?
Yes, I think you're at 68.05 or something like that. I'll check.
Could be. I know there's a 5. I know there's a 5 in there. I'm about 50.
You're close. You're there. You're there.
Yeah.
And finally, are the Bears gonna do it this week? Are they gonna handle business, recover, or is Deion's son gonna come in and spoil the party?
They gotta recover. They need this win. Must win.
There's an important one. There's an important one. Got bear weather. Ready to go.
It is bear weather for sure.
It's also Cleveland weather too. So
it is.
They're used to this crap too.
Yeah, it is. Yeah, the dog pound. I got you.
Yeah, it is. It is. That's all I got, gentlemen.
All right, don't worry about it. We've got the opening bell coming here in the next 5.5 minutes or so. So even the S&P is down 4. That's about as low as I've seen them for this session, although they were about 13 handles lower last night. I mean, by the session, I mean since we've been on the show. We'll take a quick 90-second break and come back. We got more Tasty Live after this with the opening bell. Stay tuned.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
So I see you're taking an interest in open interest. Open interest, open trades. It's right there. Imagine all the trades are in XYZ at the same strike and expiration. Day 1, Brittany buys 4 options to open a trade. Dean also opens, but he only buys 2 options. And then, closing bell. Day 2, open interest is 6 because of yesterday's trades. Now, Jessica gets in on XYZ, and she buys 2 options. Day 3, since no one has closed any trades yet, open interest is at 8. Watch this. Brittany closes her trades, Dean closes his, and Jessica keeps her eyes open. On day 4, open interest is now down to 2. That's because Brittany and Dean closed their positions, and there are only 2 still left open. That's how open interest is different from volume. And both of them are parts of liquidity, which is something we look for before we enter into any trade. Pretty simple.
tastytrade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
I love to take risks. I love the instant pain, the instant gain of trading. I would describe my trading style as a calculated risk taker. I like to play towards volatility, which is something that you can quantify high and low points of. Well, my favorite strategy currently is the diagonal spread. I like the idea of having defined risk, but while also having a little bit of positive decay that works in your favor if you're not directionally correct. But the best part about it is the positive gamma that you get from it. I really like that the position can grow and get bigger as you're more correct on that position. So I think that the variable of trading on a day-to-day, hour-to-hour, minute-to-minute basis is really powerful and really fun to have access to.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st. Only at tastytrade.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Nikki, we are back, son. The opening bell is imminent. Production team's spot on.
John. Slow.
The opening bell in about less than a minute here. Even the S&Ps are down about 9 handles. I said a moment ago that when they were down 4.5, that was about the most I've seen. 9 is now, almost 10 is the most. NASDAQ down 140 and change, about 40 handles off of its lows. Russell hanging in there, up $1.60. Let's just call it $2 off its lows, which would be basically unchanged. Dow up 76. I've been quoting it up 100. And volatility up 3 cents. It really hasn't moved since the low end of its range. What you doing?
I'm closing out some of my MES position. I'm short everything. So I'm lightening up here on this 10-point dip. But I'm still ready to go. We get a little bit of a downside move. I don't know how much is in the cards for us today, but hopefully a little bit of it.
So you're taking off a little bit of a scalp. If I'm looking here,
yeah.
MES, it's basically a scratch on your last one. Is that correct?
Yeah.
Okay, got it.
I've been in and out. I'm wrapped around here. I mean, like I'm taking off a little NASDAQ too.
Gotcha. Also, looks to be about a scratch-ish.
Yeah, these are. I sold a couple higher, sold some lower. I'm all over the place.
Yeah, well, I mean, you're not buying the high here, although you are just a scooch off the highs. You're not buying the high of the session here, so we just sold off of this. This is a sell-off down 13 handles. Taking a look around the board here, let's see what's been moving in the stocks. I'll go to the downside for you just because. AVGO down $31 pre-market. It was down around 15 to 20, now down around $31. So that's your sell-off a little bit more in the NASDAQ. SanDisk also down with AVGO. MU down around 8. VRT down around 6 or so. That stock always has some big movements to it. There's your AVGO. How did that work out?
It should be about a scratch-ish. I mean, I was out about $500 on it when we were up at 410 because I had that 20-point wide spread right at the money. So I just basically scratched that one into this move. Perfect move. That's exactly what I needed.
Yep. If you had done nothing, you probably would have made about $100 more. I mean, but it allowed you to hold the position. You know what I'm saying? As opposed to, having to take it off because of earnings or something like that.
Yeah.
Let's continue on this
journey.
Yeah. Meta down 4, Oracle down around 3.5, Microsoft down around 2. What the hell is up in here? It looks like a lot of the pop gold, obviously GLD up on $6. Lulu for earnings up $25. Coin up $4 and change. Tesla up $4. UNH, which is in the Dow, up $2 and change. Netflix up $2 and change. Circle up 2 and change. Hood up $1.80 or so. The banking stocks like JP Morgan up small, and Google never goes down, up $1.30 or so.
Yeah, not a ton.
A lot of the stocks we trade are a little bit weaker here. That would be the NASDAQ stocks. I mean, with NASDAQ down 150, that makes sense, right?
Yeah.
Rest of the market looks like it's meandering around, kind of neither here nor there. Russell completely unchanged, and the Dow up 100.
Getting a nice move in Netflix today. We needed that.
Directional move in Netflix. Netflix is up around $2 and change. Netflix has been one of the dogs of the NASDAQ over the last couple of months for sure.
Mm-hmm.
No more Netflix and chill. Let's look at your gold and silver. Gold up $56, just about $10 off of $12 off of its highs. Silver flirting with unchanged here, up about 5 cents.
Yeah.
Got them right where you want them.
Got them right where I want them. I only need about $5 more to the downside to really get my bag back.
It'd be good if it happens overnight while you're sleeping.
Yes.
So that you can't do anything about it, right?
Yeah, that's the forced sitting on your hands. You can't possibly do anything while you're sleeping. So unless they start the VR trading, I think VR trading or like brain trading, that could be something in the future here. But yeah, not seeing a ton here.
No, it's pretty much an unchanged mixed market here. I guess you got Bitcoin catching a little bit of a bid. And bonds going lower here, another 28 ticks on the other side. I think it's a I don't know, at all-time highs, pretty a complacent market with volatility unchanged here. IBIT caught a little bit of a bid. What are you doing in IBIT?
I just closed out of, so I had call ratio spreads there. I have another one that expires at the end of next week. I scalped out of the calls and I just had the leftover call spreads. The $1 wide, small. Yeah. And so I've been holding them. They expire today. I closed them at what, 88 cents? Did I just get filled? 89.
Filled at 88 cents. Yes, sir.
88 cents. So they're $1 wide, right at the money. The 52 strike was my short. So, you got the move today, basically put it fully in the money. It was right at the money yesterday. So you got at 82 cents, you have 12 cents per more to make on those spreads through the end of the day. And for me, with that position, I'm already long. I don't need any more long delta. I don't need to get the extra 10 cents out of that trade because it's never going to go to $1.
Until the closing bell itself, really, right?
Yes, exactly. So
you're really talking about 10 cents over 12 cents that you're never going to.
But you have $1 of risk, and we've seen Bitcoin move. I mean, yesterday it was up $2,000 and then basically reversed the whole thing. So you take the money and run and don't really think much more about it.
Yeah, you don't think much more about it. Matter of fact, you pat yourself on the back for staying in it so long.
And if Bitcoin continues to run to the upside, I'm gonna make a whole lot more on the static delta I have there. That's another big bag of mine.
Makes totally good sense here. Not much to talk about the market here. Volatility is actually down 3 cents now. It's had a 6 cents move from up 3 to down 3, nothing move. Bonds really haven't moved. Matter of fact, if you look at your futures here, it almost seems like it's frozen, right? And there are very few moving back and forth or flashing here. Now you get a little bit of a flash here with even the S&Ps down 7 and change. Oil down 10 cents. IV ranks are low. You got your silver down 7 cents. Hi ho, silver away.
There we go. Come on, give me more.
You called it.
I'm hoping we get a little bit more. Need a little bit more. 7 cents doesn't move the needle for me at this point.
No. I did a reverse jade lizard in silver for one of my option trades today. Did it around $3.20. It's trading around $3.80 on a decent sized move in SLV. So got directionally wrong, but I think I have the right strategy at all-time highs. I'm only down around 60 cents, having a naked call in there. So I could use silver down around $1 too, or SLV I'm talking about, which would equate to a lot more /SI, like a point or so. So I'm pulling for you.
I'm gonna put an order in to close that Costco put spread.
Okay.
Just a little like $100 or so winner on that one if it gets filled there.
You're short put spreads in Costco. Costco's up $2.
Yeah,
$1.60 now. And change.
What else do I need here? I would like to see a little bit of a bid in oil. I do have an iron condor there in CL with 33 days. I'm short the 55.53 and then the 64.66 on the upside. It's up like $100. Volatility has come in. It's one that if I saw a plethora of options around in other trades, that I would probably take this off and book a winner and do something else. But the way the market is right now with no volatility anywhere, it's like I'm grasping on to these slightly higher IVRs and something different than just, equities. So I think I got to hold it.
Yeah, let's take a look at what you did here from a looking back point of view. I'll put /CL in here on the follow page for you. I think I have to put the Oprah code.
Yeah, so you got to do G6.
Yep, there you go. There you go. You put this spread on when volatility or IV rank was 19. It was around 58 and change, 58.88, IV rank of 19. You now have an IV rank of 16. So you did get a smaller move, a lower move by about 2 vol points. Equally as important, it stayed basically inside of its expected range over the last, 8 days, 9 days?
Yeah.
I don't know. I might look to take it off personally, but that's just me. I understand you have no place else to put the buying power, but I don't know. You got the perfect move. I think if oil goes higher for the short term, it'll work out well for you. A little bit longer than that, volatility will expand a little bit, bringing those wings up. I don't know. I think you got the move. I think you take it off.
All right. You've convinced me.
Even the S&P is down 5, NASDAQ down 102, or Dow up 107, and the Russell up $1.60. Let's take a quick 90-second break. We'll come back. We got fast market. Let's see if our viewers can help us on this Friday going into the weekend, going into a holiday the following week. We'll be back in 90 seconds. It's Tasty Live.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tasty Trade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tasty Trade.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st. Only at Tasty Trade.
Tasty Trade has crypto, and you can trade with 0 commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Digging Nicky, we are back, son, and you know what that means. Time for a little bit more Tasty Live with Fast Market. Even the S&Ps are down 13. You just covered about 50% of your NASDAQ right here, a little bit higher, actually. NASDAQ down 150. You're probably putting yourself in the chips right now. Your silver's down 23, not near the lows last night where it flirted with going under 63 at 64.30. It did trade up to 65, so let's call it the higher end of mid-range. NASDAQ down 160, Russell down 2 and change, Dow up 81, and volatility down 7 cents. Bonds down 29, about 4 ticks off of their lows. Bitcoin hanging in there, but only up 6,600 right now to 92.6 after flirting with 93. Ethereum up $6 or so. It was up about 19 earlier. Man, it looks like a choppy market. It certainly looks like, this is what the market does to you. We open basically unchanged. You go a little bit lower. You have short delta. You cover some of your short delta. You feel horrible about it. And yesterday we just rallied, all the way into this, so the market still seems volatility unchanged, still seems like it's giving you that head fake kind of movement to it. So I would beware here about any extended move to the downside. Right now with volatility unchanged or lower by about 8 cents, I think you're going to have that inside move. Let's take a look at the expected move on the E-mini S&Ps. Oh, it's anemic at 23 already. On the expected move on the E-mini S&P is just about 45 minutes after the open. Let's see if we get a move in one direction or the other where we can get a pop in volatility and maybe 0 days. I don't know about right now.
Yeah, I'm not going to be selling them into the hole here going into the weekend. I do have this butterfly in Tesla. Tesla up about $12 right now, $11 and change. I did this broken wing butterfly that expires at the end of next week. I'm long the at the money 465, 475 call spread, and then I'm short the 495, 510 on the upside. If you remember, I bought in the risk on this into a down move in Tesla. I'm long this, like it's not exactly a risk-free butterfly because you got about $5 in risk if we explode through 505 here, but I'm long this butterfly at like 67 cents here. It's marked at $2. Do I sit with this trade? You got $10 of upside, small, tiny little risk. This it expires end of next week.
Oh, end of next week. Okay, because I was going to say, you said I thought you were in 0 days. Gotcha.
End of next week. So I have the 65-75 long call spread. So 50-50 shot on that. And then I'm short the 95-510. So I have small amount of risk on the upside. We're talking about, I own this butterfly at 67 cents and we have about $500 in risk if we explode, into 510.
Yeah.
Do you hold
you got a $1.30 profit right now on top, right?
Yes.
And you've got, this is a tough one. You got a 60% chance of a touch of 475. That would be the best for you.
Yeah.
You got about a 30% chance of a touch of 495. If it all comes down to, in my eyes, and Ivy rank of 7 means nothing here. It all means, what do you think Tesla's going to do? Are you a little bit bullish in Tesla? If you're a little bit bullish in Tesla, I think you have to sit with the trade.
I think I
sit with the trade. You have a bunch of positions on everywhere else. I mean, this is a decent risk reward trade here. I mean, probably the profit's not great, but the risk reward is pretty good. It's basically 8 to 1.
Yeah, I agree. I think at this point, but that's the conundrum here. You got $200 sitting there. Do you pick it up off the floor or let it sit there and see if it turns into 1,000? I mean, that's what that's the question. It could go to 0.
It certainly could. I mean, that call spread will always hold a little bit of value to it.
Yeah.
And as time goes by, it's going to get up. You'd be hard pressed to not at least have a scratch on this trade.
Yeah. So I'm going to hold it. I agree with you.
I think it's a hold. Even the S&P is down 19, Nasdaq down 200, Russell down 2, and the Dow up 140. Volatility up 2 cents. Let's go right. Come on, let's get to it.
Yeah, let's do it. Let's do some trades.
Fast
market. I didn't know. I didn't know I was. My God, you got a little testy there.
No. I don't want you to get too puffy chested. With silver down 4.5 cents.
Oh no, we missed it. Damn.
Hang in there, son. Hang in there.
I know.
Yeah.
Fast market, let's do it. Couple trade ideas. We need some trade ideas. I'm interested to see what the peeps got. All right, MSTR. Oh God, let's try a wide iron condor. Stock's not moving before January. Selling the 155, 145 put spread, 235, 245 call spread. Iron condor in January.
What do you think? How do you like the markets in here? You've got about 80, 90 cent wide markets in here. ID rank of 35 is pretty good in this market.
Yeah. 145, 155. Okay. So let's do it. Oh, you're long, the 145. And then the 235, 245.
MSTR has been trending sideways for some time as volatility has increased here.
Let's see if we can get like $3 on this. Mid price is at 272.
Right, but markets are quite wide.
Yeah,
I think $3 will be a stretch for you.
Yeah, I'm gonna try 290 here. I mean, it should trade 1/3 the width of strikes or around it. I mean, it's not going to trade around 250. All right, I'm going to put this in at 275 and then let that sit. And we'll see.
Okie dokie. We can do that.
Yeah, it's right around the mid price at 272. So we'll let that sit and see if we can let something come to us here. I'm gonna scalp out of some of this Russell too.
Oh, look at you.
A micro Russell. I mean, these are microscopic.
Sure.
I mean, that's just me angry trading. That was an angry trade.
You haven't learned your lessons with futures. I mean, I love futures trading when it goes right. There's nothing more heinous when trading futures and it goes wrong.
Yeah, and in hindsight, the silver futures got a little bit bigger than I ever expected them to get. I just scalped another NASDAQ here. So I got one left in NASDAQ. I got two in the E-minis, and I just scalped out of some of the Russell. The Russell's probably my biggest one right now.
Yeah, I hate hindsight trading too. There's nothing worse than that, especially coupled with trading futures. You went 1-to-1. I'll give you credit. I'll give you credit there. I mean, meaning one gold versus one silver, as opposed. You bought silver. It was underperforming gold, but that saved you. Really, it really saved you. So
yeah,
you got too big. You should have stayed with the pair. Like, you should have done, 2-to-1, 4-to-2, 6-to-3, stay with the pair. But you want to get heavier in silver. You took a directional bias and they slapped you like the redheaded stepchild you are. And that's,
if you don't get slapped, you never learn.
1,000 times.
Yeah. So we'll see.
MSTR, you got it working.
Got it working, 275. We'll see if we get filled.
Okay. Next one, please. Thank you, Trevor. Marcus in Wilmington. Wilmington. IVR is almost zero in HIMS. Poor man's covered call setup. Selling the Jan 33 call, buying the March 35 call. HIMS. What do you think?
I'm kind of with you already. I think we had a HIMS.
We got a Feb Jan on, I believe.
Yeah, we have a Feb Jan on upside diagonal spread. So we're with you, Marcus. I'm not going to add to this one though. I like it. I mean, the stock's, taking a hit over the last couple weeks. Small cap stocks, so those are in favor right now. Buy the junky stuff. So
Yeah, we're
maybe
out about 60 cents, although Hims is up 75 cents, helping the position today.
Yeah.
So yeah, you could probably get in, Marcus, you can get in relatively better than the prices that we have, although we have different strikes, but you'll be able to get in better position on. So sure, I would go for it. We echo your sentiment, but we're not going to add to the trade. Hims just not a $38 stock that you don't go to all the time, right?
Yeah.
Go-to trader.
Yeah. But I like it. I mean, finding stuff to do.
Yeah.
I'm with you.
Yep. Next fast market trade, please. From Grant to Tucson, Arizona. Costco flat after good earnings. Nothing fundamentally wrong. Going long. Jan, poor man's covered call. I like the way they're thinking, at least. You know what I mean? They're not just going straight to, like a Delta long strangle or something like that. With volatility so low everywhere abound, they're actually buying a little bit of gamma here by doing this poor man's covered call. But anyway, Costco down $5. You can get in a better price than Grant was yesterday. What do you think about Costco?
So I've got a leftover call from a diagonal spread. So I have some upside delta as well as a short put spread that I'm working to close here that, you haven't really got the huge vol crush yet. And the stock, down $6 now. It was up about $2 right at the open at one point. So I'm with you on this. I already have the position on though, so I'm not going to.
Costco opened on its highs 884. It's trading 879, so it took a $5 turn to the downside. You needed that $5 turn to the upside to get out of your spread.
Yeah, so I'm with you, Grant, but I'm gonna hold off. I've learned my lesson of adding.
Pulling for him. I agree. Next one, please. Number 4. SMCI bullish diagonal Feb 33 call, sell Jan 38 for 350. Look at how interesting the fast market trades have become here, with creative is what I should say, with the low implied volatility. I like that they're not throwing caution to the wind here and just expecting volatility to continue to contract on these low vol trades. SMCI on its butt. We got Blake in Madison, Wisconsin, one of our neighbors to the north. What do you think here?
Yeah, I kind of like this. I mean, you could also consider like a poor man's covered call type setup if you want to go a little bit further in the money. Volatility at 11, an Ivy rank at 11 is pretty low.
Right. $34 stock, relatively. The world is your oyster here on defined risk or diagonalized trades, right? Doesn't use a lot.
I'm gonna make this more of a poor man's cover call. I'm gonna do like the 30 in February, and then we'll sell the January 37. So we'll do the same strike. This sets you up. You're paying net about 90 cents of extrinsic value because you're here it's marked at like $5. We'll just call it. We'll round it to $5 is what it's marked at. So assuming the short expires out of the money, the long option is $4 in the money. You have $1 worth of extrinsic value on that trade. So you're not really offsetting the full extrinsic value, but you're offsetting about half of it or a little three quarters of it with that sale. And you have another sale baked into it because the option is out in February. So you could roll this, to weeklies or even just be long and roll to a long call spread. So I'm going to keep the directional assumption. I'm going to see if I can get filled a little bit above or a little bit below the mid price here at 490, and we'll work our way from there. Markets are not terrible. Markets not amazing. So we will see.
I think the key to today is going to be getting filled at your price.
Yeah, I'm going to move this to 5, and there we go. I'm at 5. I'm in. Blake and Madison.
SMCI, you did the 30-37. You did Feb Jan, bought the Feb 30s, sold the Jan 37s. $5 debit. So your risk is $5.
Just close another of the E-minis.
Got it. Even the S&P is down 16.
I got slightly. I have one extra in the chamber for these, and a little bit extra short on the Russell here, but pretty much flat for the most part. My portfolio delta is exceptionally low here. Beta weighted delta very, very low here. So I don't have huge exposure in either direction. It's mostly just the gold and silver positions that are dictating my sentiment.
Yeah, don't you hate it when your position kind of leans heavy or lists to one side, especially on something that you don't trade unless it had an unusually large move like silver?
Yeah. Yes.
I don't want to point out the obvious.
It's becoming a core position here.
You're gonna hedge it by buying silver coins soon. Next fast market trade here from our viewers. Eric in New York, Meta, super bullish after 3-day drop, long the 650, 665, $15 wide call spread in Meta. Meta is trading 650, so basically buying the at the money call, selling just out of the money, $15 wide on this $600 stock in January. IV rank of 1.
I know. I like the assumption.
Stock's down $2 today.
It's so funny. I'm looking at you buy the call spread, and it's kind of an expensive call spread. Trades at like $6-7 because it's a wide call spread, and it's a $600 stock. So it's you can't really do a $5 wide call spread. It's not going to move. You got to kind of do a $10, $15, $20, $30 wide call spread to really get some movement out of this.
Mm-hmm.
So then I go and look at the 606 or the 605.75 put spread, and that's at like $2. It's like,
I got another trade for you, Meta. You want to look at it?
Yeah.
All right. I'm going to put it up on the screen here in just 1 second. Here we go. Meta, obviously down around $3 today. It has had a sell off over the last couple of days. It does have low IV rank. Earnings are coming after January, so you're not going to get the volatility expansion there. I'll tell you what I've had some success with directional trades. Doing a Jade Lizard. I did this in Costco. It worked pretty good for me. In Oracles worked pretty good for me. Selling a $10 wide spread allows you to go, and I know IV rank is low, but this is a directional trade. We're going to have around 25-ish deltas when I'm done here. And selling like the 605, more like 11 deltas. We're selling the 605 put. Now you can go as close as you want on the put to get more delta, but I was going really kind of you break even at the standard deviation to the downside. Remember, like Nick said, this 55-65 spread is not going to move that much, especially with 35 days to go. Matter of fact, the best thing that you would want it to do is go deep in the money. It would trade for around $5.50, half the width of the strikes. And this spread would, this naked put would, go down to $2 or $3. And then you'd be taking the whole thing off for around $8 or so. That would be my play in Meta. What do you think?
I like that. I'm thinking.
You hate it. It uses a lot more buying power.
No, I like it. I think so. I'm looking at.
Listen, the gentleman was looking. Eric in New York was looking to use $5 in buying power. You're using, $5,000, just rounding.
Yeah.
Completely different trade. 84% pop on what I was just showing you. Basically, a 50-50 directional shot on Eric. So. I get it. Use a lot more buying power. I can see with volatility IV rank at 1 why you don't like it or somebody doesn't like it, but I'm just giving you a directional trade. If you look at the delta, just to go through it on the 50 that he was buying, the 50-65, you've got a delta of 10 or 11. So the delta is the same, and that's what I was looking to match here on the trade. Obviously, the probability profit is significantly different, as is the buying power. But that's what happens when, you have more disposable income. You can put on higher probability trades with the same amount of delta.
Yeah, I'm trying to get in on I'm going to sell this. I agree with you. I like the Jade Lizard setup. I wanted to sell a call spread that's a little further out of the money so that, you got a little bit more room to run on the upside. So I did the 610 put, and then I did the 675, 685 call spread. I got filled at 960. So not exactly covering the full upside here, but that's
why it looks like a 50-50 shot or 54% pop here. Your delta is actually larger, obviously, with the call spread is going out of the money by 15. But let's change this for a moment, because really you have 40 cents worth of risk to the upside, right?
Call it nothing. Yeah.
Yeah. Your break even is I'll just round and say it's 685. It's 40 cents underneath that, obviously. But let's change this credit just to show you how much all the numbers change. Remember, the probability of success is 0.54 right now. But let's change this to a over $10. The width of the strikes here, it now goes up to that 81% pop. Your delta doesn't change at all, obviously, because you didn't change any of the strikes. But what I'm showing you here is the computer's picking up, not your monetary profit and loss, just your profit and loss. And now you have no loss to the upside if you did this for over $10. It goes to my 80 plus what I was doing. We both need the same thing. We both will be unhappy if Meta's under $600 in the next couple of weeks.
Yeah. All right, that's the last of the NASDAQ.
Well, now you've got yourself a little profit on there. You can pat yourself on the back on your scalps.
Yeah.
I know you didn't wait till NASDAQ was down.
And that's MES too.
I know you didn't wait till even the S&Ps were down 50 also.
You can't get every piece of it, all right?
No, you can't. I commend you on your hold the way it was. So good job.
Yeah. I've still got the short Russell, so I got a little bit of a runner there. But if we bounce, I can sell a couple out and we'll start fresh.
Very good. Very good.
Cool. All right, Eric, we are in. I like that. And we still are waiting on fills, or if we get filled on the MSTR position. SMCI, we are in as well. So got a couple on.
Yeah.
A couple work.
Yep.
Roblox. All right. Taylor, Boise. Roblox ranges from 80 to 110 next 30 days. Sell to 82.5, 110 strangle. RBLX, where is this trading at?
It's been on its butt. IV rank of 21 here. Earnings are in February. January is your place to go. Even the S&P is down 25, NASDAQ down 215, and volatility unchanged, basically up 2 cents.
Okay. I kind of like this. I think I'm going to make it more delta neutral. I'm going to go to the 80-105. Maybe we get like $3 on this.
Okie dokie.
I mean, it's one that I haven't traded in a little while here. And the big problem with vol here is, and you've seen it live, is that you are not getting filled at mid price today. At least not right now, unless you're leaning long and the stock is going lower.
That's true.
But with vol this low, you're not. Nobody's coming for Johnny 1, 2, 5 lot here to price improve you on anything here. Nobody's rushing to get any protection.
You just got filled in your Roblox trade.
Yes, I did it at 297, the 80-105.
Very good. Good job.
So we're in with you, Taylor. Thank you.
Thank you, Taylor. Boise, Idaho. I've been in Boise.
Really?
Yeah.
Be fun to go to one of those games, the blue turf.
Yes. No, I wasn't there for that. I was there for work. Some dictator sent me there. Next trade, please. Silver. Oh
no.
Oh, Jack, you evil SOB. Really.
Yeah, rubbing it in, Jack. I hope that you get tested on the downside on this strangle, Jack. I hope you have a 1 lot so you don't lose that much. But if you get tested on this, I am a happy person. So I will abstain. GFY. I hope it works out for you. But I'm on the other MSTR.
MSTR you got filled on.
There we go. I'm going to abstain from this, but I'm with you, brother.
Yeah, the setup. Let's take it our own position out of it. Certainly seems to warrant it. IV rank of 82. Selling premium seems to be the good thing to do. As silver goes lower, if you're a little bit bearish in silver at all-time highs, maybe you are, maybe you're not. But if it goes lower, volatility should collapse too. So you'll get a little bit of both here if you're if it goes to the downside. If it goes to the upside, volatility is going to stay bid. So if you're slightly short in opinion to neutral, what a great setup in silver.
Yep, for sure. Volatility through the roof too. I mean, it's remained bid, but it is near or at highs.
Yep. Next one, please.
Oracle. What do we got here? Post earnings play, long-term support. I mean, Abhishek in San Mateo, California, is on your trade here, Dad.
Well, hopefully he did it, today and not yesterday. Oracle caught itself a nice bid yesterday. It's back into the middle of its range right now. You are right. I did do this trade for option trades today, every Tuesday and Thursday. Yesterday being Thursday. I put mine on at. I did basically the Jade Lizard that I showed you a moment ago in Meta in Oracle. And I did it at around 10:45. It's trading at around 967. So I do have a profit in there. But I wouldn't look to put on more trades in Oracle. Ivy rank is good at 45, just sitting there. I don't know. What's your Oracle position?
I scratched out of the puts that we sold into earnings, into that little bounce that we had yesterday. So I close out of that. I think we're good with what you got on. A little bit of long delta here. But if you don't have a position, I think it's an interesting spot to be, looking for some short puts or put spreads or Jade Lizard, something like that. So I'm in agreement with your thought process, and we have it on, so we're here.
Yeah. Yep. Very nice. Very nice. Next one, please. Baidu from Sean in Hong Kong. He must know what's going on. He wants to be neutral. I mean, Baidu. Let's take a look at it. BIDU. AVGO is still down $38, by the way. Hasn't really caught itself any bid or done anything. Baidu in the middle of its most recent range here. IV rank of 28. What do you think about Baidu?
I don't hate this. I will say, just as a contra indicator for you, Sean, in Hong Kong, my hit rate with China stocks in any capacity, bullish, bearish, neutral, is exceptionally low. The probability on this trade as a one standard deviation strangle is somewhere between 60 and 70%. If I put this trade on, you're probably closer to like a 40 or 50% probability just on my track record of these stocks. So I'm going to follow you because I like it. It's a 28 IV rank. You in a realm where we're looking for 20 as the high. So it's right there. But I will warn you that my experiences with China stocks are just not positive.
So you're looking at like the 115, 145?
That's the exact strikes I'm putting in. I'm going to try and get here filled at mid price at 340. See if we get filled on that. Markets are about 10, 15 cents wide.
Can I while we're here, can you look at the 120, 140? Going in a strike on each side, getting you more the 30-ish delta, brings it a little bit more premium, around $5.47. Maybe you get filled at $5.44 and manage this trade quicker than you normally would. Because you got an IV rank that's 28, that's pretty good. If it goes lower, volatility is probably going to contract. So you'll get a chance to make your 50 cents or a buck. If you're selling that one standard deviation for $3, it ain't moving $50 cents.
No,
it ain't moving $1 for some time.
I agree. All right, 542. I got price improved.
Perfect.
All right, I'm in, Sean. Good luck to you. Good luck to me. I hope this is one of my winning China trades, but not hopeful. I like this setup though. Hey, the great thing is the prices are what they are. So, you know, you can get in at 542 to sell it or buy it if you'd like. So
maybe a penny or two around that. Yeah. Even the S&P down 32, trading near their lows of the day. Volatility up 15 cents.
Cool. Last one.
Last one is right. SPX is inching from all-time highs. How about slightly aggressive, bullish butterfly? Short strikes at 19.25, $40.
I think they're probably thinking like 69.25.
SPX. I mean, SPX.
So they're doing like a broken wing butterfly right at the money, pretty much.
Well, SPX.
Or I'm sorry, because we were up
the money now. I mean, but yeah, we were 6,900 on SPX. I guess they're.
Yeah, I think I'm going to pass on this one. But if we get a little bit of a pop and vol and a little bit of a downside move, maybe we'll start thinking about something here.
Coal in Santa Barbara. This is a tough pull for me right here. I'm not going to lie, Ivy rank of 11. But I'm pulling for you.
Yes.
She's pulling for you too.
Yes.
How many trades did we get, John? Save me.
So we got
Silva Hims and Costco, the three that we didn't do. So that means there's 7 trades there. We didn't do the SPX butterfly. So 4 to 6. 60%.
And we already have Hims, Costco, and SLV. I have a position, so we're gonna give it a 9 out of 10 because we didn't do the SPX one was the only one we really passed on. Everything else we have some sort of position on. So I think this was a great success.
A great success, he says. Well, thank you, Mr. Trump. Yes, this was a great success. One of the
Thank you for your attention to this matter.
One of the biggest successes that we've had in quite some time. Let's take a quick 90-second break and come back. We got more Tasty Live as the Dow is about to go unchanged. It's been up all day. Russell down 12. Volatility only up 22 cents. We'll take a quick 90-second break and come back. Even the S&P is down 38. We'll be back in 90 seconds. It's Tasty Live.
Your crypto needs a wallet, and crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Tasty Trade has crypto, and you can trade with 0 commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
tastytrade is now on TradingView. Trade stocks and futures directly on TradingView charts with tastytrade's low commissions. Try it out and leave us a review.
Nikki, we are back, son, and you know what that... taking a little bit of silver off. Good job out of you.
Tiny bit.
What's that?
A tiny bit.
A tiny bit. Yeah. So I get it. So instead of being 3x3, you're 3x2. You're still the ratio is still off. You should be 4x2. So you're still short the metals. I think you have to throw one to the gods here. I mean, yeah. I mean, at $1,000 a point, right?
Yeah, it just moved. I mean, we were up
$1,500.
Yeah, we were up 30, 40, 50 cents, and now we're down, $1.
And you got gold going in your direction up 43. I mean, you could have opted to sell out of gold and stay shorter silver. I think you did the right thing by trying to reduce the position in the silver point of view. If you were being more aggressive, you would have done it with the gold point of view.
What about if we also sell out of one of the golds?
You could certainly do that. You could certainly do that. That would just make the overall position smaller.
Smaller, still weighted towards the short silver.
Downside. So yeah, I like it. I like what you see. Now you're being intelligent.
Before I was a little,
You had a little machismo. I'll tell you exactly.
Yeah, the cojones were a little inflated.
Yeah, you were scalping. You had house money. Everything was beautiful. And then, as always happens, you can get big real quick with futures, and they do have the propensity to teach you who boss is. But you've held on pretty good. You bought gold when gold was rallying to get to a 1-to-1 ratio, which is a very hard pull when you're supposed to be 2-to-1. You got to 1-to-1 when you were trying to overweight on your silver side. So that saved you, thousands of dollars, and now you kind of took off that hedge a little bit by reducing your overall position to 2-to-2.
I'm still in it. Obviously,
it's
just about half the size, or I took about 30% of the size off, which is a lot better. This is now comfortable to hold this. I can continue with this. The gold silver pair is, I'm playing for the ratio to be higher than in the 60s right now. And if it is, it'll be a good trade.
Yes, sir. Good job out of you. And gold is sold off a little bit. It's up 33. And silver sold off good, about another 30 cents lower than where you just closed it. So good job out of you.
Damn.
That's okay.
Why'd you make me close that? But gold just sold off like 10 or handles or so. So you can't catch them all. You're not gonna. This isn't Pokemon.
I think we made a compromise because on the break I said sell one of the gold and leave your silver position on.
Yeah.
You said I should get smaller on this, and you decided to do both, which I think is the right answer. On reflection, even though I was correct in saying hold your silver. I think you did the right thing. You did as I would do, not as I say.
That's the ultimate way. You got to do it. You got to do it that way.
Yep. All right, let's get to this market measure. You want to?
Sure, let's do it.
Volatility, by the way, not really moving here, up 19 cents. It is at the high end of its range, but even the S&P is down 38. Volatility not expanding. Maybe the move is trying to get its feet underneath it right here?
Yeah, it's good to see volatility picking up a little bit. I mean, I think it has
Going into the weekend, volatility up 19 cents at all-time highs, I don't think is getting going.
No, I'm not like spooked. I don't think this is like anything to write home about, but I would like to see volatility bid a little bit. So you have a little bit more fear in the market. You have a little bit more opportunities.
Yep.
Cool. So let's do a market measure, sponsored by the SIBO. We're wrapping up the past 5 days of trading emails that we've done. This is the first part of it because we have many more days left. We have 5 more days of the emails here. But if you want to get on it, if you haven't got on it, it's tastytrade.com/12 days. It's just like a quick little email campaign that we're doing with just some tradable ideas, some promos, some fun stuff underneath the surface there. So sign up for that if you haven't already. Help support us and get some of this info. So, or you wait for the recaps on Friday, but then you're late. Then you miss all the good stuff day of.
Yeah.
So let's do it here. And just to mention, Bitcoin now down after we closed that call spread. That was a good close on that as well. It's just another kind of talking point of why you just get out of stuff and not look back.
Yeah, 100%, 150%.
So
especially the way this is where market awareness comes in too. Like you look at how Bitcoin has been behaving. It's not the Bitcoin of old. It may become the Bitcoin of old, but we used to get these huge moves higher coupled by a little bit of a downtick by a big move higher. Now we've just been going back and forth in a really tight channel here, and I think you have to play that channel until otherwise. Even the S&P is down 46, making me a liar, and volatility up 27 cents.
So the topics that we've covered this week on this email campaign that we did, tastytrade.com/12 days. We did the New Year trading checklist. We talked about that on one of our market measures as well. We did the tax savings and kind of IRA related segment as well, option strategies, and then futures and crypto. That was the most recent one. Let's get over to the next slide here. We'll just run through these quickly. So if you haven't noticed, we have integrated with TradingView. So I know a lot of people like the charts there. You can integrate the tastytrade and tastyfx platforms within TradingView. So you can link up your accounts there. You can trade through the charting UI that they have. So it's a really cool setup there. I know Ian Gus use it a lot on the show, Vecchio as well. Tim Knight is using it for his charting segment. So if you haven't checked that out, you can check that out. It's pretty cool platform UI there. You can add tastytrade. So jumping over to the next slide here. A couple features that have just recently been released. So you have a journal on the web-based platform. This is only on the web, the tastytrade web platform. So my.tastytrade.com. You can also get it if you just go to the tastytrade website and load up the platform from there. So we have the journal there. I know a lot of people love doing that, as well as the active trader. So the new active trader interface, which we will use on the platform here shortly. I think I've said that a couple times and we haven't really used it all that much, but we will do that as well. A bunch of new features coming to the active trader that I was just in a meeting about the other day. So a lot of different orders and kind of order functionality that's going to come on the active trader here in the next couple weeks. So stay tuned for that, but check that out if you haven't already. Jumping to the next slide here. So we talked about IRA and contribution limits. I know this is not the most sexy thing to talk about here when markets are moving a little bit, but if you haven't already, it's getting down to tax time, IRA time. Start thinking about that. Here's a quick little chart for you in terms of how much deductions you can take and how much you can actually fund into an IRA account or backdoor IRA or all that stuff. So just a quick little piece of nugget of info for you to take into the end of the year here. Next slide, please. And so same with like your Roth IRA. So again, here's like kind of a look at contribution limits and, with all that stuff coming up here shortly. E-mini's down 50. Look at that. It's crashing. Next one.
S&P down 50, NASDAQ down 360. That's a 1.5% move to a 0.75% move. The Russell, which was hanging in there and holding us up, is now down 14, almost 15, which is about a 0.5 percentage point move. Remember, it was up with the Dow. The Dow's basically unchanged. So the Russell has now joined the E-mini S&Ps and the NASDAQ to the way down, a little bit broader based with the Dow 30 hanging in there. Volatility up 33 cents. That's about as high as it's been for the day. Bonds haven't moved since their movement lower, down 27 or 28 handles. Bitcoin is down 800 to 91.1. It is on its low. Ethereum doing the same, down 62 on its low. Remember, these were both close to their highs this morning. A reversal of fortune in the overall market right now. Gold is up 17. It's still a decent sized move to the upside, but it's about $50 off of its highs, and silver down $1.50. It just crossed under 63 a moment ago, down 2.5% here in silver.
Yeah,
you're back, baby.
We're back, baby.
Look at how puffy chested you are. We're back, baby. I knew it all along.
Hey, it's for my guy Pablo, who always does the 3-day rule. You're probably a rich man because you probably got in like yesterday, maybe the day before. So good job out of you. The 3-day rule is fully in effect here.
That's right. The 3-day rule, if you're not familiar with that, is just put on the trade 3 days after we do it. Which is
yes, exactly. You let things calm down a little bit. We'll spot it and we'll be a little early, and then you get the perfect entry. Next slide here.
It's so good. It's so good.
So we talked a lot about trading in an IRA. We had TP on to talk about, just incorporating spread trades and, how you can size down positions, make a little bit of a better bang for your buck in an IRA account. All those things are available if you have an account at Tasty. So just talked about that as well. Getting over to the next slide here. More about IRAs, contributions, all that good stuff. These slides will be available if you need to download these and remember them. They'll be there for you, so we won't go too much through there as well. But it's IRA time, so
IRA time.
Thinking about that. It's a good thing to consider. Next slide here. So we talked a lot about strategies in IRA accounts, as well as just a brief overview of the strategies. You got them all here. So we talked about put spreads versus just naked puts or long stock in an IRA account. That's a good thing to incorporate here. So bunch of good little quick info here if you want just kind of one of those things you can kind of print out and sit on and put on your desk. Here's a slide for you. Getting to the next one here. So we also talked about, some of the strategies here and the rationale of what you're looking for. You're looking for volatility. The setup here is on short puts and cover calls. You're leaning bullish. If you're looking for neutral strategies, iron condors, short straddles, even credit spreads, are roughly neutral trades. So just like another quick little basic primer for you here for this slide. Jumping over to the next one here, and then we talked about diversification. We talked about futures and crypto, and incorporating all of those into your trading. It's important to have not only strategy diversification but product diversification as well. So just a quick little benefits and kind of the impacts that you have on your portfolio here. And we'll get to the last one here, and then we'll bring on Quinn from the trade desk.
Yes, we will. And maybe even we can open up the phone lines a little bit if you want to.
Yes.
855-238-2789 or 855-BE-TASTY. The number will be up after the break here. We'll take your questions, your calls, your comments, your concerns.
Lastly here, just for enabling all of these features in your account. So this is very easy from the tastytrade website. So if you go to tastytrade and then you sign in, you can enable all of these things. There's no tests or, you don't have to jump through any hoops here. If you want to trade crypto, if you want to trade futures, if you want to trade options, you just click the little box there. There are some requirements as to capital requirements in IRA accounts specifically for options. But in a normal margin account, you want all these things. Go ahead, do it. You don't have to ask for permission on those, other than just clicking a little quick button there. So you can go and enable all those.
A quickie button is what we need.
Quickie, yes.
We need a quickie button, right? That'd be good.
Yeah.
We had a quickie button.
Yeah.
All right, beautiful. We're going to take a quickie little break here. How's that sound to you?
I think, do we take one more of the silver off?
You certainly could, and then you would have your pair on the way you want it, right? 1 by 2.
Yeah. So now I'm still in the pair.
Mm-hmm.
I'm still in it, and if we go higher, I'll probably be a greedy SOB and sell out another silver too. So don't worry. There's more bullets in the chamber. I'm not done yet. Okay, I'm not done yet.
I like it. I like it a lot. Good job out of you. 855-238-2789 or 855-BE-TASTY. Give us a buzz. Give us a call. We would love to hear from you. We've got more Tasty Live with Quentin from the trade desk and your questions. I really found these messages. So give us a buzz. Hey, you can write us in the chat room too. We got Francis there and Nick can read these too. We'd love to hear from you. We'll be back in 90 seconds. It's Tasty Live.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the Tasty Live core strategies. Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Hi, I'm Tony Batista, and I've been trading for more than 30 years. I've picked up quite a few shortcuts along the way. I call them trade hacks. Traders for all eternity have been looking for the reason to make a trade. Whether they were looking at charts or they were looking at fundamentals, they just had to figure out what direction the trade had to be. With the research that we provide now, we kind of take the direction out, because it's just a 50-50 shot, and say, what's the best strategy that we can apply? By the nature of the strategies I pick, I'm going to have a high probability of success. And I think my expertise comes from managing those trades, when to take them off, how to maximize the profit on them. I think that's what sets me apart from the novice trader.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Step into the futures arena with tastytrade's active trader. Multiple ladders, hundreds of indicators, precision control. From micro gold to NASDAQ, all CME one click.
Rise higher, ye Taurian markets, I will thee ride. Oh, let the horned bull now be thy guide. Increase the yield, as the longs have long planned. Be not inert in flowery field like Ferdinand. Reward the longs their bulldog-like persistence. Like Lord Michael of Jordan, soar beyond resistance. Reward those who see upside positivity, as if in some ill-advised Pamplonian activity. Trip thy hooves o'er trading streets most stony, cobbled with the confidence of masters Tom and Tony. Climb with ease the line of Tim Knight's profit chart, and with thy rise make proud Slim's technical heart. Gore the matador of pessimism with thy horn. Let red capes of resistance now be torn. This market yoke to wagon now could pull to follow up the thundering of the bull. In market glory let us be arrayed. Oh, hear this exhortation now from Tasty Trade.
but I'm not.
That's right, my friend. After that break, we are back. You want to know why? We had to call an audible. Hold on one second. Calling it the lefty. That's right. We got Marte. Look at you. You can't get enough of us.
Are you kidding me? I feel like a part-time celebrity. Not celebrity, but, you know.
Do you feel like one of those...
Like I'm a TV spokesperson for the trade desk.
Do you feel like one of those bouquets that we would call in from back in the day just to come in for a short time and not a long time?
I feel like summer help at the Merc, right?
Perfect. How about this? We go right to your list. We've only got about 10, 15 minutes left to the show here. We'll get right to your list. I know the trade desk is busy. That's why Quentin is stuck on a call there. We called in the lefty, the reliever.
Yeah, I'm like the backup quarterbacks for Progressive.
Like a backup quarterback. Go ahead, Marty. Give me your list.
All right, at number 20, we have MU at 58%. 19, SoFi, 10%. 18, MSTR at 39%. 17 Meta at a deuce at 2%, 16 Hood, 16%. Perfect. Number 15, Rivian, must be a new addition, 47%. 14 iBit at 42%. 13 Amazon at a 10. 12 Palantir, 3%. Number 11, AMD, 20%. Number 10, TQQ at 20. Number 9, SLV, 77%. Number 8, Oracle, 46%. 7, NVIDIA at a 9%. 6, Netflix, 26%. 5, Cost or Costco, 14%. Top 4, GLD at a 42%. AVGO at 18%. Number 2, Lulu at a 22%. And back on top again, Tesla after a 2-day sabbatical at 6%.
Yeah, AVGO and Lulu had earnings. Tesla's been on a little bit of a tear to the upside. It's up $3.60, but off of its highs that it made today. Its highs were closer to $463. It's trading $450 right now, so that's why Tesla's up there. Some decent Ivy ranks in there too. Even the S&Ps are down 38 after being down about 20 handles more than that just a moment ago. And volatility is up 13 cents. It's come in by about 30 cents on this $10 or $15 move on the even the S&Ps higher here. So
I think they got to stay above 68.50. The E-mini, kind of a
that's a number Nick's been talking about, 68.46 and change.
Right in that area. There's some nice consolidation, some bottoms there on the chart, because if it goes through that, then it could fill.
Oh my God! If it goes through that, we might get to 68.40
or 68.32. Imagine
32. Who knows, right? Who knows?
So they
expected moves a bit around $25 to $30 intraday, and we've been going a little bit outside that for the full day of trading for sure. Nick, are you good?
Can you hear us?
All good. Yeah. No, I'm chopping in and out.
So Lulu gets rid of their gets rid of their head guy, and then their earnings come out and their rallies. Well, what does that say?
Yep. Marty, they're telling me you're needed in the trade desk, so I'm going to let you go. Thank you so much for coming in and filling in. That it was awesome. You're a breath of fresh air when you do come in. I want you to have a nice weekend.
Same to you, gentlemen. See you guys on Monday.
Before you go, how's your son's leg? He broke his tibia, right?
He's got a foot rod in his tibia. It's just different. I mean, it was kind of a stressful situation for a 17-year-old, but I mean, basically he's fully cured, and I've had a bad wrist for like 7 years.
Well, buy him a new car; he'll feel better. His will be just fine.
I see it works for you. It works for you, right?
Marty, thank you so much for your
time.
All right,
gentlemen.
I appreciate it.
See you later.
Thank you, sir. Hey, Nick, let's go to a question or two from our chat room if we can.
I don't know if I can. I had to close my thing out. I don't. My internet connection is getting a little screwy here.
No worries.
Let's just go to break and
we'll get back to the
see
market.
everybody next week.
Even the S&P is down 43. It looks like volatility has made its high for the day at 1885. I would key on that volatility number as it's staying a little bit depressed here, up 17 cents. If volatility doesn't uptick and you notice the even the S&Ps going a little bit lower, then maybe you have the bottom in the market. Nick covered his last Russell future, actually a little bit higher than where we are right now, but covered all his Russell. Russell took a nice reversal after being up about a 0.5 percentage point to back down a 0.5 percentage point. NASDAQ down 350 and change. AVGO has not caught any type of bid, and unlike Oracle, its IV rank is very low, down around 16. The stock down $40. Its low for the day is right about here, 363. So sitting on its lows. Oracle ORCL down around $7, but you'll notice here that the IV rank of 44 still relatively elevated in Oracle. If I had to make a choice between the two, I would probably look for Oracle as opposed to AVGO. Gold up $31. That's about 0.75 percentage point. Look at silver down 2.5. Took off a little bit of the short silver that we've had, kind of trying to save face. In silver, you still have the gold silver ratio spread on, long 2 gold, short 1 silver, obviously working quite nicely today. Silver down 2.5%, gold up 0.75%. That's 1.5% since you have 2 of those. By 2.5%, moved almost 5% just today. So a big move in that gold silver trade. Volatility up 24 cents, not making new highs yet. Even the S&P is down 49. Maybe we've got lows in. We'll see what happens. Right after this, we're going to take a quick 90-second break and come back. We got more Tasty Live. Oh, by the way, I need to mention the research. The 24 to 48 hour rule on the number coming out, and we've had a very nice reversal. It took a lot of heat on that move up, but we reversed nicely. Now sitting at your number at 68.50, where we'll probably close somewhere around here so that the weekend and Monday could be nice and fun to trade. We'll take a quick 90-second break. Liz and Jenny next. Peace.
The Liz and Jenny Show is probably my favorite hour of the day. It's somewhere where I get to be with one of my best friends that I've known since I was 14 years old and do something that I love.
Liz and I always say to get a trading buddy, and we are each other's trading buddies, and I wouldn't know what I would do without her.
People get to take a look at how our minds work as ex-floor traders now transitioned into self-directed investors. What is wonderful about being on this show is that you see the good, the bad, and the ugly, because not every trade is a winner. If it were, the game would be rigged. So you get to watch us manage our winners, and you get to see how we look to get out of a trade that might not be going our way.
My biggest piece of advice to beginners is to jump in, but stay small.
Putting it out there and doing it in small increments, you will learn more than ever reading anything in any book.
So stay small, but jump in.
Top kid.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at Tasty Trade.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real. dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Step into the futures arena with Tasty Trade's active trader. Multiple ladders, hundreds of indicators, precision control. From micro gold to NASDAQ, all CME one click.
I got a good feeling. I got a good feeling.
everybody, and welcome to the Friday edition of the Liz and Jenny Show. My name is Liz Deerking. That beautiful brunette is Jenny Andrews. We made it to Friday.
Oh my gosh, we made it to Friday. Who thought Spoos would be down 76?
Not me this morning.
not me this morning. What were you? Yeah, tell me.
No, I was like, it was a slow step down, and I put a couple tranches of things on.
Oh, it's so funny because I was in the shower when the bell rang on the open. I wasn't going to do the calendar because on Friday you'd be buying Monday. So I thought Fridays they won't do that calendar. So I was in the shower and then I hear like Tony and Nick saying Spoos down 19. And I'm like, Spoos down 19. I like grabbed out of my phone out from the shower, in the shower, sold some put spreads in the 0 day, thought, genius. These will be off before I get out.
Ingenious move. Oh, I did it. I was like, oh, it's 5 to 9. Oh, we're down, so I'll do it then. And now it's 10 after. I'll do another one. Oh, it's like 25 after. Let me do another one. But that's okay. It's okay. Mama said there'd be days like this, right?
I guess so.
But can we jump at the platform real quick, John? Because I want to show Spoos are down 1%. So I just putting it into perspective, we're 1%. 1%, NASDAQ's down 1.75. You know what I mean? 1% is not,
What? And Costco down $15. Damn it. Whoa, we still survived.
Oh, yeah, we did. That's what I'm saying. Let's close this bad boy out. That was not even near the expected move.
No, I did the, you know how I was like, I did the $1,000 trade instead of this little put spread. I'm out. Thanks, Costco. Thanks for nothing.
Well, that's why I'm glad we did this. In this account, this is our bread and butter. We did a put spread. We made $100. I'm paying up for this. I don't care. I'm getting out just in case this move continues.
Yeah, right. We got lucky. Can't believe Costco. And that was another thing. I did the diagonal in Costco.
I can't get filled. Okay, keep going. I'm sorry. I didn't mean to interrupt.
No, that's right. You could just buy.
I'm just.
You could just buy like the $8.55 for 30 cents.
You know what? I am, because I'm paying 20 cents here. Cancel
or try to pay up to 25, whatever. You'll get filled. Try to pay 25. You'll get filled. I don't want to give up. I was just going to say, if you're getting close to paying. Yeah, I don't try 25.
I'm trying 20 again. Let's try it this way. We're edging up there because that's 10 cents higher. That is annoying me.
So, because it could blow through it with the way the market's moving. You never know.
No kidding.
But I did the diagonal. And this morning I was like, whew, I'm going to buy back today's short call because by the end of the day.
Oh, Jenny. I know, I hear you. The only reason I'm laughing is because I would have done the same thing had I had that trade on.
Yeah. I was convinced Costco was going up. Convinced. After like waiting in a line of 100 people to get to check my receipt, I was convinced it was going up.
No, that's funny. It is funny. Okay, but today, Jenny, is the 5th day of Christmas. And guess what it is? Do you know what it is? Sing me the song.
On the 5th day of trading. Who gives it to us?
I say the traders gave to me. That's what I've been saying.
It's not our true love. So
they're definitely not the traders.
All right. On the 5th day of Christmas, the traders gave to me crypto and futures.
How about futures and crypto?
Nice. Yeah. So today we're looking at.
You know what? We're going to buy the dip. Today, let's take a look at the futures first. How about that? Jenny, We've talked about this before. We did not get out of our ZB. We are going to jump in with some ZN.
Who knew this bond move would be coming yesterday? Look at that rally we had so here's the notes. So look at that rally we had in notes or bonds. We had them in both. And then to turn around and drop like this.
Exactly what the market did. I actually want to look at ZB because I'm a little bit more familiar with it, just because I know the levels are a little bit more familiar to me. So we put a put spread in. We didn't get out of it in the two rallies. That's okay. But now look at this. It's down to a point where I don't mind doing something else. That's the reason we looked at ZN. We already have a ZB position.
And so there are people who through the years have watched bonds. They're always, watching bonds, familiar with the price. There are people who watch the notes. From like the beginning of my career, I traded TLT because it was smaller. And so will you go to TLT and let me see where it is? Because to me, it's like I have certain price points in my head of TLT and it's only 87. It's only 87. So we can get back in with another bond or note position, but not too big because I remember this hitting close to 82.
No, I know, but TLT. Hold on, I'm going to go.
But at this point, like with interest rates where they are, I would think that.
So look at this. We put this on. So TLT, we had a zebra on, and we closed it. We closed it.
We closed it. We closed our zebra. We did.
Yeah.
I'm just thinking like price points in my head. 87, fine. I don't mind. Let's add, since we closed that, let's add to our bond or note. What are you laughing at?
Oh my God. Okay. Sometimes I glance, usually not when I'm running the show, but I have like so many things up right now. I don't know who wrote this, but who watches the bonds? Nerds. I was like, this is the greatest thing I ever read. It's so funny.
I'm just saying, like, for us, Liz, as long as we've been doing this,
like ZB is my level. I know what I want to get in for ZB, but that doesn't matter. Like, we have a ZB position, so I'm going to look at.
Let's go to the notes. We'll go to the notes, and let's look at TP's little trick too, though. Like, go to the trade page, look at the volatility. We'd be trading. You've got the 42-day up. I
don't need to do that. I was clearly vetting something. Yeah, looking at just a 42 option, you got a 5% implied volatility.
5% implied volatility. Now in ZB, let's take a look at what it is in ZB.
10. It's doing its job.
10. So it doesn't matter, trade either. Yeah. If you see a big discrepancy, ZB should be double than ZN. If you see a big discrepancy, then trade the one that's higher.
Yeah, and the reason we have a ZB position in. So let's take what we've got. We're in the 14-day, and we have. We could just put something right underneath it. We're in the 14-day, and we have the 16-15 put spread.
No, just leave that.
I have no problem leaving this because this is going to be roll. We could take this and roll it out in time too. Roll it out and make it bigger if we were going to put a bond position in. So let's think about it from that perspective, Jenny.
Oh yeah, you could do that too. You could roll it out and make it bigger.
Yeah, if we were going to put on a note position, let's actually stay in what we're used to. And if there's no vol discrepancy, which we just established, let's roll this out. So I'd be closing it, and then I'm going to go to the 42-day, which is still, I'm going to show this too. The 42-day is still the same price. So a lot of times I'm a little apprehensive to roll when you're rolling through into a new price, but all these are still all up in this 114.23. Okay.
So the reason then open the 42-day and let's compare. We could widen a put spread, sure, but with the 3 rank, with such a low rank in these products, we could do a very wide call spread. Or, I was curious to see how much a zebra would be, but that would be expensive.
Oh, they'd be crazy expensive, and I can't do that math with these chicks.
Well, wait, pop it in. I want to see. Because the rank is so low, and all we like.
Okay, I gotta go by deltas because I won't be. Usually, my eye line, I don't need the deltas. I can do it by credits. I can't do it by credits. Okay.
No, yeah, you could do the 114, 113. If you look at the 107 and then the 49, we know we can double it.
Well, no, honestly, Jenny, because I'm just looking at deltas. You're going with a 58 delta. Hold on, let me get rid of this one.
So this is $3,125.
Yep.
And so, this is why when we put in the zebra, we put it in TLT because they move similarly. So we put it into TLT instead because we can put in a zebra for like $300 in TLT. So basically, like 10 TLT zebras would be like one of these.
Well, that tracks. I think that's the ratio.
Yeah. So.
Okay. So I'm going to clear this out because we're not doing that.
But I'm just saying, if we're going to really widen that put spread with the rank so low, maybe we should come up with something else.
Well, I don't mind. I was just, let's go through the process and then kind of, I agree with you, kind of switching it makes sense, but we were going to add to it. Let's just adjust, right? So we're getting extrinsic value. So if we're going to go from this perspective, I'm going to close this up again. I've got it.
And I'm also going to keep in mind, we're down $250 on this trade. So we're down $250 on this trade. And I don't care if you just close this trade and we open up the new cycle and we put on a position where we can make $500, so 50% of that is our $250 back.
There's nothing wrong with that. But here's what I was going to say. When you're closing this position, it's very similar. It's just kind of think about why we ratchet a zebra too. When your longs become the at-the-moneys, the longs have a lot of extrinsic value in them. The longs have 60 ticks and extrinsic value, and our short only has 18. So by adjusting this, we're actually doing something, right? So I'm going to close this position. And then we are going to, if we were going to just stick with the selling of something, go to the 42-day. I can take it out and double it. So we're taking in a 26 tick credit.
You're taking in a decent credit. But
I'm doubling the size.
You're widening this. No, I mean more than that because we were 1 point wide and like now this is doubling this. So this is going from 1 point wide to 2 point wide. You were going from 1 point wide to 3 point wide. But here we're getting a lower strike.
Wait, let me see if I can get all the way down. It's a 3-cent debit. Okay.
No, yeah, keep the 115, 113. I don't mind it.
This wasn't bad, right? No, and we don't need to land here. And I do kind of like what you said about maybe changing it to a, and so this fits all of our bells and whistles. Our max profit is now 500, so 50% would be getting our break even, like washing this trade completely. We're using an additional $600 because keep in mind I have it in as a rule.
In buying power, but our max loss is going to be more.
Our max loss is 1,400.
Yeah, I don't mind it. We're improving our strike. So if we were going to the same strike, 116 and getting 10 cents, I don't know, or 10 ticks. But since we're moving our strike down and getting 10 ticks.
And we were about to put something on in ZN because
ship this.
I ship it. Yeah,
that's not bad.
I thought you were going to give me a certified badass option trading card.
They're all in my trader jacket, and I should be. You know where my trader jacket should be. Should be in the wash. It should be in the wash machine. It should be in the laundry basket.
It should be, but it's not. It's funny. Okay.
So that, you know what? 42-day Jan bond. Great.
Yeah. Great.
Excellent.
Anything else that we need to look at real quick?
Okay. You got out of Costco. Oh my gosh. So I was looking for green on the page. Why is SDCCQ up $3.60?
I don't know. No idea.
Okay. So, and then silver and gold. We had gold up more than silver today. Our silver gold pair is still a small loss.
Small loss. I mean, you're looking at it. They're both moving in the right direction today, but we get down up 12, down 19. That's fine.
Yeah. I mean, look at that. Gold up, silver down.
Yeah, gold's up, silver's down. I mean, that's what we were playing for. We just needed a little bit more. Mm-hmm. So there is. What was I going to say? So I want to look at AVGO because I believe that is what has taken down the market. AVGO and MU have had, like, a lot of these have had big moves, and they're having bigger moves. But AVGO is down 11%, and then MU had a big move too, and I don't know why. And MU's down 6%.
Well, I mean, MU. Look at the chart. I mean, MU went from like 75 to MU. I couldn't get on board with it going from 75 to 260. Like, it just didn't make sense. I don't know. A lot of these stocks have had crazy runs, and I'm happy for Jack JT, but I hopefully he rung the register at most of his MU.
And I'm doing this for Jeremy. I'm not like cherry picking chats. I'm not, but Jeremy, because you called us nerds, I do feel like I want to answer your question because I loved that comment. But they want to know why it's a zero extrinsic back ratio, Jenny. Would you care to elaborate?
Why the zebra zero extrinsic back ratio? Okay. Yeah. Let's say you want to get long something. What do we want to
go to? Let's go to something, not MU. Let's go to IWM because it's got dollar red strikes, right? We're not getting long IWM. I'm just going there because there's dollar red.
Okay, and go to January. So zero extrinsic back ratio. So the 2x1 is a back ratio. I don't know why, but that's what it is. Long 2, short 1, that's a back ratio. We call it zero extrinsic because we're not paying any extrinsic value. So if we sell that at the money, if we sell that 50 delta, we see we're selling 580 in extrinsic value. So we're going to go down and buy 2 that have half of that. So what are we?
260?
270, 250, yeah.
Yeah, so right here. So we're looking at the put side. We didn't use any deltas. When we created this, we were literally washing extrinsic value, meaning you like take away the delta and the open interest and all that stuff. You're looking at this, whatever you're getting $6 in extrinsic value. You're paying $6 in extrinsic value. Where can we get $3 in extrinsic value?
Yeah, so that's really easy. 620 divided by 2 is 310. Go find a call that has 310 in extrinsic value and buy 2 of them. It works out that is
you assess the call value by looking at the puts because the extrinsic value is the same. That's why I'm over here. So it's very easy to do on this. You lose $6, you come over here, you find a put, you cross the aisle and sell 2.
Oops. Buy two. So this is by buying two 70 deltas, that's 140 deltas, and we're selling 150 delta. So we're getting long 90 deltas. We're essentially replicating a long stock position, but we're not giving up anything. The theta on this trade should be 0. I know it says like negative 7.9, whatever.
But if you understand trading, you know that it's not. You're washing extrinsic value. And take a look at this. That green bar right there, and I'll go to the analysis page. It picks up 141 as if you were stock.
Yes, right where the stock is trading.
Unlimited profit. Look at this. Profit potential.
Yeah.
Unlimited profit potential and defined risk setup. And do you know what is funny about this trade? And I'm glad that we're talking about this. Remember when we were in Germany for the RMC?
Mm-hmm.
And they wanted us on a network, and they wouldn't let us say unlimited profit potential and defined risk. But it is.
They don't want someone to say unlimited profit potential.
I couldn't, because I was on there and I said, this trade has, and it says it right down here, profit potential. What does infinity mean? What does infinity mean? Unlimited in this time frame, right? So it's unlimited profit potential and a defined risk setup, meaning you can only lose $1,700 and you're going to control 100 shares. But because it was so good on paper, we got cut from the program.
Yeah, they cut it. They cut it from the program.
They cut it. They cut it because we were just stating facts.
Yeah, it's like, and again, people who know options and understand options are smarter than anyone else in the financial industry.
Yeah.
And if anyone ever says to you, like, options are risky or options are, then they don't know what they're talking about. They don't understand options. They don't know how to use them. Yeah. I'm trying to prepare my speech for my high school class today.
You need me to come? Are you going to bring in the lefty?
So far, all they've ever done is like the buy and hold in the stock market class or club or whatever it is. So today it's all puts, all selling naked puts. That's all we're doing today. That was my final decision.
Jenny, I'll come in there. I'll give them a quick motivational speech, and you bring it home.
Yeah, I didn't know, Liz, if I should start with the motivational speech or just jump right in.
I think you just give them the motivational speech and walk out. Be like, if you want unlimited profit potential and defined risk, you can follow this. Okay, we did put in our ZB, which is good, and I don't know if you're pushing everything out.
Wait! I want to look at the yen too. I want to see what the currencies are doing. I just wanted to see what the currencies are doing because we took up our yen yesterday. I just wanted to look at the chart and see.
Okay, here, I'll give you the chart. I thought we were going to go back into...
No, okay, so I knew it was down a little, but I didn't know. If it gets back down a little more, we'll put that put spread back on.
Yeah.
And we do have a working FX order on. Let's see if any of our working FX orders hit.
Okay. You're going to have to walk me through this.
All you have to do is click on positions.
Okay, there we go.
So no, they haven't, because Euro GDP we had, or GBP, yeah, and it's just easy to look at that and say GBP, and the shekels we've had both of those. So we don't have, none of our new orders have gotten hit.
Okay, we'll keep an eye on that to make sure.
Yeah. Okay.
The other thing that I think you're going to be surprised at, because I only heard it in a news story, and then I looked at it and I was like, it doesn't really matter. The pot stocks are all skyrocketing, Jenny Andrews. It's up 28%. TLRY. This is a good one you could use for your kids. Pot stocks, who doesn't love them?
I know, I don't want to do that at school.
You can get kicked out of school pretty quickly. You can do pot stocks, Celsius. Let's see what the firearms companies. Let's see if we can get you kicked out of school.
Taser. So for so many years, and this has been going on since 2019. I remember where a viewer was like, "Is 2019 going to be the year of the pot stocks? Is 2020 going to be the year of the pot stocks? 21, 22, 23, 24. It's almost 2026, and we're getting to the year of the pot stocks."
But the only reason I actually have this in, because when you were talking about, you were looking at that, I just knew that they were up 28% and I knew it was a $10 stock. If you take a look at this, you can get $2.19 putting up $3.79. They don't need to know what Tilray is.
Okay, I'm making a list. I need help. I need help from Liz. I need help from viewers. These kids are young, about to turn 18. I'm going to guess if they can get accounts, they're going to be like $2,000, $3,000.
I mean, which is still huge for an 18-year-old, by the way. Like a lot of 18-year-olds aren't lucky enough to be like, I'm going to get $2,000 and put it in an account to trade.
Okay, I'm going to tell you. So my son he had a box. He had a box with a latch that every time he got a card in the mail or a Valentine, Halloween, Christmas, whatever, a birthday, anytime he got cash from anyone, he put it in this box. His whole life, he put it in this box. Like, not cash from like me and my husband, but just like rando aunts and uncles, whatever. And one day I was in his room and I said,
"Did you say randos?"
Yeah.
I'm in that box. I'm sure I'm in that box.
So one day when I was in his room, I said, let's like count the money in this box and put it in the bank. He had over $2,000 in like $10 bills in that box.
Really? That's awesome. Okay, but nonetheless, they if they can open their boxes and scrummage up the money, they can have about $2,000 in there. So what you're going to teach them is how they can make make $219 using $300 in the next 21 days.
Okay, but so this is going to be my plan. My plan is going to be like, I'm going to know these numbers ahead of time. So let's say $350. So, hey kids, if you bought Tilray stock and had $350, how many shares of stock could you buy? How many shares? I'm going to have them bust out their calculators. How many shares of stock can you buy for $350?
For 30, right?
Yeah, right. Yeah, excellent. Yeah, I figured they'll all be on their calculators.
I was like, am I right on this? I wasn't even sure.
I figured they're all going to be busting out their calculators. It'll keep them busy. It'll keep them engaged.
Okay.
They bust out their calculators and they say, okay, $350 divided by 1090, I can buy 32 shares of stock. Now, in order to make $200,
$219.
If you want to make $200 on your 32 shares of stock, how high would Tilray have to go?
On 30?
You can make $32 every dollar. So 1, 2, 3, 6, 9, 12, 15, 18. So Tilray has to go up $6. Tilray has to go up $6 to make $219. But kids, if you learn how to sell a put, Tilray doesn't have to go up at all, and you can make $219 in a month.
It sits right here. I can't. I'm coming just for the entertainment value.
I don't know. So these are the numbers I'm trying to get down. This is what I'm going to bring to them today.
So this is what I would use. Honestly, though, Jenny, I know you two can take down these kids. Hold on. I would go to Archer.
That's why Tilray. I don't want something that's going to like drop and then Archer.
Archer. We have positions in there, but take a look at this. So you can even go to the 9 if you wanted to. And you're putting up, so watch this. It's slightly in the money, so you basically have a synthetic covered call, but I just wanted to give them more bang for their buck so they look like they're making more. Do you know what I mean? So here you can make $119 putting up 165.
No, but keep it at the 8. Keep it at the 8. We got to keep things, I want them to be out of the money. I want everything to be out of the money so I can say, like, this stock doesn't have to go up at all, and you're going to make $58 in 35 days.
Okay. If that's what you want your blanket statement to be, then you got to go to the other money.
Okay, so Archer, so I'm going to say, kids, let's say you can have $200 to invest in Archer. How many shares can you buy?
First of all, you got to tell them what Archer is because they need to be invested. It's vertical lift technology.
Okay. So if you want $200, you divide it by 826, you can buy 24 shares of Archer. And in order to make $200 on 24 shares,
you're making $59.
What?
Here you're only making $59. You're not making $200.
Oh, yeah. So if you want $59 and 24 shares, it would need to go up $2.
Yes.
You need to go up $2 and you make $50. But it doesn't have to go up at all. What they put, you can make $58 and it never has to move.
Your sales job is getting better. We'll try it on the next one again.
How is this going to go?
You're getting better. We're going to try again. Okay, let me give you one more. Let's give you one more. What else would kids? Oh, you got to use.
Oh,
they all use Snapchat.
Yeah, but this is why we are vetting these because there might not be anything here. $18.
Oh,
it's tough. Snap's tough. All right, we got to find something else. It's not enough. We're not going to make them wait 3 months for $50.
Well, then what about are there any low gaming stocks like low?
How about How about
like McDonald's, CMG? Those are all too expensive.
Oh, they're too expensive. Let's go to the watch list. Let's go to the watch list and sort by
Crypto
price.
stock. Hey, it is futures and cryptos. Do you want to say a crypto stock?
Yeah. Oh no, but the margin on those are so high.
Oh yeah, never mind.
That's tough. I can't teach them a spread today. Oh, we can only get so far. Yeah, go to the watch list. Sort by price.
Okay, wait, hold on. Price. I'm going to last.
And then let's see.
Neo and Snap, but no.
No, I mean we got
Chipotle. They know what Chipotle is.
Yeah, sure. Go to CMG. Let's try that.
So Chipotle is $36 trade. Okay. Yeah, this isn't bad. Okay, so Chipotle, you can go to. I'm just gonna say $100.
Yeah, let's get $100.
$100.
Let's try the 50. Let's try the 50. Can I see 50? I want to see the buying power on the 50.
Oh, this.
Like on $50. I want to see if you get just $50, what the buying power is.
Oh, okay. I was like, what the heck are you trying to say to me? 480, 10% return on capital.
Yeah, that's not bad.
Not bad.
You go to a regular strike, like I guess maybe the 34 round strike. $480, $500.
It looks good on here too. Hold on. Let me go to this curve view.
Yeah, okay. Okay, so here, Chipotle, you're using about $500. So if you put $500 into Chipotle, how many, let's see how.
Come on, I need you to really sell it this time. Really get in there.
All right, so let me see. You would buy, if you would put $500 into Chipotle, you'd only get like 14 shares. 14 shares. And if you wanted to make $60 on 14 shares, 14.30, it'd have to go up $4. You have to go up $4. Instead, it can move nowhere, and you would make the same amount in a month.
In a month, that's correct. We've got three good examples.
We're getting somewhere. We're getting somewhere. What about DraftKings? How does DraftKings look?
They
know that. They know DraftKings.
Yeah, DKNG. And then I'm going to Twitter because I want to get to $35.
I don't think the margin is that crazy.
It's not. Here, $35, $185, putting up $671.
Oh, hey, look at this.
I think you're not going to be able to get them all. You're going to just stay on DraftKings. You're not going to be able to go through more than one. They're to their point that they're not going to be able to grasp this.
They're not going to be able to grasp this.
It's hard. It's a hard concept to grasp.
I know. Yeah.
Okay, so Eric comes in. When setting up a call zebra, what determines your long strike selection and how wide do you make them? I'm not even going to go to the platform, Eric. You are washing extrinsic value. That's what determines our strike selection. So you're selling one at the money and buying two in the monies, that the extrinsic value of the two equals the one that you bought.
Yeah, so you look at your 50 delta. If you're selling a 50 delta that's worth $5, you go down you look at the out of the money puts, find an out of the money put that's $250, go over to that same strike call and you buy two of those. So you're giving up $5 extrinsic value on those two calls, but you're getting $5 extrinsic value on the one at the money call you're selling. But basically it works out to be buy 270 delta calls, sell 150 delta call.
And they're as wide as you need to be to wash extrinsic value.
And if something has like crazy implied volatility, it's going to be wider and it's going to be more expensive. If something has a very low implied volatility, it's going to be narrower, it's going to be cheaper.
Yep, correct. So I appreciate that. Thank you, Eric. But I just wanted to show, because I think when we're in the strike selection, they think that we're wide, being like, oh, it's $10 wide. It is not. Each one's going to be as wide as it needs to be to wash extrinsic value. But I'm going to retweet these. And then Eric, happy Friday.
Yeah, from Eric. So look at this. What has he got going on? I'm trying to go long as we dip, but holy crap. Yeah, same with us, right? Like we both have been putting on bullish positions as on the way down. Hasn't worked.
It hasn't worked. It has not worked at all.
When did we really? Has it just been a slow stair step down? Because yesterday we looked at the VIX. The VIX was in the 15 handle. We thought, hey, nobody's worried about anything. VIX at 15, no big deal.
Yeah, I know. Well, I do want to look at the VIX, and then I'm going to go back to Ajit, because Ajit's in MU. I want to see what he did in MU. Okay, but so VIX, let's see where it is today. Guess the VIX level.
1670.
I'm going to go 17 handle.
Yeah.
Yeah.
12. Nice work, Liz. Nice work.
Well, just because this looks bigger than, like, we haven't had a move like this in a while, over 1%.
No, we had a move like this 2 weeks ago.
No, but I mean, it's been 2 weeks. That's what I'm saying. And then it jumps to 17 and then it comes back to like, it's been a little bit for a 1% move. That's why when we this morning, I was like, just keep in mind, it's not even 1% yet. It's 0.6%. And then boom, 1.3.
Yeah. What's my little Oklo doing? I haven't looked at my account since boots were down 19.
It's down 11%. Yeeks.
Now what do I do? So let me open up the Jan. You know, you put on these, it's kind of like ratcheting a zebra, right? So I put on these synthetic zebras around my stock. Mine's at my like long, which would have been my long in the zebras, the 95 level. Now at 91, you know, you ask yourself, do you sell out your puts?
Well, I'm answering for you because nothing we do is trading advice, correct? But honey, this is your brother's stock, something you want to hold. It's doing its job. You sell them out. This is exactly what you wanted your hedge to do. So if that gives you any peace of mind, this is to Jenny because I know her position here and I know what her stance is on OKLO.
You sell out the puts.
You sell out the puts. Okay, let's go back to Twitter. I want to make sure we get to everybody. Ajit comes in with MU because he's topical because MU is plunged. And he's got, what does he have here? A call ratio spread.
It's a call ratio spread. So getting his break even pretty far. He's got the 290, 300 call ratio spread getting $5.
Let's take a look. Can we?
Yeah.
MU 290. What cycle is he in? Can you pull that up on Twitter? Or?
Just go to Jan and let's see.
Hold on, let me just check. Jan.
290, 300. And he's getting $5. So if we get $5 on the 290, 300, we know we're in the right spot. Yeah, we will. We'll get 500.
We're getting 334. Take that thing off.
Oh, I thought when I first saw the $1.50, I thought we were getting a $1.50 credit first time. I thought, okay, so then go to Fab.
Oh, no, I pulled up his Twitter because I have so many accounts here. So he is in 1.6. He's in 116.
Yeah, so right, he could take it off. Maybe I would.
Yeah, that's not a bad play. But thank you very much, Ajit. It's all in there, which I like. This is fantastic. So it's, yeah, I mean, but he might be playing for the peak. We're not, I mean, I usually don't. If I'm taking in that much money, I'm playing for this area.
Hey, did you hear Vanetta this morning?
No, I did not.
She did exactly what I said was going to happen. She subscribed to Disney Plus last night just to get the new Taylor Swift series that's on Disney Plus came out today. So that's what I think is going to happen. What is Disney doing today? I know everything's down, but I just think...
Are you not looking at the screen? It's up.
No, I'm pushing out our trades on the follow page.
Okay, so you're just talking, you're like, I wonder what Disney's doing. I was like, it's up, it's on there. Disney is bucking the trend a little bit. It's green, but barely.
Yeah, but that's... it's because everyone's subscribing for the Taylor Swift series.
I don't know that would move the stock immediately. I think it might after the fact. So I don't know, but it is up. That's that there is some green on the screen there.
And it was up even more. Look how high it got. 113.
But everything was up this morning. Do you know what I mean? This morning, everything was up.
What a day.
So it opened 111, it went to 113, and now it's 111 again. It is pretty crazy.
Now, are we out? I know we still have ETHA, but are we out of our IBIT, or are we out of our ETHA and just have the IBIT? I know we have one and not the other.
We're out of ETHA. We just have the Zebra, and it's getting to the point where we should probably ratchet it or reestablish. But I'm going to give it one more day with this. But we are out of IBIT.
So let's take a look at IBIT and see if we want to do something. Because where is Bitcoin today? I know
Here, I'm just going to
scroll on the watch list.
Do we have Bitcoin down here?
Yeah, there it is.
Oh, it was this morning. It was 93.
Doesn't look good. Doesn't look good today. I don't know what the shakeup is, but hopefully the Santa Claus rally will turn everything around.
Santa Claus is going to kick in here sometime soon. But I kind of agree with you. So IBIT's got a 44 rank. Let's do what we have been doing in IBIT. Now, we've been doing weeklies, and I have no problem putting in the 7-day if it makes sense to us right now. It's got a 44 rank. So we've been doing a Jade Lizard-esque type position because we need to buy something in this. So I'm selling a call spread for 21 cents. I'm going to go down and buy something for 21 cents, which is this 46.5. And then I can sell whichever put I want to here.
Yeah, and I'm fine with the 50.5. I'm even okay with the 51, really, with this move down.
I mean, I'm okay with the 51 too, but let's just, this is our tried and true. We've been getting $1. Now, this is a Jade Lizard-esque position, and I went pretty quick in there. So a Jade Lizard is selling a call spread and selling a put where you're covering the width of the strikes. But watch this. If I put this in IBIT, it just holds up so much capital for a $50 product. So it's $2,000 in capital. So we've just been doing this, and it's been okay. We're using it as a premium selling. We think IBIT's going to, and it's only in 7 days, keep in mind.
Right. Yeah, this is just weekly. And I kind of like the slow churn, the weekly, the quick churn. Not slow churn, the quick churn.
Yeah, I was like, this is faster, not slow. Fast.
Yeah. Yep.
Yeah, so, and I'm going to show it on the analysis page, curve analysis. There we go. So if you take a, hold on. There we go.
Yeah, we have no risk to the upside. No risk to the upside, and we have just 297 risk to the downside.
So Jenny,
it's been staying in this, like if you go to the chart, we've been around this 50, 51, 52 for a couple weeks now.
Yeah, right here.
Yeah.
Okay, so let's do this. We're defined risk, right? Wheels fall off scenario that we have defined risk to the downside.
Yeah.
Okay, I'm gonna ship this.
Send it.
Send it. We're not filled. I can take it down to, did it have wide markets? No, it didn't.
No, you'll get filled.
There we go. 102.
Okay, and then will you fix your side watch? Let's just bring Spoos back. I just like to keep that.
Down 92.
Huh.
What? I'm asking for a friend. What the hell happened?
I was going to ask that too. If you're a viewer and you know like what the news was, what happened, what turned this, I don't want to say turn the market around because it started down, but what accelerated the down move? I'd love to know.
I would like to know too.
Where was Spoos at 905 when you were selling your put spreads?
Down 20, down 18. So I did 2 tranches. So they were down like 20, and then the next one they were down like 33. And I was like, oh, we're still going to turn around.
No, I wish I would have had a tighter GTC because like some point in time, mine were up. Like it did have a little bounce.
Oh, yeah, because you got in right on the open.
No, well, yeah. Well, Spoos were down. As soon as Spoos hit down 19, I put them on. And then literally like a couple minutes later, I saw each put spread was up like $60. Not a lot. I collected more for them for $380 or something. But I thought, well, I'm leaving in my GTC for 50%. But that never did.
We've crossed the 100. We've crossed Spoos down 100. Let's take a look at VIX. Now, this is actually pretty topical. So we traded something in crypto. We traded a future. We did a couple other things. I'm going to go to this. But Kai sent us the recap on the market measures, and it might actually be pretty topical.
Hey, you know what's crazy is Rivian is up, and I do want to look at that. Let's go. I was just glancing through my account to see like what's my biggest loser and what's my biggest winner, and look at Rivian.
Is Tesla up too? I just want to see a vault.
No, I did hear some news in Rivian that they're like making maybe the self-driving chips that can go into everything. Something. Yeah, there is news. Surge as analysts cheer shift to custom self-driving chip. Huh. What a memory.
Oh, good job. Something I'm thinking. Okay, so I'm going to jump into Kai's recap because it's actually topical on today's stuff, but I'm going to throw it. I'm going to give you a little bit of a bone here, Jenny. Okay.
All right.
We're going to go backwards.
Sure.
Meaning I'm going to let you read the takeaways, then we're going to look at the study because it made a little bit more sense to me. Okay, so I'll your about this.
All right, takeaways. Smaller moves tend to cluster. Big market moves are usually rare and independent. Well, I mean, hopefully we all know that. If we're trading, we know like that makes sense. That makes sense. But once one large move over 2 to 3% happens, the chance of another occurring soon after rises significantly.
Okay, so that's what I'm saying, just from this perspective. So if it's 2 to 3%, the chance of it happening again rises a lot. Just keep that in mind, which I actually don't know that I knew that, but I couldn't get there from the numbers that I was looking at. Okay.
Okay. Not only is there a low chance for the market to have extreme moves, there's also a low chance for the market to not balance itself out on a monthly basis.
Okay.
Because, and again, we talk about vol. Like vol pops up, and we say, "Don't worry, it'll come in eventually." Like it comes in.
So watch this. Okay. So then this is daily drifts and monthly moves. Okay.
Mm-hmm.
A historical average daily movement of the S&P 500 has been, give or take, 0.5% in either direction. However, in the past years, we've observed an increase in daily moves compared to historical average. So this is from 2008 to 2024.
But then we observe increase in daily moves compared to historical average. So yeah, bigger increase in 2020, of course, a crazy year.
And I like that they're doing percentages, but it's easier to move when you've got a bigger index. But I'm glad they're doing percentages, right? So like you know what I mean. Right now we're 100-point move. If you were in 2012, that would have been astronomical, right? But they're doing it in percentage terms.
Yeah, I mean, you can see like way back in 2008, of course, that was insane. 2020, sure. But other than that, look at the big move, and that was, this first Q1 of this year. That was that crazy move.
Mm-hmm.
But otherwise, they're pretty infrequent. They're pretty infrequent. So if you look at that, this might make you feel better. You go back to 2008, you had that real big, crazy move. Then things kept itself in line most of the time. Then we had 2020, which is an anomaly. And then, we're 2025 got as wild as, we had that big, crazy move in 2025. So maybe the next few years will be more quiet.
Possibly. We'll see.
That's what my takeaway from this is like, we should get more of a cluster now. It's not often that we have these wild moves.
Okay. So then this is what I like this, because this is the 1%. Remember, that's why I kept saying, are we 1%? Are we 1%? So we have found that moves of up or down 1% or smaller tend to be largely independent, meaning they have nothing to do with each other. However, this is not the case for moves greater than 1%. So that's what I'm saying. This is very topical today, because watch this. This is greater than 1%. Okay. Yeah. Okay. So I just wanted to go through there. Okay. So however, this is not the case for moves greater than 1%, which is what we're living in right now. So this is the SPX daily change, SPX boost, all the same thing. And this is where I was like getting confused with these numbers. The chance of occurring on any day. So move from 0.1 to 0.5, there's a 45% chance of it movement. That's totally normal. And then if you get over 1%, which we're at right now, so there's a greater chance that the following days are going to have a more likely move. Do you see what I'm saying?
Right.
So
right.
the more the higher the percentage goes, the more likely that it is going to happen. Chance of occurring directly after a move of such magnitude.
But it doesn't necessarily mean in the same direction.
No, it doesn't. It's just saying a move.
A move, right. It doesn't mean like we're down 1.5% today, and then we're down 1.5% tomorrow, and we're down it could be down 1.5% today and up 1.5% tomorrow. Like we had that big up move.
We've seen that. Yes, we've seen like the up 100, down 100, up 100, down 100. But it could be down 100, down 100, down 100. We're not saying that's going to be the windshield wiper effect, but that's what we have been seeing lately. So that's why so then here we go. Since 2000, there was a low chance of seeing mostly down days or mostly up days in 1 month. A higher chance of seeing an even number of up and down days, just like this past month. So that's just like your positive drift, right? You've got, it's 51-49. That's pretty even.
Right.
So.
Yeah. Okay.
That's number one. And then there's another study, which I'm also going to go backwards on. Jenny, are you ready?
I'm ready for it. Let's see what time it is. 10:44. We've got like 11 minutes.
Okay, we're going to do this in 5 because if anybody wants to go back and watch the market measures, they can. We've asked for the highlights, and this is the highlights, but these seem to be very in-depth. So if somebody wants to go back and watch them, they can. So this is the impact of market swings on portfolio performance.
Okay.
You know what I think is interesting is sometimes we just need the takeaways. Because if I go back... That's what I'm saying. I just like the takeaways. Maybe we just stay with the takeaways here.
Let's take a look. Position size for crashes for the past 5 years. The market spends 64% of time in your profitable zone, but 15% of the time, 142 plus 180 equals 322 occurrences in zones that can destroy you. Size accordingly. And size kills. We know that. We've been around for a long time. We've been trading for 30 years. The only reason we're still here is because we keep our size in check. Size kills. We've seen many people blow out. I know many people who don't trade anymore because size kills.
Size does kill. And then Asymmetrical risk is real. Downside crashes are 5% are 3.7 times worse than upside crashes. They are. I mean, they hurt worse in terms of max loss. This is why we say stocks take the stairs up and the elevator down.
Yeah.
Okay.
Right. Don't marry your positions. When markets break outside the down 2% to up 3% range, implied vol and realized moves accelerate fast. Have mechanical exit rules.
Okay. And then trade probabilities, manage risk. Since 2020 till now, we were most of the time in the down 2% to up 3% zone. The question is, can you survive the 15% of the time when you're catastrophically wrong? This is like a doomsday scenario.
So I do this in my account. I did it just very recently, where I go through, I will take, you don't see this, a notebook. That's okay.
I was like, I will take what? What are you taking?
A notebook and a pen, and I will go through my positions A to Z and write down the notional value of what I have. Like, even if whatever it is, even if let's say I have 7 short puts in $100 at the $100 strike, then I will say, okay, I could end up getting long 700 shares at $100, $7,000. Like, I will go through each position and write down my notional, add it up, see what it comes to, and see, am I okay with that? Because that's the notional I'm controlling in my account right now.
Would you be, let me ask you this, only because I think this is a fun exercise. If you're talking about notional, I'm just going to go to IWM just because I know they have single strikes. So IWM, like say you are long 100 shares of IWM, okay, which you're probably not going to be, but you are also long this put. What would you consider your notional? Do you consider your notional to the put, or do you consider the notional of IWM?
Oh, no, then to the put. Then it's like a
okay.
strike.
I just wanted to, that's what my favorite thing about options is that you are still controlling, 200 and a large amount of stock, but your loss can only go to the put if you have that put on.
Oh, yeah. Then I, put what's the max loss on that. Your max loss on that from here to there is only, $1,500.
Okay. I just, like I said, I just wanted to be clear because you do trade options quite a bit. Now on a put, that is true because you don't have protection. It's not like you put spreads. You use the term naked put, but when you're using an option contract, like say you have a zebra, which we did in IWM, your notional value there, which you're controlling 100 shares is only 1,500 or 18 or whatever it was the cost of the zebra.
Right. Like if the shit hit the fan and the market had the massive drop, how so
you're taking a snapshot of right now, what is my risk if today?
Yeah, and honestly, like those positions, like zebras, define a lot of zebras, diagonals, whatever. If we have a massive move, I put those in a bucket of all worth zero, right? So
yes, for
that's
sure.
why
like, you're saying notional goes to zero, yeah.
Yeah. So like, and when I'm worried about my notional, it's more like my naked puts or my stock positions. It's not really like a spread or a diagonal because I don't have a large percentage of my account in zebras or diagonals because I know if there's a massive move in the market, those are worth nothing. So I don't want to have a large portion of my account in something that's going to be worth nothing because that's nothing that you could carry over or do anything with. So it's just more naked puts and stack positions.
Right. And keep in mind too, when you are in crash mode. So I'm just going back to IWM because it's easier. And we had gotten ourselves in trouble. I think everybody did at a certain point because I want general market, so go spy.
Oh, Costco only down $9 now.
Ooh, make it.
Where did it open? Where did Costco open?
Costco opened, let's take a look at that. And then I want to talk about this volatility thing. Costco opened, I don't know why I can't get that back.
Around 880.
Here, I'm going to do this. It opened
884.
888 was the high. So not bad.
Yeah, I think, yeah.
But here's what I was going to say too. When you're talking about, this was this year? Yeah, this was this year, right? Okay, this hurt because we got down here. From the high, we fell down to here. And as traders, we're like, ooh, opportunity, meaning that we're loading up on more short puts and more things like that. And then we continue to plummet. That's why this hurt worse. So when you're looking at short puts, you got to keep in mind, in a crash scenario, it'll be a double wound because as we go down, implied volatility increases. And then they even have more theta in them. So That's what I want people to realize too. Like in a crash, everything, the options are great, but they hurt a little bit more in a super big down move than the stock will, because it's going, then those are even worth even more and you're short.
And you talk about like high study when he talks about the big move. So it's not just like one-sided. Take a look at that. As quickly as we got down, we got right back up.
Yep. I mean, this hurt. This was from.
Oh God. Yes.
It's a couple weeks, but that was the most painful couple weeks I've had.
And I'll tell you, the chunk of P&L that took out from, end of February till April 7th, when we got to May 19th.
Wasn't back.
It wasn't back.
No.
It wasn't back. It wasn't back.
I don't think it was back until here.
Yeah, it took a long time.
Yeah, it took a long time.
A lot of work.
Okay, I'm going to check back into Twitter if I can. I'm going to go top down and see if we got to everybody. Oh, Jack Tucker
collected 22,000. Good luck. What? Good luck, Jack. Where's his short put?
Okay, so I wonder what time he put it on. He put it on at 10. He put it on later, so he's probably better footing than we are. This was one of those late ones, 10:35.
Yeah.
So he
might be all right.
His puts are the 6770. Let's go.
Yeah, he might be okay.
He's going to be fine. Jack Tucker again. Look at this guy. He's going to be.
I decided I'm not going to show the kids Jack Tucker yet. I'll wait till next class.
That would have been awesome if you did. So we only have about 3 or 4 minutes left.
Well, I want to make sure we got everything. I got everything pushed out. The last trade we did was IBIT.
I'm closing this, Jenny. We have 7 days left in a put spread that we are barely just chipping away at, but we've got 7 days left. So I'm going to.
Fine. If we wanted to stay in Etsy, we could go to January.
Oh, wait, hold on. I'm going to clear this out. This might be wide market. I'm just buying this back.
Oh my gosh, that's so funny. When I said if we want to stay in Etsy, we could go out to January, and literally my phone just popped up a notification from Etsy, like, don't miss this stuff that you were looking at.
Really?
Yeah.
I'm just closing our single option. I just want out of it just because if we look at this.
Why don't we just roll it? Why don't we roll it to Jan?
Jenny, I can't close it, let alone roll it. Watch this. Closed position. The markets are so freaking wide. That's my bid, by the way, or that was my bid. And then if I was going to roll,
you're not going to get anything on that out of the money one. You basically have to pay $190 for that put to go.
Yeah, I know. And so if I was going to go, it's 55.45. I'm going to roll it. Look at this market, 90-cent. Maybe I might be better off rolling it.
Yeah, if we can get $1.20, keep the same spread.
You can't. This is the problem. You can't roll it because of this option contract right here.
Okay. Well, do whatever you want to do.
I was just trying to close the one. I mean, because it is a scratch.
Just cancel and you can buy. Just roll the 50 put. Just roll the one short put, and then you could buy something. You know what I mean?
So we're getting 159.
Yeah, and then you could buy the 45 put if you want to release buying power.
I don't think we're going to get this. That's what I'm saying. These markets are so freaking wide. Nothing makes me more mad.
Well,
there we go. Now I got to buy something.
I mean, do you have to? Yeah, I guess you're getting $1,400.
There we go. So Etsy's rolled out in time. So push all those out.
I'm going to get that pushed out. So today we did, ZB, IBIT, and Etsy.
Activity. So all symbols today. Let's see. So we closed our Costco, which was a good one. We rolled our ZB and widened it a little bit. We put on an IBIT. So we did one futures options trade. We did a crypto trade. We rolled Etsy by doing it in 2 separate transactions. Mm-hmm. Good.
Yeah.
Jenny Andrews. So prediction time. What do you think the markets? Where do you think we're going to be at 3:00 today?
I'd like to say
I'm going down 50. I don't think my stock. I don't think my put spreads are coming back, but I do think we're going to be down 50.
I was going to guess down 60. So we're both thinking the same thing.
Yeah.
Well, yeah. I don't know. It's not terrible. I hope we're not down 150. I hope we're down 50 instead of 150. So we'll see.
Me too. All right, Jenny, we are done for the week.
We survived the week.
Please take pictures of Modalita and put it on Twitter for us. We need to see her. I need to see her.
She's cute. She's cute. She's she's very cute and very good. Although she escaped already once from the basement.
Hey, listen, it's not her fault. Someone left the door open.
Yeah.
She's not an escape artist. Someone left the door open.
All right, everybody. Have a wonderful weekend. Remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show.
We'll see you on Monday.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
tastytrade is now on TradingView. Trade stocks and futures directly on TradingView charts with tastytrade's low commissions. Try it out and leave us a review.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
tastytrade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
tastytrade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. tastytrade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. tastytrade, pro-level tools, intuitive design, total control.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at tastytrade.
I got a good, good feeling. I got a good feeling.
Yeah, I love this life and I'm living it up. You can't stop this dreamer. I'm a mad, mad hatter. Call me one of a kind. I'm a true believer.
I got a good, good feeling. I got a good, good feeling. I got a good, good feeling. I got a good, good feeling.
I got a good, good feeling. I got a good, good feeling. I got a good, good feeling. Yeah, I'm up with the sun, soaring high as a kite. Call me an overachiever. Leaning off of that edge, don't need a green light. I got that fever.
I got a good, good feeling. I got a good, good feeling.
What's up, Tasty Nation? Welcome back to the show. This is Options Trading Concepts Live. My name is Mike. I'm here with Jamal. And it is a Freaky Friday. E-minis down 80, NASDAQ down 500, Bitcoin down 1,700. Big red day in the market today. And I'm 0 for 2 on those earnings trades we placed, which is just really sad. What did I do to deserve this?
I don't know. It's like they know. I mean, you know how this goes from time to time. This is exactly why I just try to go like the same direction all the time. This is exactly what I'm talking about. I mean, like, who the hell knows? Oddly enough, my strangle, I'm still here. I'm still alive. It actually worked out really well. The strangle worked out really well. And I actually rolled one of my put strikes up. And I'm up 50% right now. I'm going to take this thing off by the end of the day.
Love to see it. Yeah, we had Lulu up 20 points, almost up above 200 again. And Costco continuing its slide down 11 points, down to 873. So yeah, double whammy there. But both of those calendar spreads, I had a 910 calendar spread in Costco and a 165 put calendar spread in Lulu. But both of the long options are out in January. So we can look at some potential defense that we can deploy in just a couple minutes here.
Yeah, it's an interesting, just besides those two earnings plays that we had on, I also had that 910 calendar spread, as you know. Besides that, it's been an interesting risk-off day. It's funny because oil did turn positive, but that was also red. But the list of red goes on and on. I mean, you're talking equities in the form of all 4 major indices. And let's not forget that the Dow and the Russell were at all-time highs prior to the open today. You got Bitcoin down, of course, once again. You got a lot of major currencies down as well. Dollar is positive today, but a lot of major currencies down. You got bonds down as well, and a decent move. I'm actually trying to get in a call spread that I know I've been talking about for the last several sessions, but I'm actually going to try and do it now. And yeah, it's just a lot of a complete risk off. Gold and silver were positive. Those have turned red. They might be turning back positive now because as the show we're starting a little rally here, but very risk off day. And I think this was not on anybody's bingo card coming into the trading session.
Yeah, it's a little surprising given the interest rate decision, vol crush, 50-point rally. Could be a head fake because now we are significantly lower than we were yesterday. But like you said, silver down almost 5%. This thing's been super volatile. It's looked like gold did a couple months ago, but silver leading the charge, down 4.8%. Ethereum down 4.7%. Natty Gas continuing its slide here, down 2.3%. And then, of course, NASDAQ, Bitcoin, the other indices, E-minis, Dow, Russell, all down. Really nothing here other than platinum futures, interestingly enough. That one bucking the trend relative to gold and silver. up 2.3%, 2.4%, and then volatility up 3%. But this is still a non-move to me. I mean, up 50 cents in the VIX futures on a move like today doesn't really sound the alarms for me. But we'll see. That can change. To your point, lots of equities moving. We can take a look at the NASDAQ 100 list down from a percentage change standpoint. AVGO down 43 points, 10%. Huge move there. And I guess I'm happy I avoided this one because I wanted to play this inside up. But we're seeing the same exact move in AVGO that we did in Oracle. So could be a big sector sell-off here after a couple of duds from the earnings announcements. But MU, AppLovin, Marvel, AMD, a lot of these products down 3, 4, 5%. You can see here, everything on the screen is down over 2%. And if we look at the upside moves, just Lulu. Just Lulu up 10%. No big deal. But a lot more names that are up only 1% or less, where you have a ton of names that are down more than 2%. So this isn't just a couple of names, bending the narrative here. There's a lot of products that are selling off in a pretty substantial way here.
Yeah, I got a lot of observations. Wait, go back down to the bottom there, though. This is actually not part. I was just curious. It does look like some of those names that are up in the NASDAQ today are some of the more hated ones more recently, right? Like Lulu, Adobe. I haven't paid enough attention to the others. I guess Netflix is one of them, too. So that's kind of interesting when you look at that. That's not in a vacuum, I would say. But, yeah, as you rightly noted, I mean, look, Oracle, AVGO, not so good on earnings. And let's just call it what it is. This cycle of earnings for those big names, most of them did not go well. Meta, Microsoft, the list goes on and on. Google went well, I think, from what I remember. But most of them didn't go well. And that's what I was in the back of my head as we were talking about earnings for those, for not just solely for AVGO, when we were at the SIBA. And I'm like, you know what? Let's just wait and see what happens and make a play after earnings. And sure enough, you've been able to do that. I actually did a Super Bowl in here out in February after earnings today. Yeah, I mean, it's, why not? I mean, let's just see what happens. And February is certainly more than enough time. So, I think I did. What did I do? I did the I did the 380, 370 put spread combined with the 420, 440 call spread. So I was looking for a little more upside now. I think all-time highs is like 414. So obviously I'm looking for some more higher than that. But again, it's going to February. We'll see. We got 70 days. We'll see what happens. It's not been good for a lot of these big tech earnings. And I don't know exactly what they said. I don't know. I thought they said something about what did they say? The guidance wasn't necessarily that great. I think. Did I read that right? Oh no, they had strong quarterly results and guidance. But I guess there's concerns about backlog and margins. I guess it's the minutia now with these earnings, right? Like with these big guys. That's the crazy thing about it. It's the little things that they're getting dinged on. I think for most of them on these earnings this cycle.
Yeah, I mean, you saw like a lot of these companies just had these moonshots. Oracle 2 months ago was at 350. Now it's at 180. AVGO still near highs. Got as high as, let's call it 410-ish. Now we're at 360, but it's a bloodbath out there. And I
saw that stat today about Oracle. It went from being up 100% on the year to only being up 10% on the year now.
Yeah. Crazy times in some of these stocks that are moving around like stonks. But yeah, if you wanted to get in or you want to take a stand here, like now you're at much more reasonable price points in Oracle, AVGO, of course, selling off pretty aggressively, but still, all things considered, a discount from the highs. But yeah, we'll see what we can get on here. See if you guys have any trade ideas for us. This is a full Q&A session. If you want to join us on the YouTube channel, just head over to Tasty Live. We've got the video streaming live front and center on the homepage on the Tasty Live channel there. But throw in your trade ideas, questions along the right-hand side chat. We'll get to them right now. But yeah, I was looking at this portfolio. not much to be happy about here, but this SPX positions we put on. So I had this Super Bowl here, bought the 5-point wide call spread, sold the 10-point wide put spread here. It's still out of the money, but getting tested on the put side. I'm not going to adjust this position really at all, but still interesting to see that this big sell-off is much greater than expectation. We definitely did not have a 70-point implied move yesterday going into Friday. So this Iron Condor, a nice wide one. I'll keep this on. It's actually coming in nicely today after the initial rally, but yeah, I'll keep these both on, see where we end up, but I'd be happy to take a stand to the upside here. I know it's a big bloodbath here. Some people in the YouTube chat talking about another Black Friday sale. Way to think about it.
Good one.
But yeah,
I think it's a great area to take a stand, honestly.
Yeah. I mean, especially when you look at volatility, like nothing has changed. We're still in contango. Pretty steep contango between the Z, F, G, H contracts, like all the way through the J contract, we're in contango. So this sell-off paired with a lack of movement in volatility, I've said it time and time again, anytime we see this where we have a decent sell-off with no move in volatility, I'm much more inclined to take a stab at a reversal over the next couple of weeks. And we're kind of getting that opportunity here. So we can set something up for sure in SPX, but I'll defer to the YouTube chat if anyone has any buy the dip trade ideas in SPX or SPY or the Qs. I'll see if we can get one on here.
Yeah, I had a super bear. I don't know if you remember, but I had a super bear in SPX, short the 6,900 to 6,910 call spread, and I was long the 6,800, 790 put spread, and I just was able to take that off today for $300. Initially, I think I put that on for like $2.50 credit, I think, and I was able to take that off today for like 70 cents. So that worked out really well. I didn't expect to make full freight on that thing, so it was a good opportunity with markets down like almost 100. I was able to take that off, and that worked out nicely. I've been trying to find the right Super Bowl to put on. I just didn't do it. And looks like markets have bounced like 25 points here. But if they head back down, I'm definitely going to try and aggressively put one on. I also added another calendar. I like the idea of the calendar between today and tomorrow. And so I added another one. So that's the other reason I wasn't super aggressive, because I already added, not only did I get long vis-a-vis taking off that super bear, but then I also added a calendar in SPX on top of the one we did the day before. I have the 6870 calendar. Today's short and long Monday 6870. So I got that going on as well. So at this point, I have and I still have that. Remember that Iron Condor I put on for $250, 6850? Still got that on. And initially I'm like, yes, we're getting 6850 and then 6800. And then it was like, oh, damn. So I still got that on for the time being as well. So, I'm feeling pretty good about the SPX trades. We'll see how things settle up here.
Yeah, I like the shorter term calendars. They're, a great way to get exposure to slight directional risk without putting out a ton of capital. So, I think it could be interesting to get into something like a 6,900 or 6,850, like just an inside up reversal here for next week.
100%.
But you could get long Tuesday and sell Monday. You can do, the one I have pulled up here is long Tuesday, short Monday for $500. If we open on Monday, like up 30, 40 points, this would be a nice trade. But you can mess with this however you want to. But getting long like next Friday, short Monday or Tuesday or Wednesday, like that's another way to do it. But like we've said many times before, with these shorter term trades, we're just going to keep our risk super small, because you don't really have much defense in a trade where your long option is only 4 days out, even though you're reducing basis by a good amount here, almost 40%. Still, not much you can do if the market continues to sell off because this long option will lose value as well. So I kind of like this shorter term one. Long Friday is a little more expensive. You can see here the long option would be $2,100 as opposed to $8. But if you have more risk to take, I like going further out in time. You just have more days for the market to work in your favor. But yeah, you're still going to have.
I mean, real talk in life, who doesn't want to be long Friday? Everybody is long Friday.
Mm-hmm.
And I'm not even talking about options, I'm just talking about real life. But you're right. I do like the idea of the trade. I think you could definitely do a couple of these. Yeah, the idea of, I actually like Tuesday better than Wednesday too. I would totally go long Tuesday and Wednesday. Actually, guys, don't pay attention to me. I'm actually not talking about trade. I'm just being a silly ass right now.
Yeah, don't mind him. He's talking about real life, being
real
bullish
pace.
on Friday.
For sure.
But yeah, I mean, of course, it's just a trade-off. The more days you add, the more costly it's going to be. But you have less implied volatility crush exposure, and you've got a less sensitive trade in terms of P&L against you, we'll say. Still can make similar to the same amount on the upside. But I'm going to throw this on. I like the idea of the long Tuesday,
Wait, hold on
short
a second.
Monday.
I just thought about this. I was just checking to see if there's actually any catalysts. I think there is a non-farm payroll. I don't know how much this matters. And I don't even remember. I'm not exactly sure how up to date these are, but I think there actually is a non-farm payroll on Tuesday. I just realized that. Just so you know. That's how weird things are nowadays. We almost got to check these. Yeah, I'm seeing there is a non-farm payroll on Tuesday morning.
Mm-hmm.
And again, it's late data. I don't know how much it means, but that's actually an interesting proposition.
That'll help me for sure.
Yeah.
Just because, and it helps me in the sense of if there is premium priced into Tuesday's expiration because of this report, on Monday, the premium on the Tuesday long isn't going to collapse. It's the same idea as like buying in an earnings cycle. If you're doing a calendar or diagonal spread, if you're long options in the earnings cycle and you're selling something in an expiration that is prior to the earnings cycle, your long option isn't going to lose as much value because there's still implied volatility value until the earnings announcement happens. So same thing with this. 7:30 Central, there's an unemployment report on Tuesday. So on Monday, that implied volatility premium associated with the unemployment report for Tuesday will not go away until Tuesday morning when the market opens. So, and that could move the market higher.
You're doing the 6,900 call spread? Calendar spread?
Yeah, 6,900 calendar spread, long Tuesday, short Monday for $500. It's flying around, so I'm just going to leave it. The market's rallying.
Yeah, I'm going to do that with you.
So I'm going to leave it here at $5 and see if we get a 10, 15 point sell off from here. But if not, I still don't mind paying up for it because my thesis is Monday we open up 20, 30 points and this trade will be a decent winner.
Yeah, I like it. I'm trying to get it as well.
But yeah, popping over to the YouTube chat. Let's see what we got here. Yes, we are trying to scare the children. I'm wearing all black. The market's red. CMG is very green. I mean, yeah, it's not red. So I guess it's
well, again,
more green
I
than
think
others.
That speaks to what I was saying to before. I feel like a lot of the hated stocks are actually rallying today. What's Kava? How's that doing? Oh, look at that. I mean, these are the kind of dislocations you see on a day like this. It's definitely buy the hated stuff day.
I do love Kava. Great.
That tells you we're not
spot.
going to go down 200 is what that tells you. We're just going to be down 100 at most.
Yeah, I mean,
you like Kava? You like Kava? I don't think
I do.
I've only had it at work, actually.
Oh, you got to go. You have to go to the actual place because the work bowls are preset. Where when you go there, you can get as many toppings as you want. You can get every single topping on your bowl, and it's very customizable. So yes, love it. But yeah, I mean, the markets are down, volatility's not moving. We've seen this many times before. It can shift. Like if the market continues to sell today and into Monday and into Tuesday, you will see a shift in volatility. But right now, the market isn't pricing in a continuation of this move, given the fact that volatility is just not moving. The VIX is up a little bit, but we're still at 16 VIX. Like I don't look at this percentage as much when we are in the mid-teens in the VIX. Like this is still very low.
Big difference too between that roll market. I know you mentioned earlier. People should know that next week regular VIX expires. Regular VIX. December VIX expires, and then January will be the front month. There's a 5-week cycle in this situation. Typically, we'll have like 4-week cycles. So this January VIX is going to be around like a week longer than our typical VIX future is. Something to take note of.
Indeed. Continuing on the YouTube chat here. Again, if you want to join us, just head to Tasty Live's channel. Kyle Pitts is the Antichrist. Yes, Stock Messiah. One of my buddies is in a playoff matchup, and he was like obviously excited because Thursday Night Football was last night, kickoff to fantasy playoffs. Unfortunately, he was playing against Bijan Robinson and Kyle Pitts, who both had a total of 75 points between two players. So he's like, I'm basically done in this playoff matchup, and it's just Thursday.
Yeah. It is that time of year. Yeah. I know. I saw it last night. I'm like, what? This dude had like 100. And like Pitts had like at least 100 yards. I can't remember if it was like 120 or something, but 3 touchdowns. Wow, craziness.
Yeah. And it's funny because Kirko Chains, baby. You like that? Kyle Pitts has been funny because he's been every year before football starts. He's been the talk of like, ooh, this is his year. This is finally going to be his year. And this year he still didn't do anything. But now, first week of playoffs, he has the game of his life and nukes anyone that doesn't have him. But yeah, we'll see.
Yeah, wow.
We'll see. Restoration Hardware, keeping this market propped up and slipping into oblivion.
What did that end up doing? Oh, it is up. Look at that. Wow.
Look at that. It was up even more.
Was it? Oh, wow.
It's pretty crazy here. Opened around where we are now, up 6%. It got all the way up to 173. So this thing was ripping. It's sold off since then, which is not kind of troubling if you're bullish, I think. But yeah, definitely interesting. It goes exactly with the narrative that Jamal pointed out of these stocks that nobody has cared about somehow finding a bid. Which
the hated stuff is being bought.
Yep. Little rotation. Can you talk about your upcoming MES strangle for 2026? How will you set up and manage this?
You know what? Today might have not been a bad day to put that on, honestly.
You're right. You're not wrong. So yeah, I mean, high level, I'm just going to run the same thing that I did with IBIT. So in IBIT, basically just had a strangle on the entire year. Started with a 50-70 strangle all the way back in the end of December last year. Sorry, 50-65 strangle for $500. As you can see, I've rolled a million times, picking up almost $2 every single time. Started with $500, got to an exact $3,000 in credit received, and we're up about half that credit received overall. And that's with right now I have a 65 straddle and IBIT's at 50. So even with this big sell-off, still a nice profitable position. Wish it was better, but we'll take it at the end of the day. And if you look at where this product opened in 2025, right around where we are now, and I've collected all the implied volatility value of this rally in this range. So my whole thesis with that trade was that I was not going to have bearish delta. Of course, you can't control that completely, but the whole idea was if I have a strangle on 50-65 and we rally up to 65, I'm not just going to leave my 65 call and roll the put up to lean short. I was going to completely shift the trade so that my short put was then tested and my short call would be up here somewhere. So that's one way to make adjustments like that. And you can see I did do something like that. So I had a 55-60 strangle and I was tested on the 60 strike. So I literally just moved it up. So I rolled from a 55-60. There's the SPX fill, $5. 55-60 strangle to a 60-65, and I just collected a small credit. So you don't have to underhedge if you don't want to. If you don't want upside risk, you can just, if you're tested on the call side, you can just shift it so that you're tested on the put side and you move your call up. And you can do that for a small credit, and you're not necessarily improving your credit received in a big way, but you are adjusting your delta in a pretty static way. And there's nothing wrong with that. Like, especially if you have a year-long assumption and you don't want to have upside risk, like you can do that in SPY, you can do it in the Qs. And given the way that these markets have moved, like even with all of the violence we've seen this year, we're still up 20% on the year, almost. So with volatility low and interest rates being cut, I don't want to be necessarily super bearish into next year. So whole idea is I'll have a strangle on. If I get tested on the upside, I'm just going to shift the whole thing up and assume that we have a similar chart like this next year until proven otherwise. But even if we don't, I'll have some kind of defense with a short put. I can roll the short put down and out. I'll usually maybe do that once if I get tested on the downside, roll it down and out, and just make sure that I don't have too much risk on the upside. And if we get tested on the upside, I'm just going to shift the whole thing up higher.
Now, do you just wait until 21 days on these to adjust, or is it when you're tested by XYZ%? Like, when do you typically make your adjustments?
Yeah, I'll usually hold it till around 21 days. Unless I'm tested on the upside, then I'll just move it up, because that adjustment can be done regardless of time. So a real example would be like, let's say I've got the 6,700, 6,900 strangle on, and I buy it back for 16,775. If I was rolling it out to the next cycle, let's say I was going from Jan to Feb, and I'm just trying to replace this debit, I could go to like the 6,800, 7,000. You can see I would pick up a credit here, which means maybe I could do something like this, like moving it up. So here I'm tested on the upside on this Jan strangle, 6,900, 6,700. Now move it out to Feb, roll it up 100 points. So I'm now at the 6,800, 7,100. Roll the put side up 100 points, roll the call side up 200 points, and still pick up a credit. Like, this is what I'm talking about here. And then let's say I roll out to this cycle, market continues climbing up to 7,100. I would just buy this back and move my put up to like 70.75 and move the call up to 72.50. Like whatever adjustment I can make to do it for a scratch, that's where I would go. And then at the end of the year, you're left with however much premium you've got. And if the market has gone up and to the right, you're going to be fine, because you would have been making those upside adjustments to eliminate upside risk, and you're just going to be left with the premium received. So whether or not the premium received is greater than buying and holding, that's going to be the question we're going to find out at the end of the year. But with a strategy like this, if you're moving to the upside with the market, the only scenario that's going to be a situation where you would have made more if you just bought this like SPY and held it is if SPY is up 25, 30%. If it's only up 5% or 10% or 15%, you can likely perform better with the premium associated with these strangles, because you're going to be able to collect that amount. Like right now, if we look at SPX through the end of the year, next year, the December 18th, 2026 cycle is pricing in a 23% implied volatility. 1,000-point move on a $6,800 product. So as long as it doesn't go higher than that to the upside, you will be able to pick up a decent amount of premium, and you'll be okay. It'll be a winning trade if the market's higher, because you're making adjustments to offset that risk. So again, we'll see. Not going to pick up as much premium as something like IBIT, because IBIT has had 50% IV the entire year, but MES, you can still make adjustments, and I'm excited for it.
Yeah, I think I'm going to start mine today in MNQ. I'm going to start the process.
Cool. But yeah, near the end of the year, I will do a more formal write-up and give you some guidelines as to how I plan to manage it.
Awesome.
SPX Broken Wing Butterfly, Jan 16. Let's see. Long the 6450, short two of the 6600s, long one of the 6650s. Jan 16th AM. Yes, AM. All right, let's see. $66.50, 6,600, 64.50. Very wide here. But yeah, picking up $1,000. As you can see, we've got tons of positions in SPX here. But yeah, I mean, I don't mind this position. You just have to, this is a $10,000 buying power and a $10,000 max loss if we get down to 64.50, which is about a 400-point sell-off from here. So it seems like a far ways away, but I mean, we're down 80 points right now. So definitely possible. But I do kind of like putting this on in an environment like this where we're down 80 points, because if you get a reversal and we go back from 68.25 to 6,900, this long option is going to lose a lot of value. And you might have the ability to turn this into a symmetrical butterfly, remove a lot, if not all of this risk, by rolling this into the 65.50 put. So like right now, the difference in price between the 64.50 and the 65.50 is about $1,000, and you've collected, if you place this right now, you would collect $900. So assuming that if SPX rallies 100 points, making that roll from 64.50 to 65.50 is likely going to cost less than $900. And if you did that, you would lock in whatever the difference is. So let's say it costs you $700 to make that roll. You would keep a $200 net credit. You would roll into a 50-point wide symmetrical butterfly with no risk. You'd free up that $9,000 buying power as well. And you'd basically leg into a free downside hedge in SPX. So I like it, but still an expensive trade because this can be a max loss as well. I'm in a Natty Gas Iron Condor. What point do you roll the call side down? Oh, the same one that you have?
Probably. Yeah, I'm in the same situation. I just, I honestly, I don't feel, and again, it's the 380, right? And so I have the $4, where's my net gas position? I am, and this is 46 days out, but it's the 380 put spread versus the 620 call spread. Look, there's no reason why you can't, honestly. I just prefer not to, but there's no reason why you can't. You can totally roll that down. I was actually analyzing the idea of rolling that call spread down to the 520. I just didn't do it as a result of the day. I mean, it's been such a steep fall. So honestly, I just want to see if there's going to be somewhat of a bounce back. I mean, this has been a huge steep fall over the last couple of days here. And usually when there's multiple days in a row like this, and again, this is still a solid 46 days out. So I'm just, sitting in and waiting for the time being. I'm not really in a rush to roll down, but you certainly can. I mean, mechanics certainly, if that's your mechanics, you typically do. I typically don't like to roll down that often, especially when I see a steep move within a short time period. And I have a longer term in this trade. So I'm going to wait a little bit, honestly.
Yeah. I mean, if you make this adjustment, so if you roll down into this huge sell-off, you're moving your risk from 6 down to 5. You're picking up $130. But you have to remember your initial iron condor was probably like a 60% pop, something like that. 50% pop, whatever it was. Yeah, 65. Yeah, 60% pop. Here you go. If you make that adjustment, and you arrive at a 5.52, 4.38. Now, because your spreads are significantly closer and reflect, a more narrow range, your pop drops down to 35%. So to Jamal's point, I think if this is a strangle, I think it's easier to make adjustments with Delta because you're getting so much more credit. $120 to move down into this big sell-off, not sure I would feel too good about it either. So I think if anything, I might just buy back the call spread in case this is a violent reversal back, and then you have no upside risk that's kind of hindering your value back. So yeah, I think you just hold it, or you just get rid of the call spread. I agree with not moving it down, especially with the move that we've seen. But you're still right at the money, all things considered.
Yeah, and again, there's 46 days left. Yeah, you're actually right. I probably should just get rid of this call spread because there's not a whole lot left in here. $230, whatever. I'm not even going to realize most of that, honestly. Yeah, exactly. 46 days left, so no, I'm not in a rush, and I'm certainly not going to roll down.
Yep. AVGO, poor man's covered call long term. Buy the June 360 call and sell the Jan 390 call. Okay. So an at the money long-term diagonal spread. So a 30-point wide paying $4,500 with a plan to crab it or roll out the short calls every month. So just from a theoretical standpoint, if we look at your potential P&L here, you do technically have upside risk on this trade because you're paying $4,500 on a 30-point wide spread. So you're paying over the width of the intrinsic value, which is why you would have risk up here. But in theory, it's not really going to play out that way because your long option has so much extrinsic value that even if you do get a rally to 390 or 400, you can see here the P&L Theo, even without killing any of this premium in the short option, still a positive value. As long as you don't have a gap up to 500, like you'll be fine. But yeah, I don't mind it. You have, if we just look at the time frames here, if you sold Jan and let's say AVGO just settles here or continues lower, you can roll from Jan to Feb, from Feb to March to April to May, and then eventually you just arrive at like a vertical spread. If you go to May or if you go into June, it's going to be basically a vertical spread. But yeah, I don't mind it as a shot taking trade, but still a little scary given the violence of the move to the downside, and $4,500 is still a good amount of money. But yeah, from a structure standpoint, I think it's okay. I think if you're more cautious and you're just trying to see if you can buy the dip in a quicker way, I might go more near term or do something like a calendar spread as opposed to a wider diagonal spread. But yeah, something like a 360, 390, you're paying $2,100 if you're long Feb, short Jan, and this will pay you a similar amount, if not more, if you get a rally or reversal in the near term versus more long term.
Definitely agree. I would probably go more near term, and not sure of their risk tolerance. They're probably a little nervous of putting up $2,000 with a couple of months to go versus $4,000 further out. But honestly, like Mikey is so right. It's probably much more attainable, honestly, and you don't have to worry about as much as the upside big move. Honestly, you'd be better off.
Mm-hmm. Fiserv. Good to see Fiserv get a little something.
Again, trash getting bought. People are buying trash today, essentially, is what's happening.
Yeah, it's crazy.
Yeah, this is weird. I mean, this is really strange to see this today. It's almost like an end of the month type of sort of a rebalance or something in a way. Again, seeing this type of action today.
Yeah, it's always weird when you see the value going into stocks that nobody has cared about. Feels a little ominous, but it's how the world works here.
Yeah.
But yeah, MES strangle, MNQ strangle is what Jamal's going to do. So it'll be very interesting to have the comparisons there, because MNQ, you'll have a little bit more implied volatility and realized volatility. Obviously more tech related, but we can compare and contrast as we make adjustments through the year. Hood. I've got the Jan 26 short 135 call and the 125 put in Hood. So kind of a calendarized strangle, it appears. Already rolled the Jan 135 from D's to Jan a week ago. Not sure what to do now. Well, I think your next move would be to just move them both into the same cycle. But let's take a look. You're at 119. You have the Jan 135 and the D's 125. Yeah, so I think your next move is just moving them to the same cycle. If you buy back the 125 for $700 and you move it to Jan, you're picking up $400 right there. So I would do that. You're slightly in the money, but it doesn't really change the situation here. You're still picking up premium if you go from D's to Jan with that put, and you would ultimately get back to a strangle where you have a 125 short, 135 short call here, and you're just leaning slightly long. I don't think you need to make any more adjustments outside of that, but if you can let us know what your total credit received is, that would help determine what to do next. But I think that's an easy one. Just roll them to the same cycle, so you're looking at the same expiration, and you pick up $400 doing that.
Yep.
Who do we like this Sunday? Buff at Pats. Also, what are you guys doing in GDX? Let's start with GDX. While I think about your question, football related. GDX, I actually had a GLD long call diagonal spread, and I closed that yesterday for $325 winner. That offset some of my losses that I've had in GLD throughout the year, but that's basically where I'm at. I think buying them back up here at highs doesn't feel as good as buying them down here at 370, 360. But GDX, much smaller product, selling off from the highs today. It's just really a matter of do you think these products are going to continue significantly higher? If so, you can play for it with a diagonal or calendar spread, but I would definitely stay defined risk in here, because regardless of whether you're looking at platinum, gold, or silver, you do still have plenty of realized volatility. Like GDX has gone from, over the last 2 weeks, it's gone from 67-ish to almost 90, 15-point range. In the last week, it went from 80 to almost 90, 10-point range. If you look at implied volatility, even though implied volatility is higher with an IV rank of 61, we're still not seeing implied volatility reflect the realized moves and ranges we've had. So with that said, I think you just stay defined risk unless you're trying to like pick up 100 shares at certain levels or short 100 shares at certain levels. That would be the exception if you're just using a short put or short call. But what is your thought here?
GDX? I haven't traded it much, honestly. Yeah, it's not something I just prefer to trade GLD more than anything. I just think it's just a more direct exposure. It kind of moves more like gold. You know, the miners are a little bit different. So no real opinion.
Yeah. And as for your football question, it's hard to pick these winners in these games, but I think I would just go straight to Stephon Diggs prop bet. I did that last time they met. I love the revenge narrative because the revenge narrative isn't something that they're necessarily pricing into props, but you got to believe that Drake May is just going to pepper Stephon Diggs against his old team at home.
Which happened earlier this year.
Yeah. He had like 150
Buffalo
yards.
Yeah, he did. Yeah. And Buffalo was favored by 7.5 and they lost that game at Buffalo. Now they're I need some data on this. Now they're at New England. This is just like we do in any other trade. You got to have some data. Like you said, it's hard to predict, but you need data. Now they're at New England and Buffalo is still favored by 1.5. The only thing, besides Stephon Diggs, obviously, the big thing I think that would shift this trade is if Tom Brady is doing this game somehow. I'm not sure what game he's doing this weekend, but if he's in the booth, bro, New England for sure.
That'd be amazing. I'm sure the schedule's out there somewhere.
Yeah, I'm looking
can
right
find
now.
it.
Yeah, I'm looking. You can go ahead.
Does Tasty give you yield on collateral held? So you can move cash into interest rate products pretty easily, and it doesn't take up too much buying power and to do that. But in terms of idle cash held, not necessarily. But yeah, you can move in and out of interest rate funds. You can even get T-bills on here too. If you look at the fixed income tab here, you can see a bunch of different stuff. But yeah, it's going to be more of a manual selection if you're trying to move in and out of products at this point in time. But if you check that out, you'll be good to go. Tasty FX just getting killed here, trying to buy $1, but the dollar keeps crushing me. I only have a 2 micro lot position. I guess I should say a 10 micro lot position now. 2 tranches at 5 each, down $150 on the long dollar short franc, and then I put this euro franc on yesterday, down $4. But yeah, we need the dollar to figure it out. But still, these are 2 very small trades, and we'll be okay either way. Let's see here. I go with in the money long leaps and sell the weeklies against it. Personally, just like this trade, one of my better ROI trades of the year, beat out short puts by a lot. Yeah. Yeah, the long call can and will offset and outperform a short put if you get that bullish move for sure. Like diagonal spreads, we see it all the time. Like if you have a bullish diagonal spread or even calendar spread, you can make the same or more as a short put with a fraction of the risk. The only difference is if it's a losing trade, you don't have nearly as much defensive tactics that you can deploy. Where a short put, you can roll it out in time perpetually. You can roll it out and move the strike down. You can do so much more versus a debit spread. Like if you have a call debit spread, diagonal spread, calendar spread, and the stock goes down, it's going to be a losing trade. And you need that thing to recover before your long option expires. So definitely more bang for your buck if you are right, but less defense if you are wrong.
Yep.
Oracle Strangle with IVR staying bid, 162.30.
I wouldn't talk you out of it. You do what you feel. I just personally like doing the Iron Condor, which is what I did put on yesterday. But I mean, Oracle is Jack, and it's been Jack for a while. maybe you get it. Maybe you get an opportunity to sell a strangle, and maybe these names have calmed down to this point. At this point in the year, maybe they just coast for the rest of the year. Who knows?
Yeah, I mean, 160 would get you back to May levels, and 230 would get you above the recent point it just sold off from. So I don't mind that range at all. And in terms of buying power requirement versus credit received, it's about $300 in credit received and $1,900 in buying power. So still a little hefty. I would like to see 20% return on capital potential, which would be closer to $400 in premium. But if this is a trade you want to do, like I'm not going to talk you out of it. Still, I think you have plenty of management opportunity if you get tested to the upside or downside here, with implied volatility around 50%. Still decent. Any updates on live cattle? Great question.
I haven't looked at that in a while.
LE live cattle. Wow. Yeah.
Jeez. This thing's volatile, huh?
I know. So it was like back here, this is the screwworm epidemic. Then we sold off aggressively. Got all the way down to 200 almost. Now we're back at 230. Like this thing's been crazy. And implied volatility is still in the 20s. So
yeah, don't
regardless,
that's weird.
Very weird. It's been a great trade for us this year. I've made a good amount of money here just doing defined risk stuff. And you can see like it's almost all just calendar and diagonal spreads, like buying the 215 calendar spread, buying the 235, 236 diagonal spread, just a small diagonal spread there. Did it again. But yeah, it's been a nice trading vehicle. But I think this is a great example of when you see a chart like this thing's flying around like crazy, and then you look at the implied volatility of 20%. It's an easier trade to get into a defined risk diagonal spread or calendar spread here, because you don't have to put up much value at all. And the nice thing is these actual contracts, the LEG6 accounts for 2 expirations and the LEJ6 accounts for 2 expirations. So if you're trying to do a diagonal spread, a traditional diagonal spread where your long and short options settle to the same contract, you can do that with these expirations. Like you can buy the 56-day and sell the 21-day, and both of those legs settle to G6, which will ultimately give you exposure to the same contract. Same with the J. You could buy the 111, sell the 84, and you are settling to the same contract. So it'll feel like a regular diagonal spread or calendar spread versus getting long the J and short the G. Now you have 2 different products that can move, and that kind of separates your risk. So I'll wait for Thomas's report on that on Tuesday. We'll see if we can get more info on what's going on here. But it's been a good vehicle this year.
True that. It's kind of funny that when you look at the cattle versus the hogs, and volatility is what, 20 for the cattle. We just noticed it's like 22, 23 for the hogs. Does that mean like hogs are 10% more volatile than cattle? I'm trying to figure it out. It's true. I guess they are a little more volatile.
Yeah, I mean, some of these things have been just crazy. Like even corn, wheat, just lots of volatility in some of these ags and products like lean hogs, live cattle. Even the hogs are flying around.
Literally. It's also going to be appropriate for the next couple of months here to be able to say fly like a G6. Since we got the G6 contract, baby.
Right when I said G6, that song came into my mind, and you could see that I paused, but I didn't. I refrained.
I had to do it. Yeah, I had to do it. You triggered something in my head.
Oh man. Let's see. Okay, so after the rolls for that 135, 125 position, my total credit's $1,300. Okay, yeah, then you're totally fine. So that was a question about hood. So yeah, if you have $1,300, if you roll the 125 Dece into Jan, you would pick up $400. So you would be at a $1,700 credit that's currently trading for $1,500. So you're still net profitable on the position, leaning a little bit long into the sell-off. I like it as an adjustment.
Mm-hmm.
Let's see if we can get one more quick one here. How are you handling the cost move on the calendar spread? So yeah, I'm going to look at, so really the only thing I can do is move this short option into Dece or like Gen 2. I still want to keep some space between these strikes, but let's just take a quick look here. If I buy back the 910, yeah, I could just move the 910 into next week for $100. That's what I'm going to do. I want to keep as much space or time as possible between my short and long so that if Costco does reverse, I can still get all of this premium out of the short option and gain as much premium as I can in the long. If you go too close to the long and you get a reversal, you're going to see losses on your short and gains on your long, and it kind of kills the trade. But I'll make this adjustment right now, and we'll reduce basis down a little bit. That's it. We'll get back to Nike earnings next week for sure. Sorry we didn't get to that question, but earnings December 18th. We got plenty of time for that one. And yeah, I think we're out of time. Thanks for tuning in. If you got any further questions, you can find us on Twitter. I'm at Trader Mikey B. Jamal's at Jamal Chandler. We'll see what happens with the footballs this weekend, but the Bears need to win this game against the lowly Cleveland Browns.
No, right?
So please,
let's get it.
Please, our playoff probabilities will dramatically increase if that happens. So let's go Bears, and have a great weekend, everyone. We'll see you same time, same place, 11 a.m. Central next week on Monday. Peace.
tastytrade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. tastytrade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. tastytrade, pro-level tools, intuitive design, total control.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
tastytrade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
tastytrade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Said I'm all about it. Yeah, 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 yeah. Said I'm all about it. Yeah, I'm all about it. Said I'm all about it. Yeah, 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 yeah.
What is going on, everybody, and welcome back to Risk and Reward. Today's Friday. We had a pretty long week, 5-day trading week. We got a little bit more volatility today, so we'll check out the VIX. We'll check out some position management. We'll check out what positions we want to get on for next week, and just overall our whole thoughts. It was another week, so hope everybody's doing well. Gus, how we doing today, brother?
Doing good. You guys will all have to pardon my wet hair here. I was just in a nice workflow state all morning, and then about 30 minutes ago, I was like, "Oh man, I'm sitting here with bedhead still. And
Right.
I gotta go on." So I am fresh out the shower here. I apologize
Fresh
for the
stash.
slightly disheveled look, but yeah, everything we're feeling clean. We're feeling good. Good end to the week. Rivian, big old pop today. So you know I'm a happy camper. Rivian would be remiss if it ever could possibly give us one day where I don't have to mention it, because every single day I am forced to mention Rivian. Because it somehow rips 10%.
It's only right. It's
every
only
single
right.
day.
It's only right.
But yeah, I'm a happy camper as we head into the end of the week here. And yeah, interesting market action today. I've been so distracted by Rivian that I haven't paid as much attention as I should to everything else. But as I sit here poking around, I honestly didn't realize how red we are until this moment right now.
Yeah, it was one of those kind of days where, you know, it makes a new low and it kind of surprises you a little bit. And it's like, is this thing really going to keep sliding? And then we finally get a little bit of a bounce and you're like, okay, maybe the volatility is cooling off a little bit here now. But I do think that volatility to the downside, it definitely woke a lot of people up, and it was a little bit of it kind of lulled us to sleep this week, I would say. We kind of been trading within a range. We were ripping to the upside, then we were selling off to the downside, then we're ripping to the upside. And again, today was like one of the first days where we put in a continuation in one direction. So it'll be interesting. 2 days after FOMC, you know.
Yeah, we were kind of expecting it. I am happy to see the VIX creeping up a little bit. Maybe that will give me some opportunity there. But I mean,
I was
really,
eyeing it. I was like, we might have to circle around to VIX here really soon, brother. Especially around the year end, we might have that conversation.
Yeah, I mean, we're just not. I don't know. It's weird though. I would expect on a day that's as red as this one for VIX to be more inflated than it is right now.
Right.
But we're still just sitting here. It's strange.
I mean, how does that resonate with you too? Because we talked about this too over the last month. We got that pullback into the market, and it's like vol didn't really move anywhere significant for the market to really be spooked. And it's like, even this down move today, it's like, wow, I didn't realize how far the market fell. But to the point that you're making right now, volatility is not popping like you think it would with the move like this. So it doesn't seem like too much fear is seeping into the market either as we get into the tastytrade platform here.
Yeah, I think maybe it lends itself to kind of the stagnation that we were talking about yesterday, where it feels like we've been having this sort of volatile, turbulent time. I mean, dating back to I would say I mean, yeah, really, I don't know. I mean, even if you just zoom out and look at the last 3 month period, it feels like it's been a really volatile period. And November felt like it was such a red month. But ultimately, we're basically just unched from the end of October right now. So I think that perhaps that could be what's playing into this broader volatility equation, is that as volatile as it may seem in the day to day, it's actually just, we've just been treading water this whole time.
Right. Yeah, you closed your platform last month, open it up again today, you might be unched. So a lot of noise, if you will, in the market before we really get whatever the market's actually trying to do over here. Just give me 2 more seconds, I'll get this going.
I think that sometimes we fly so close to the sun and we're keeping up with these things, so minute to minute, day to day, that it's really easy to become prisoner of the moment. And yeah, I don't know. I suppose that's just a broader lesson that you should never be prisoner of the moment with the market. Nothing is ever permanent. April seemed like the end of the world, and then it was literally nothing. We were literally just back at highs by the end of June. So
I saw more tweets today. It was like saying, "I think it's over," and I was like, you know what? A little bit of recency bias. I think like 3-4 months ago, I saw the same exact tweet. So until proven otherwise, I'm kind of on the same end of that spectrum at the same time, because these tweets are recycling again today, Gus.
Yeah, and something I'll throw out in that vein as well, and this extends well beyond the stock market and the economy. It extends into politics and into your personal life and really your relationships, everything. Everybody for like the last 300 years has just thought the world is ending all the time. Like, and it never really is. And especially since the 24-hour news cycle came around, it feels like the world is ending all the time, and it never actually is. Nothing is ever as serious as it seems. That's true in the market. That's true in politics. That's true in your own personal life. It never, you can't become prisoner of the moment. Nothing is ever actually as serious as people make it out to seem. We haven't had something like, I would say, actually serious since COVID. Like everything to that point, all of the volatility, all of the swings, all of the fear, it's all really just been blips in the broader scope.
Reframing our perspective a little bit. I like it. We can go ahead and jump into the tastytrade platform here.
Yeah, no, actually, I was going to say this is a great question from New Home Nation here. If we want to stop on TradingView for a sec,
yeah, absolutely. Over. Yeah, maybe we jump over there. Let me.
Yeah, we were asking. Or he's asking how you mark the value range on the MNQ trades. It has been a little while since we went over that. If you want to run through the volume profile setup again.
Yeah, we can briefly touch on that. Let me definitely briefly touch on that. No, I mean, the market gave us a surprise this Friday. I gotta say though, FOMC this week was kind of muted. So you were kind of thinking you'd get the action from FOMC day, but it's almost like they were prepping for the end of week. I don't know. So you get this. There we go.
I've always found it to be interesting that the FOMC even puts their main decisions in the middle of a market day. I mean, I know it's so the market has time to like be efficient and process that information right away. But I don't know. It's just funny that just is like goes against the way that all things are typically done. No company reports their earnings at 1 o'clock. Like that doesn't happen. But then when we do the largest, most market defining event, we do it in the middle of the day. It's fascinating.
It is fascinating. And then again, to pull the plug Friday this time, I guess. But to that same tone, maybe over the weekend, maybe Monday, we're unched again. So we'll take it with a grain of salt.
Yeah, but if I ever have a company, we're reporting earnings at like 10 a.m.
It's like it's just 10 a.m. Monday morning. Just
middle of the day, we're just tossing them out.
No lunch for anybody on Wall Street.
Yeah, no lunch. You know what? Our shareholder meetings are going to be weekdays at noon also.
Right,
you got to call off work if you want to come to the shareholder meeting.
I love it. Now, with that being said, we got a little bit of volatility today. We got some sell-offs in the market. We got one opportunity, and surprisingly, bro, we got a long opportunity today. Like after all the havoc to the downside, the opportunity today that I took on the Tasty account was a long. After we sold off all the way to the downside near this value area low, I was a little butthurt because on this account, I missed the short. It was a little bit to my own doing and not being prepped enough because I hit the button, needed to refresh, and like that's my own lack of preparation. But it was really difficult to sit through that run and not chase the short to the downside. Because you're sitting there waiting, especially when you're waiting on something for maybe a week, whatever it is, like you have that inclination of like, bro, I've been waiting for 5, I've been patient. Let me just, so was a little bit surprised that the market kept selling off that rapid to the downside. So we ended up taking this long off the value area low. Didn't know I was going to get it, but the market like just kept going. And it was just like a gift. It was like, oh, no way. Okay, another potential opportunity. We'll take it. And then we caught this little bounce here. It's a little bit easier to see here, but with just how aggressive the market was, I wasn't very comfortable, holding it all the way to the other end of the value area high. So that's kind of one way you can frame up these trades, right? We're trading around this value area low again, and we understand that's where we had an initial buy opportunity. And if we believe that the market is now going to still be in a imbalanced type behavior market, we could get a continuation. So maybe some of you guys had the value area low on your charts, and maybe you decided to take the short here. It wasn't something I was comfortable with just because the market already sold off like 200 something points to the downside. I mean, how much greedier can we get if we're looking to short? But hey, if it's working out, it's working out. It's not that I didn't want to, but because of these trades that did well already, and because of the nature of this volatility right now, decided to pump the brakes a little bit. But there was another opportunity if you missed these ones. And then we'll go to the larger time frame to kind of view how we even have these levels of value. But you can kind of see they played out pretty well this week in terms of at least the market acknowledged the existence of those levels there. So regardless if you're trying to get long or short, you have to manage and execute to your best ability. But as long as the market is just acknowledging a price is there, then you have something to work with. But if the market is just disrespecting one of those value areas, I would personally just leave it alone. But let's zoom out to the larger time frame.
Yeah, and these value areas hold up remarkably well. I must say there was a time when we first started streaming together where I was like, do we talk about this too much? But now that I have this broader scope, I think that talking about it so much is so effective because just every single time we pull this up, you see that these value areas tend to be respected. There is market acknowledgement of them. And I mean, yeah, it's the foundations for your entire trading strategy, which obviously is an effective one.
It's really weird. It's like that pattern. It's like the muscle memory in our eyes. It's almost like with more and more screen time, you just pick it up naturally, I feel like.
No, yeah, I agree. And it just, and repetitions help, in every facet of life, I suppose. But just,
True.
seeing it over and over has drilled into my brain. And so I assume that the viewers are also getting the same, sort of information over time that this is really something that has substance. I mean, look at this. Look at how many bounces there are off of all of these value areas. They get acknowledged every time. It's fascinating.
Yeah, 100%. It's one of those things too. It's like the market's not going to, respect every level. But if, again, to the point you kind of just hammered home, if it's acknowledging it, maybe you got something to work with. But good Lord, this downside move, I'm kind of in the boat. Like, is this going to hold, or is this another, bait the shorts one more time, bait the bears of the market, and then just rip their heads off into the end of year? So that's like the main question right now. I don't know. We'll see how we position for it. But Bitcoin has been a little quiet too. Bitcoin pulled back, I think a few hours ago too. So that's kind of trading within the same ranges. Let me not get too far off topic. Let's look at this larger time frame, and let's look at some of these value areas that we can work with a little bit.
And Darker in chat, I've been sitting here for 3 minutes trying to figure out what you meant by Red Bull. I do not know, but I am very curious. It's been on my mind this whole time. If you could elaborate. He just said Red Bull.
Oh,
That's it. So I don't know. Is that are they publicly traded? Is something happening? I don't even know what's going on. Respect my market boundaries, bro, says Data Trader. That makes me think of, if this is who you were trying to quote, then great work, the woke frat president in South Park that speaks like that. That sounds like something he would say.
Yeah, did you just nail that one, Gus? I think that's ball knowledge right there.
Yeah. That's the vibes I'm getting from that message.
Ball
That's what
knowledge.
it sounds like. I don't know if it was an intentional corollary, but
No, I mean, with that being said, we had taken the volume profile from that high that we had sold off from I think late October. So we put the highs around October 29th. Then we had that first sell off all the way down to these lows over here, end of November. So that lasted about 4 weeks. So within that 4 week span, we now had ripped again to the upside. So what we're doing with this volume profile, we're just kind of encapsulating the various trading levels there was getting a little tongue twisted here. What we're capturing is just the different levels of trading activity at various price levels. There we go. So whenever we're using the fixed range volume profile, we took it all the way back to over here in October. So we know if we start it from here to today, it's going to take all of the trading activity across various price levels within that specific time frame that you do choose. So that's how you can kind of quantify and really, window off the data that you're sampling from pretty much. So getting into the volume profile, I think one of the most I think one of the most common mistakes is just slapping on the volume profile and then not using context within it or understanding, where is this data coming from and what time frame is this coming from, right? I kind of just said the same thing in just two different ways, but it's really the context is going to be everything because we have a value area high over here, we have a value area low over here, but does that mean we just sell every value area high? Does that mean we just buy every value area low? No, not really. And whenever we have like a larger sample of data, that gives us more confidence to use that data into our smaller timeframes. So if we start on a larger timeframe chart, we can go all the way back, group a larger amount of data. We can kind of just find where these important levels are sitting in the market. And then we can kind of zoom into like a smaller time frame, and then slap the volume profile onto that in a different time frame at the same time. Sometimes you'll see multiple value area highs might overlap on top of each other, and then which that might give you more confidence to take the long or take the short, depending on your conviction right there. But that's how you can kind of treat it, because I know it can get a little confusing with so many, multiple value area highs, multiple value area lows, but that's a little bit of the gist of it.
Yeah, I got two questions for you in this broader scope. I know the answer to one, I don't know the answer to the other. But the first one is and then these value areas, when you establish them, like all these ones we're seeing on your chart right now, these were generated not all using the same volume profile. Obviously, it was like more like week to week volume profiles as you establish the new value area.
Yeah, sometimes it's not. You can, and honestly, it's all down to preference. Just honestly play around with it, see what you like. Like when I first got into volume profiles, I was using like the whole last year volume profile. Then I started using like each quarter every 4 months, and I started using like every 3 months and 2 months and 1 month, and then a week, and then the developing week. So just play around with a bunch, and then depending on your trading style, you will start to kind of vibe with the specific style. But there's really not like one right way to do something. Just the basic principles of how the volume profile works. That's all.
Yeah, and then the second question, something that I don't think I've ever asked you before, is what would you say is the shortest time frame that you could do this on, and you would believe it still has validity?
I know it sounds crazy. I think any time frame, just because.
That was really my question. Is like, are you doing this on? Could you do this on 1 minute candles intraday, and the same principles apply? It holds up all the way to the most granular level.
I would say so. Just from what I've experienced, at least, I mean, something that you can explore and get a little creative with too is like slap that volume profile on the intraday range. And then that can give you a little bit of a playground to work with, or a little bit of a blueprint to work with intraday. Not that you're going to get every move correctly, but at least you see the guardrails, you see the playing field. So I think whenever you start using a volume profile, if you're trading directionally, without using it, it does feel like you're kind of driving without a windshield, if we're being completely honest. So if you are trading directionally, I'm curious to see what your perspective is on it and what your experience has been.
That's a good analogy. I like it. And yeah, to everybody in chat, I also missed whatever Mike said about Costco, but I think you guys are probably right on the nose. As someone who sits 5 feet from Mike Butler 40 hours a week, he really, really likes Costco and the free samples and the hot dogs. I'm sure that he was just speaking about the
I trust this inside source. Inside source right here.
Yeah. And then, Jeremy, thank you for the explanation on Red Bull. I'm following now. Appreciate it. But yeah, great little mini lesson on the volume profile situation there. I just wanted to make sure we were clear. We can hop over to the platform, look at Bitcoin, whatever you want.
Yeah, let's do it. Quick look at Bitcoin real quick.
Outside.
I can't hear it.
Good.
All right, cool. We got 90,000 Bitcoin. It was looking like Bitcoin is taking a little bit of a tumble, right? 89,500 on Bitcoin for a brief moment, now trading around 90,000. But we've been trading around the same range on Bitcoin as well, right? We need to talk to Shelly and the boy Dan again, bring them over here, get their thoughts and insights, because this crypto market, I'm just curious how the fear kind of correlates with the overall indices that we kind of look at on a day-to-day basis. But it was interesting to see the crypto market pull back whenever the overall market did today as well. We are on the 15-second chart here. Let's not get confused. There we go. Now we're on a 1 minute. We're going to bring this out a little further. And then we'll take a quick look at the metals, and then we'll get into the tastytrade platform right after that.
Yeah, I'm in an interesting position with my crypto exposure. I am definitely at a point where if something were to happen to where we make new lows in crypto, it's gonna be some pre-planned panic selling from me. I will be doing some aggressive liquidations to cut all my positions in half, because I am just slightly irresponsibly exposed right now. I'm like, I would say 20% outside the bounds of responsible exposure, given my portfolio size. But I have an abundance of confidence that things are going to churn back here. Cryptocurrency has become a cyclical thing, slightly more than it was, for the last 10 years. It's become, something of a more cyclical market. We seem to be finding levels that the market seems to respect a little bit more. So I do think a recovery is imminent sometime. I just don't know how long that will take. And if there is something that drives this down beyond the lows, I'm gonna be hurting and liquidating.
Some crypto enthusiasts might say there's no such thing as overexposure to crypto. All right. I'm not saying I'm a crypto. I'm not saying I'm saying that, but some crypto enthusiasts like Michael Saylor might say there's no such thing as being overexposed. Clearly being facetious right now, but no, I mean, crypto has been really interesting with just all this sideways movement. So I mean, I hope it really pans out because I want to get involved a little bit here too. So I'm a little envious of that crypto exposure you got there, guys.
Yeah, I believe I recall Lehman Brothers saying they couldn't be overexposed to subprime mortgages in 2007.
They did.
I've said it before, it depends on your time frame. You might be overexposed for trading crypto, but perfectly exposed or even underexposed on a decade's time frame. Yes, absolutely, Theta. And that's a great thing as well that I really should have mentioned initially is yes, that's exactly what I mean is overexposed for my time frame. And because I'm speaking in an options context where that exposure is coming through IBIT and ETHA and, time sensitive things, I feel that I might be slightly overexposed. If these were naked crypto holdings, I would lend myself much more into the camp of just buy right now. I'd be firing and just waiting for this to eventually recover because I like I said, I don't think there's any way it doesn't recover sometime. Just the time horizon is what has me slightly concerned. But I have hundreds of days minimum on my contract, so I'm feeling good.
No, there's no such thing as overexposed. We're going to 1 million tomorrow. If this market falls out the bottom, if this US dollar is gone, bro, we might be at 1 million tomorrow. No,
shoot. I mean, Bitcoin, Bitcoin to 1 million, is really, I wouldn't say that soon, but I don't think that that's necessarily an unreasonable thing that could happen sometime in the next 15, 20
if that
years.
Happens,
I don't know, especially with the way that Bitcoin has moved. But I don't know. I think about Bitcoin being the way that we think about 1950s prices now, how there's the whole meme of oh, you could get a steak dinner for a quarter. Oh, it's this whole thing. I feel like
get a gallon of gas for a quarter.
Yeah, I'll be telling my kids about Bitcoin, and I'll be like, yeah, I remember when Bitcoin was $10,000, and they'll be like, $10,000? Why aren't we rich, Dad?
That's all of our parents telling us, yo, a cheeseburger used to be 50 cents. I'm like, 50 cents? And I feel like the inflation is going to be worse with our kids.
Yeah, my dad always talks about going to Buffalo Wild Wings in college for 25-cent wing night. I'm like, okay, that's crazy, Jen.
Okay,
I think their best deal right now is $1.20 a wing.
It's okay, pal, check the meat of those wings. Okay. Yeah. No, that's hilarious. We did de-risk a lot over here. So I felt I was a little bit overexposed to certain names too, guys. We de-risked a little bit. Obviously, we just have one type of product in the market right now, which is going to be the NASDAQ products. I really don't know about this call spread that we sold on QQQ, the 602 calls. I mean, 7 days, it expires by the end of next week. I was debating. I was like, bro, we could either take this off for a very small loss, right? I think the loss was around 70% of the credit. Now I think we're around maybe 30, but I don't see this thing getting back to 602 unless, 602, it's not super far-fetched.
This is a good start. This is a good start.
It's a great start. And I'll take it. Maybe we circle back around on Monday, but pretty much I was just bringing that up because this one's very far out of the weeds. If this doesn't even get close, I would just save the extra $50, $100 because why not? This is probably not going to expire worthless anyways. So debating on that one. We did sell another position in here. We also sold the 624s. The move today is helping that out a little bit. And then also that one kind of hedged the early short that we had on these ones up here for the 602s. So we're a little bit happy about that, but that's kind of how my hands were tied for that first position. And that's what's pretty much had my whole attention into the end of this week, at least.
Yeah, I forgot. Red day, you must be printing. That's the way that it goes. But yeah, no, I would say in a world where 602 happens, it starts like this. So that's
Hey, look, something. Kobe Bryant right now, Gus, this is my response. Job's not finished. All right. Red day, this feels great, but job's not finished. So
yeah, you're exactly right. We'll see. Sidebar also, QQQ, Invesco QQQ themselves will not stop texting me to vote in the shareholder meeting. They're
For real? What are they saying?
Yeah, I get a text every single day from various reps from Invesco QQQ that just say you're a shareholder in QQQ, vote by the shareholder meeting on the 18th. And I appreciate that they are being so aggressive in trying to get me to exercise my rights as a shareholder and vote on the future of this ETF. I don't really care. I think that the right choices are going to be made. So yeah, I'm not particularly concerned about it. Maybe I'll do it just for fun to see what's up. But yeah, Invesco QQQ, their reps are texting me like crazy Tracy. I have verified that this is like legit text that I'm getting for.
Oh, it's not AI.
Yeah, no. Well, no. I don't even mean like that. It might be AI, but it's not. It's not scams. It's not like.
Oh, I got you. Oh, yeah.
I've googled the phone numbers and they're correct.
I got you. I thought you were saying they're actual representatives. So I was like, human to human contact is always second to none. So I was like, maybe they're
they
really
introduce
on their
themselves
game.
with a name every text, so they very well could be actual people, but I'm not entirely sure.
I spoke with AT&T, so I had to switch my Wi-Fi, and I was speaking with AT&T on the phone today, and they were trying to get me into another bundle and all this, and it was just kind of funny. I had accidentally said one thing, and then he started asking more and more questions and being your friend. I was like, oh man, this is a great guy. But I was like, you know what? Such a great guy. I'm gonna actually call back for the bundle later on whenever I am, circling around to that bundle. And I was losing my train of thought. Don't do this to me. Man, I'm gonna take the L on that one and circle back around to it if it comes to me.
I got an internet story.
What were we touching on right before this, real quick? And then if you could,
I was in a similar situation where I needed a new internet package, and I was complaining to my friends for like 3 days. Like this thought had just hit my head that I needed some new internet. This is while I was in Texas. This is an older story. But then all of a sudden, a door-to-door internet salesman knocked on my door, and I was like, "Brother, it is your lucky day." I was like, it was like he was from the company that I was like considering switching to in the first place. And so yeah, they come knocking on my door, and I was like, "I am the easiest sale you're gonna make maybe in your entire career. Where do I sign?" Like before he could even say anything, he's like, "Hey, I'm Jim from MetroNet." I was like, "Give me the paper. I want 1 gig. Dig the fiber in my yard. I don't care. Let's do it."
That's fire, and I just love that.
Yeah,
I just love that you're about to know their days about to be made. They don't even know, like, bro. You don't even.
As soon as I opened the door and saw him standing there, I like lit up.
You already got the pen in hand and everything. That's hilarious. With that being said, we do have a few moments left. Is there anything catching your eye in the market before we close?
No, I think Theta Trader, I didn't get to acknowledge your points, but these are excellent points about time horizons and investing and how important they are. Media also saying you're not alone on the QQQ calls. I also got snail mail to vote. They haven't started sending me the snail mail yet, but we'll see. I get snail mail from Disney every year because my grandma, shout out to my grandma, gave me a share, maybe 5 shares of Disney when I was born, and I've just been bag holding those this entire time. But Disney sends me a shareholder packet once a year as well.
Bag holder. Yeah, that's goated. I'm doing that with my kids.
Well, I mean, like Disney ain't going anywhere. Disney did the thing yesterday. They gave $1 billion to OpenAI and their stock moves up. Whoop-de-doo.
No, but no facts. But the thing that I think is sick about that, it might not be anything crazy, but like if your kid, right, even if the share isn't worth, but if they're like, yo, I have a share of so-and-so, that might intrigue them from a young age, maybe 6, 7. Yeah. And then they're telling about their boys at recess about stocks and what they're trading, top tick and NQ, and trading some futures at 8 years old. That'll be my kid on the playground. So
no, yeah, absolutely, it definitely did. Yeah, it piqued my interest fairly early on, and I would be checking it when I was fairly young. Like I didn't even know what I was doing, googling Disney stock price, but yeah, just
see that's sick. And because I would say, I know when I first found out about the market, I was like, what is this thing? Is it in the air? Like, is it Wall Street? Is it a street? Like, what is the stuff? What is that? So. Anyways, anything top of mind before we wrap?
Nope, go for it. That's all I got.
Cool. Well, that's going to do it for today. Thanks for taking the time to hang out with us. We will be back on Monday. Let's manage our positions efficiently. Be sure to stay tuned for more segments coming on next, and we'll catch you guys next time. Peace.
tastytrade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. tastytrade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. tastytrade, pro-level tools, intuitive design, total control.
tastytrade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Roundup, they want us to wait. Sound up, they want us to say. It's crowded, I doubt it, but I could be swayed. I'm down, I'm a hound, woof, but you got to beg. Ooh, let me see you move your body, see you shake it, make them turn it up and draw. Ooh, let me see you get it started, see you working up a sweat. I'm all about it. I'm all about it. Hey, I'm all about it. I'm all about it. Said I'm all about it. Yeah, I'm all about it. Said I'm all about it. Yeah, 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 yeah. Said I'm all about it. Yeah, I'm all about it. Said I'm all about it. Yeah, 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 yeah.
We're back. It's Friday, December 12th, 2025. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. Back for a third day, our returning champion, Ilya Spivak. How are you?
I'm happy with the stock market having sold off a little bit because I had puts to roll. I'm a little bit annoyed that I've already that I didn't stand back and just sit flat for a while because I would have gotten a better price now. But what a weird day.
Weird day. VIX this morning was at sub 15 when the market opened. It decided to jump up to a high of about 1782.
Do we blame Oracle? Is this what we're blaming? Because I saw some funny headlines out there saying, it's Broadcom's fault. And then when you think about you and I were there for the release of the Broadcom earnings, and the markets definitely voted their confidence in those. So I don't know, unnamed news agency. I don't know.
Yeah, I think it was the earnings call where they said, we're not as backlogged as people were hoping for our orders, which I suppose means slowing demand in the pipeline. So it was a 424 stock price or at overtime yesterday is now 363. Key hurdles remain, Ilya, very clearly. If it's questions about AI or perhaps even just on a technical basis, we've had some very clear lines drawn in the sand for the S&P and for the NASDAQ. The S&P has flirted with a break above them yesterday. No mas. NASDAQ never quite got there. Bitcoin never got through 95K. And now you're looking at a bunch of markets that are falling on their face. So a chance for a reset here. Maybe an opportunity to buy in silver, perhaps following this pullback. Gold breaking out.
Maybe. I mean, and I'm happy with gold. Not mad at that.
Definitely not mad at that. Energy is a whole mess. The weather forecasts for natural gas are just disastrous, which the price action the past week substantiates. But you know what, Ilya? There's a lot to discuss because it's not just these key hurdles on the charts that we're seeing. Next week is the final week of the year, all things considered.
Pretty much.
For at least data releases, as far as I can tell, because next week is the last full week of the year. The week after that, of course, you have the Christmas time off, and then you go into the New Year's. I can't believe New Year's is just in 3 weeks away, Ilya. The macro calendar being saturated. Usually this is a segment of the show that fits onto one slide. We talk about the calendar next week for only the high-rated events that would appear on the IG economic calendar here. It's 3 slides, Ilya. 3 slides here this week.
No, next week is action-packed.
So we can't even go through, and usually I would say something to you like, Ilya, you need to take a look at this calendar. What's the number one thing that pops out to you? We should be doing that on a day-by-day basis almost. So let's just bucket this out.
Next week is going to be so hot. It's going to be incredible.
Be eating real well next week. So Tuesday, probably the day where we first draw our attention on the calendar. I know there's Chinese data that's due out over the weekend, retail sales, what have you. Perhaps that poses an issue for some of the things that are a little more macro-related, like your copper, your oil, maybe even your Australian dollar.
Sure.
But for U.S. traders, we have been in this desert of data for the past several weeks, and the dam is finally breaking.
It's the name of my next album, by the way, Desert of Data.
How much stock do we put into a non-farm payrolls report that is appearing on the other side of a Fed meeting? That will be one of multiple non-farm payrolls reports that we will see prior to the January Fed rate decision.
Well, so Powell told us when he was speaking after the FOMC that basically October's NFP can be written off as irrelevant because there really was no data collection. And so the numbers are going to be all kinds of squirrely. November's data, that's probably more important. We also know that Powell has now given us a kind of lens through which to look at this data, where if the average monthly running tally is about 40, I think the forecast is 35K, so right around there. What the Fed chair is telling us is we'll just take whatever the headline number is and subtract 60, because that's about the overcount, which gives you a running tally of a negative 20K per month for the pacing. So I suppose that's our North Star here. Whatever these numbers come out at, and I think we're supposed to get, 2 sets of non-farm payroll numbers next week?
No, we're not. They canceled the October
release. Canceled one?
The October release is officially canceled. So we're going to get we'll get NFP, okay? We'll get non-farm payrolls. Because they didn't conduct the household employment survey in October, we won't be able to get the unemployment rate. But to that point, we will see the November figures for both the household employment survey and the non-farm payroll survey. So this coming Tuesday, the October jobs report is canceled according to the BLS, even though we'll get half of it. And then we will see the full set of November figures Tuesday morning, 8:30 a.m. Eastern.
There we go. So we have our line in the sand. We're going to get a headline number, and we're going to see if after the Powell adjustment, it is worse than a 20K decline or better. And we see some signs, be it the ISM numbers, be it the S&P Global numbers, which we're going to get updated again next week. That's another big one I'm watching. We see that employment has actually been perking up a little. The jobless claims back and forth over the past couple weeks have been roller coaster-ish, if that's a word. But if we get a number that's, let's say, better than a 20K decline net of Powell's 60K shave, then how many rate cuts can we really bet on? And if we look at really what the markets are doing here, I mean, would they be losing sleep over Oracle if the Fed didn't go the way of stubbornness and said, here's 50 basis points for next year? Would we really be concerned? My guess is no. My guess is at the end of the day, what we said at the top of the week is what we're finding at the end of the week. If the Fed doesn't give the markets enough rate cuts in the SEP, they're not going to be happy. And what do we have here on reflection? I've pointedly held off writing about the Fed outcome until today. I'm going to have a blog update today on tastylive.com. Check it out. It'll be in the news and insights section today, shortly after market close, right after you and I speak on last call. Because I've been waiting for the markets to really make up their mind. And in the end, what do we find? You don't give us the good number on the SEP and risk sentiment is vulnerable. And vulnerable doesn't mean falling. Vulnerable means when you get an Oracle kind of news, it hurts. Whereas if you gave us the promise of cheap money, we'd coast right past it, most likely.
Cheaper money may be coming. Anna Wong over at Bloomberg, she released her full note yesterday publicly. She thinks the Fed's going to give us 4 cuts next year because inflation and the labor market situation are a lot weaker than people are.
And this is supposed to be good news then.
Well, I would just point out she's been a very accurate market observer, especially as it pertains to what the Fed is going to do. So when someone who's been accurate recently puts out a prognostication like that, your ears perk up a little bit more.
Absolutely. I'm just not sure that that's a good that's a good headline for stocks, because this is that other kind of rate cut that you and I talk about. Maintenance, that would not be.
Right. So then on Wednesday, we make our way into the calendar. We have retail sales, which are unaffected. Come Thursday, we have U.S. inflation. And this is, again, the October inflation report is canceled. So what we will be seeing on Thursday is the November inflation report. It's one of 2 that come out before the Fed. So if we want to think about that January Fed meeting, we have 2.5 jobs reports. We have 2 CPI reports coming out. This is one of the 2. So Thursday, December 18th. We also have 3 rate decisions. A BOJ that evening that is expected to hike rates. There was an article out in the Nikkei overnight saying that the BOJ will hike rates next week. And the Nikkei, along with Yomiuri Shimbun, those are the 2 big Japanese financial outlets that we in the Western world pay attention to. And it's also where the leaks come, wink, wink, nudge, nudge, when the BOJ wants to say, get ready now. Everybody get together. Here we go. It's like when we're looking for what the Fed's going to do, we wait for the Wall Street Journal, Nick Timiraos, to publish his article. You wait for the Nikkei for the BOJ. We also have the BOE. A little bird seems to tell Nick sort of what the vibe is with some consistency. We have the BOE and the ECB in the morning, though, before then. So you have a BOE that's going to cut rates and a BOJ that's going to hike rates, a Fed that's somewhere in the middle where it's doing some stuff but can't do more. I mean, it feels like by Thursday next week, because we can go into the Friday calendar too. The Friday calendar next week is not substantial, maybe PCE, right? Some GDP figure, perhaps.
If we end up caring, yeah.
But really,
the retail sales is also supposed to come out. I see the UK one here, but we're supposed to
ours
get
Wednesday.
A few out of the US as well.
Yes. So it feels like Tuesday through Thursday, that's going to be the rest of the year. And by the time we get to actual data for the month of December and we start thinking about the January Fed meeting, once we get through next week, you basically go through then a 2-week air gap for meaningful economic data releases, right?
Yeah.
The way that the calendar is falling this year, January 2nd is a Friday, which means we're not going to get the NFP report until January 9th. So you make your way through the 16th, 17th, 18th, and then you're basically looking at not even a 2, but like a 3-week window where there's no more economic data to guide the conversation, which I know some people may be saying to themselves, well, we just did that with the government shutdown. We were fine without the economic data.
Sure. But
this time around, Ilya, I would make the argument that there's not going to be much to change the narrative around what the Fed will be doing come January once we get through Thursday next week. And then you kind of get into, okay, we're on a preset course. We're into year end. The economy's too hot. The Fed can't give more cuts. Inflation's too hot, right? Oh, okay. Yields up, stocks down, walk away until early January or vice versa.
Yeah.
But I guess what I'm trying to make the point of in this particular session is we have a lot of information coming out midweek next week. It's the defining information that you're going to see after December 18th. There is truly not much by way of meaningful information until Friday, January 9th for the NFP report, and then Tuesday, January 13th for the CPI report. So this is really it. Next week is super saturated.
Yeah.
It's the Super Bowl for the month of December.
Yeah. I mean, I think that pretty much lines up. I mean, next week, we are going to get a lot of stuff. We're going to have the benefit of having Powell context through which to interpret the stuff. And then things start to slow down markedly. Now, sometimes the week between Christmas and New Year is like watching paint dry. Sometimes the thin liquidity in that period gives you a little whiff of what January is going to look like. Because sometimes the pre-positioning begins early. And those people that hadn't laid out capital, not the people that are clearing things out, because let's face it, we got 1 week, basically, maybe a week and a half. And then liquidity is going to drain out. People have been very long all year for very good reasons. Markets have been surging. Are you going to screw up your high water mark before the snapshot is taken? Or are you going to try to get paid? So are you going to sell aggressively? Well, not unless you're really compelled to. So I can see people unwinding some of their hedges, maybe. I can see them maybe selling against that. So clearing some longs so that you can cover some shorts that didn't work, so that you kind of pad performance. But you're not going to be laying out shorts for short's sake if you've been long all year. You're going to manage your performance and try to coast into the end of the year without looking crazy.
Mm-hmm.
And that should give you a little bit of a floor on things. But once you get through Christmas and you have those few trading days between Christmas and New Year, opportunistic people that want to be short in January and don't want to be on the wave when everybody is laying things back on, fall is coming back, they're going to sometimes use this pocket to load up while it's quiet and get some nibbles out there. You could get something of a veer there. It doesn't always happen, but just take a look at what, let's say, 2021 looks like. before, of course, 2022 ends up being a very rough year.
Even
things can get a little fuzzy. Look at the end of last year, where things already topped by early December.
Yeah, when we spent basically the second half of December last year trading lower. And again, we are in a seasonal window right now. We've been talking about this the last few days.
Right.
It was great that we had a Fed meeting on Wednesday. You got to get through 69.10 in ES. You got to get through 25,900 in NQ to feel really good about the next leg up. But from now through December 15th, the close, this is the weak window of the month of December. December itself, since 1950 for the S&P 500, has been positive, averaging a gain of 1.4%. But if you look at the calendar, from now through next week is basically if the market's going to lighten the load, this is the place for it to happen. So in ES, we talk about key hurdles remaining, Ilya. That's the title of today's show. Did we ever clear that key hurdle yesterday? We got pretty darn close, but we couldn't do it. And thus far, the range that we've been in is holding, looking pretty weak. The NASDAQ, on the other hand, we tried to get through that key hurdle yesterday again. Could we do it? No. Instead, this is a bit softer looking. 25,400 or so. That is a line in the sand that we have since breached. No significant gain yet. So I guess on one hand, okay, we're in the seasonal weak window. The market's down a little bit. Not a surprise. We ran into resistance. We failed. On the other hand, that's a pretty negative market reaction, all things considered.
Yeah.
I suppose if we're not going to get ourselves worked up about this, we'd have to look to the VIX. And it's back below 16 here. So talking about a wobble, it feels like a wobble. I don't know if it's anything more than that, but a little bit of a disappointment considering where it looked like we were on overtime yesterday when I saw 69.24 printing on ES.
Well, so what I did today, if we look on ES, was I saw the wobble back into the bottom of the range, basically, back to the bottom of the box. I had a bunch of S&P puts that had 7 days to expiration. So I booked them right there and said, you know what? We're at the bottom of the range. Who knows? Maybe we hold, maybe we don't. I don't know. So I just took them off the board right there. And then if you now look at sort of the dynamics, it looks like maybe, and I hazard even looking at this, but it's a wild day. If you look at a 1 hour chart, you can kind of see the sentiment back and forth. So you get a break through that support right around, let's call it 68.30. That shelf right there, granted, it's an hourly chart. They're choppy, but that's a few days of price action there that's holding that support.
Can I just point something out then about this market? It's being a real son of a bitch.
It's terrible. So choppy.
Because you break through the high here, bull trap sucked in. You break below the low after the Fed, bear trap sucked in. I mean, for a momentum person, this is why I don't go down to 1 hour charts, because it
so I avoid like the plague.
But this is different. This is also why like I hate scalping, because if I was a scalper, crushed on both ends. This is I understand people's frustration if you're trading today, either long or short, because if you're trying to square that circle like me, if I had been a scalper in this market, I'd be short underwater by 25 points right now. I would have been long over 69.10 for the first time and then looking at a position that's 70 points underwater. So I've got to wait for 69.10 to break, or we got to see him close below 68.20, 68.30.
What I did was once you got the push through there, I said, okay, let's put duration and let's come back in half size and let's see what happens. So I put half of it back on and gave it 77 days of duration to dilute my delta exposure in as much as is reasonable without getting too expensive. And so I was able to get 2-to-1 risk reward locked in. It ended up being not that expensive because we can see IV rank isn't even that high. It was around 16 when I was doing it in S&P. NASDAQ looks a lot cleaner, but is a little bit more expensive. So pick your poison. But this is what we were talking about yesterday. We looked at RSP, which had broken out, and said, but can this market really go if tech doesn't? And I think today is a really great example of no, it can't.
No, tech today is down 2.3% on XLK over at SMH, despite logging a new all-time high close just 2 days ago. It's now down 3.5%, losing a bit of its uptrend from recent weeks and months. Volatility, though, is not perking up. And I think that's really the key takeaway here for what we typically do on network, Ilya. IVRs, 17.9. By the way, the fact that the NASDAQ has a IVR premium relative to the Russell, I think, is really noteworthy. Russell's off by 0.94% today, coming back in a bit after its breakout and move higher to the upside. Probably a rate story because the long end of the curve looks gross today. ZB looks terrible. UB looks terrible. UB's down over a point. So those higher rates not exactly helping out. But the volatility staying so low is probably what informs me the most. This all seems like a little bit of position shuffling. The fact that we get through the U.S. cash equity open and at 10 o'clock Eastern rolls around and Bitcoin is crushed, gold is crushed, silver is crushed. Come on. I mean, I'm not a conspiracy theorist here, although on the days where I see wild P&L swings like I have today being levered long stocks, gold and silver, this all just seems a little too coincidental. Like, why did something happen at 10 and everything that's basically a liquidity proxy or risk gauge gets smacked around? I was looking for news flow. I didn't see any news flow. Did I miss something?
But this is the whole thing, right? The Fed told us no cheap money. We're going into a weekend where maybe we get boots on the ground in Venezuela. Maybe we get some sort of a kerfuffle someplace else. The issue isn't what happens. The issue is the market didn't get its medicine. It didn't get its booster shot.
Maybe. I don't see that as a particularly hawkish cut, though, the other day, because when you guide lower on growth, as we discussed, when you guide, higher on growth and lower on inflation, with effectively no change in employment, you're suggesting a big productivity boost is happening within the economy.
And Powell said as much, but it's not like the Fed officially guided. Those are medians from 19 people who had individual numbers. And we know that at least one of those people's numbers, let us say, don't come out of the most rigorous economic models. And that's at least one. Because when you look at the dot plot, both last time and this time, it's not exactly the world's most complicated guessing game where the Stephen Mirren dot is. Because all of them are clustered in a cloud, and then one of them is off in space. So,
and also, like the Fed, what Powell described
that's going to tilt
the other day.
That's going to tilt the GDP the GDP forecast and the inflation and everything.
Wait, but this is like one of the games of linguistics that I can't stand that the Fed does. They told us that, okay, so we have 3 dissenters, right? We have 2 people who are saying no cut was needed. We have 1 person saying who 50 basis points were needed. But then you look at the dot plots that they submitted, like where do various Fed officials think where the 2025 year-end rate should have been? You had 6 dots above where the rate actually ended up. And then you look out to next year, they talk about having like unanimity or some consensus.
I mean, they cajoled them basically to vote for the cut.
Yeah, it's just a disconnect there, right?
They basically convinced 2 people not to dissent in a public way.
Right. So the
like
next
they dissented with their dot, but they don't have to have their names out there. Whereas Goolsby and Schmidt apparently don't care.
Right. It would be like, okay, Ilya, submit your dot. Where do you think the dot's going to be? 3.75. Okay. When you vote, where are you voting for? I'm voting for the 25 basis point cut to bring it down to 3.5.
Yeah, because don't write my name in the dissent column.
Yeah, right. That's all there is to it. And Goolsby was out today saying, no, I'm below the median dots for next year. I actually think we're going to get more easing. I don't know if that's a good sign. We have the table set though for next week. I think the same levels that have remained here the past several sessions. You get 69.10 in ES. You're feeling a lot better about things. I suppose, Ilya, the monthly low at 68.02, it wasn't touched today. We got to 68.05. But if we're below the monthly low at 68.02 next week, you then have a 100-point range here, a 100-point pullback down into 6,700 or so.
That's why I didn't run away selling. Spot on. It's why I didn't, I closed it, I took my profits, and then I only put back on half with tons of duration for this reason. This support could very well hold. Nothing says it shouldn't.
If we were to draw a simple Fibonacci extension here, just to give a sense of where a pullback would look like, if this is the range, you see yourself getting into 67 or so, which on these lower term time frames, if you look on a hourly chart, for example, we will see a bunch of different pivot points around this 6,700 level, where the market has found resistance or support way up, way down. It doesn't really matter how you slice it, but the fact is that recently 6,700 has been somewhat of a magnet. Does that mean that the rally is over? No, it just means that we're still in the broader range that's been carved out over recent months. Maybe, Ilya, then this is what gives us, our people panic after the Fed. And then you try to make your attempt higher into year end, which I suppose is also a good time to bring up. We're not quite into the Santa Claus window yet. I'd encourage people to watch the video that we put together with me wearing the Santa hat. But for those that would just prefer to hear it now, the Santa Claus rally refers to a seasonal trend in the stock market that typically occurs during the final 5 days of December and the first 2 of January. It's a 7-day window where equities have historically drifted higher. The term was coined in the 1970s by Yale Hirsch of the Stock Traders Almanac, who noted that markets tend to rise as institutional traders close their books, tax loss selling subsides, and optimism builds ahead of the new year. Since 1950, the S&P 500 has averaged a 1.3% gain during this stretch, delivering positive returns about 75% of the time. So while short in duration, it often sets the tone for early year sentiment. Strength suggests momentum can carry into the first quarter, while weakness can hint at a more cautious start. The Santa Claus rally isn't guaranteed. It's psychological as much as it is seasonal, but in markets driven by expectation, sentiment can compound. And to that point, that starts the final 5 days of trading this calendar year. If we're going to just pull up my calendar right now, the final 5 trading days of this year would be 24, 26, 29, 30, 31, and then January 2nd, January 5th, because of how the weekends fall. Mm-hmm. So, we think about the Santa Claus rally, we think about the seasonals that say you get a decline basically from now until December 16th to the market close on the 15th. That just basically means Tuesday. Tuesday is non-farm payrolls day. Maybe we get our data to get the green light. So we get our pullback, Ilya, then we keep moving on up. Not thrilled with how today's turned out, because being long silver and stocks on this Friday is a kick to the face.
Yeah.
Can't win them all, but what we can win is maybe in what's a breakdown in the bond market now. This is a really ugly looking chart. That 0 DTE, 2 DTE thing yesterday, I got greedy. It bounced to 116 and 9 ticks. I was long the 116 and a half, 117 call spread. Instead, this thing is going to be a loser. $46 tuition charge to markets, which is fine, especially considering we've been leaning into the long put spread. At least I have been here, looking for a move down to 112 or so, effectively into the lows that we had here from the start of September. Mm-hmm. So I see my 19 DTE. Oh, this is still ES. So let's go over here. So at 42, I really like this 113, 112 put spread. Chart agnostic, Ilya, this looks like a head and shoulders pattern. This looks like a break of a trend line. Yes. We had a nice little bounce there. Nothing materializes off of it. I think the rally's done. Even if we took our original trend line here, breakdown, retest of that back side of the trend line, and then falling into new lows, there's no reason for long deltas here whatsoever.
Yeah. Yeah. I mean,
what do we do with bonds?
I got out immediately this morning. It didn't look good. It looked like the support wasn't being held. The idea always was okay, we're back at support. Let's take a flyer and see what happens. And it didn't fly. So, okay, fine.
Mhm.
I mean,
Does it
would I
alarm
be
you?
a seller here? Not on a Friday. Let's see how this closes.
Can we test a thesis of ours? If the thesis was maybe bonds at the long end of the curve are going to bounce because the Fed isn't going to give us the cuts that we want, a mirror image of what happened last September when the Fed gave us more cuts than we wanted.
Yeah.
We had a small window there where that was working, right? You could have argued, oh, we're back above 116 again in the bonds. Maybe that's coming true. So the fact that we're almost 2 full points lower than where we were at the highs yesterday, despite no significant shift in Fed cut odds, despite no, where was the economic data that did this?
No.
What do you make of this right now? Are we missing something? Because it feels like we may be underweighting another factor that has not been discussed.
I mean, this is what I think we're learning here about what you do when the Fed doesn't give you the magic sauce. The conversation from Powell was, we're at neutral now. We're maybe on the upper end of neutral, but neutral is the going place. And we can sit here for a while. So just to quickly, and I'm going to pull this up here because I want to quote the man directly. He said, a rate cut is not the best case, or the base case. Opinions are split but balanced. Powell, I could make the case for either side. When inflation and employment risks are equally balanced, policy should sit at neutral. So what we're looking at here then is maybe a much longer term cooling off than what the markets want. I mean, at this stage, we're still looking at 54 basis points for next year, and the Fed is basically saying, I'll give you 25 and I won't give it to you anytime quickly. So you take that and you compound with it the sort of sense of uncertainty. And you start to wonder, why is the long end doing this? Are we putting risk premium back into the long end? Is that what this is? Unclear. You don't see it in enough places here. I mean, you'd be seeing the dollar start to move around, and you don't really see it move around like that. It is curious what's going on, but it seems to me that this is more Fed related than it is kind of sovereign or panicky or anything like that.
I mean, that's what makes it so fascinating, because when you look out to the December 26 expiry for the SR3 contract, you don't see much movement here relative to where we were on Wednesday afternoon.
Yeah.
Like, we're 10 basis points. It was 96.75 at the low Wednesday. We're now at 96.85. So the implied Fed funds rate has gone from what, 3.25 down to 3.15%. By next year,
maybe people are just getting rid of their exposure. Maybe what this is, and I have no concrete evidence other than just kind of
I do
looking at it and thinking.
Well,
maybe that's what this is. I mean, I got out of my exposure.
Well, that would make sense. I've seen Frank today put in the chat from CBOS. Thursday's option volume of 68.6 million contracts was 8% above recent levels, with calls leading puts 11-7 among the 500 most liquid single stocks. 30-day IV was higher for 172, lower for 165. VIX futures are continuing to be rolled from December to Jan's 5 days out to 40 days. You look at the trading volumes, they're basically the same. Okay. Also, for what it's worth, Jamal pointed this out earlier. Maybe he said it on air, I'm not sure. But when Jan VIX becomes the front month, it will be a 5-week cycle. well, longer than usual. That's part of the reason there's such a big difference in the VIX futures roll market at the moment. But so positions changing hands, is this really an indication that anything's been truly destabilized? Maybe not. All I know is from a technical perspective, Ilya, once 116 broke as our line in the sand, flipping net short seemed to make sense. The fact now that we're at a new monthly low here in ZB, surviving the retest of the neckline, surviving a run up into the momentum levels. We hit our 1 month moving average and roll over yesterday afternoon. Doesn't look that great. For notes, it's been a slightly different approach. We're doing the reverse iron fly here, which today actually kind of sucks then because we need to get away from 112 and this whole thing where we bounce up from it. Fine, just keep bouncing. But getting back down to 112 is a little problematic. The good news is that that's a trade that has 70 DTE. So yeah, if this was a 1 DTE, we'd have a problem. But as long as we move away from 112, we'll be okay. I'm comfortable sitting with this through the holidays. That's why the expiration window is so long. Don't need to worry about this next week or the week after.
What's interesting also is the Russell is holding relatively well here, and it almost makes you want to go long here as a kind of counterweight to any exposure you might have in sort of tech-related indexes, be it NASDAQ or S&P. But man, the options pricing is wacky. Even if you get something really, really simple on, you go, let's call it 49 days out, and you go, all right, just let's go to something small. Give me just a couple ticks here. Very tough to find solid risk reward. At best, if you want to look at call verticals, you get 1-to-1 risk reward. Yeah. Even if you go really modest. So it just doesn't make sense.
Ilya, when we turn our attention to the metals market, which yesterday was, metals, which is our fun seasonal way of talking about this. Today is quite the opposite. Coal markets. All right, I'll stop. 4,300 was a line in the sand. We have a potential symmetrical triangle breakout happening here in gold. Yeah. I want to go down to that 4-hour time frame because as we zoom in, we could see that we had our huge breakout. There's a big round of profit taking as we approach 4,400. We fall back to the former highs, November 13th, December 1st, here on December 5th. And that has since become support intraday. Mm-hmm. So it's not the prettiest chart in the world. Same thing can be said for copper here. Okay. But copper, again, yesterday fell into resistance, turn support, bounce. Today fell into resistance, turn support. And it's supporting itself again. So it's the story isn't over. Maybe things got too far ahead of themselves in this thin liquidity post-Fed. Maybe the BOJ signaling that they're going to hike rates is causing problems and things to delever because after all, Ilya, hasn't the whole story been, short yen, long tech stocks, finance. As
ever. I mean.
Finance the carry trade position. So like all of
finance the carry trade position. Yeah.
The BOJ is telling us today that they're going to hike rates next week. And so maybe all of these things that have been running super duper hot have been financed in other currency terms. And so there's a little bit of book shuffling. Maybe. This theory I've seen that's thrown out there. But you know what? 4,300 was held. And if at the start of this week you told me that we'd be closing near 4,325, I would say beautiful. That to me is the number one concern because I have and had a much better 4,350, 4,400 call spread, which at 11 DTE, perhaps I should have taken some profit earlier today. But given this setup and given how I do think that we're going to see a retest of this before Christmas, I am going to stick long here. More exposure, in my opinion, the better, which is why also at 46 days, I'm looking at the 4,400, 4,425. And again, that was doing a lot better this morning, but we're still on track. This is still a breakout. This is a retest I'm chalking it up to right now, technically. And as Livermore said, the money's made from hand sitting. So I'm not going to panic. I don't think anyone should panic. Nothing's changed for gold.
No, I'm staying long. There's no reason to panic. I think if you're going to be short something, stocks make a lot more sense. And the Russell isn't the one. That's not the one that I would be touching. I'm just getting the notification as you were talking here that I got filled on my NASDAQ puts. They've been sitting there for a while. If we take a look at the 4 hour, let's say, you have something like a breakout now in NASDAQ. Okay, let's see. But that looks like it's made its move. And if you look at it, if you're going to be selling something, this looks weak-handed. Gold does not. Gold looks like it broke out and is now consolidating before the next leg. I'm operating there by outright buying and selling the 1 ounce futures just because they're so nimble to work with. So that's how I got my exposure yesterday on the break of that range. I don't see any reason to want to jettison that here. We're holding right at former resistance turn support. If anything, this is a buying opportunity. I'm not prepared to double down right here, right now. But if this settles around these levels, and let's say we come back here on Monday and nothing crazy happens over the weekend, I'm probably at it, if anything.
You mentioned 10Z. There are 3 gold futures contracts. Gold GC 100 ounce contract. MGC is 10 ounce, and 10Z is 1 ounce.
1 ounce. It's right there in the ticker.
Right there in the name. Tick value $10 for gold GC, $1 for MGC, 10 cents for 1 OZ, just like everything else.
And 200 bucks a contract in margin, which makes it basically sort of like trading an M6E future, which is very manageable.
Right. MGC and both 10Z have nice liquidity. And while 10Z is thinner, it's fully usable for precision hedging and systematic scaling. Quite frankly, if you're trying to figure out how gold operates in the futures market and it's not a product you're familiar with, 10Z is a great way to learn the futures mechanics without oversized exposure and paying too much of a tuition. I know
I'm a big fan.
Paper trading and back testing is really important, but until you actually start putting actual money at risk and you learn how to deal with those emotions, the cognitive and emotional biases, it's not the same thing. So
100%. How many times in our day have we seen people do tremendous things on a demo? And I don't mean like crazy over-levered, it worked on the demo because it wasn't real money, la-di-da. No, like build systems, the systems work, it feels good, they take it to live money, and the moment it's real dollars, their head starts to play tricks on them and everything goes to hell. We've seen it 1,000 times over. We've been there ourselves.
Well, one of my favorite things is a mistake that people make when they often backtest is that they don't put in the transaction costs. And so it's like, when I add in the because it's not when you're paper trading,
I've got a great system
in a frictionless market, right? Yeah. But in a market with a bid-ask spread and transaction costs associated with it, all of a sudden, like your 3 Sharpe ratio becomes a 0.85, and you're like, I'm not doing
what I thought I was doing.
I'm not doing what I thought I was doing here. To that extent, silver, how could you do this to us? But that's fine. Is it fine? 10 o'clock?
I feel a little bit better. I was very annoyed at having gotten out 2 days ago.
I feel great.
I feel a little bit better now.
Yeah, I feel great watching silver fall $3 this morning like a knife through butter. No, this is the most interesting thing, Ilya. Yesterday, the IVRs were like 73 during the day, 72. You could see here on the 1 hour chart in that very lower panel, during the rally, the IVRs were in the 50s, 60s, 70s. Okay. We've been stable all day long in terms of volatility, despite this pullback. I mean, I think this to me looks like something got cleared out when gold, silver, Bitcoin, stocks, all 10 o'clock comes around and all the things, at least recently, the stocks and crypto. Okay. Maybe not on the best footing, but gold and silver getting slammed. This feels like people squaring a book out. At the end of the year.
It has that sort of feel really across a lot of these markets, like what we were just saying for bonds. Silver and bonds, they don't look the same per se, but their dynamics feel similar. Where you go, well, what's wrong with you today? Well, nothing really should be. What is this? Why are we clearing important levels for seemingly no great reason? I mean, I guess you could look at silver and go, okay, well, it's a risk-off day. Silver is risk sensitive. Fine. But gold is down as well. It's not down through any barriers. I would argue neither is silver. So if we can get down to, let's say, 58 and change and hold there, I'm probably a buyer again. If we can get down to 56, 50, 54, 50, somewhere in that $2 range, probably buying a lot again.
This is a wonderful thing as far as I'm concerned for a longer term trade where we do have outlined the potential as of Tuesday, wedge, cup and handle kind of situation, Ilya. There's your cup.
Yeah.
Here's your handle. Wedge into a breakout. This extension carries us up towards 67.80. I know volatility is expensive here, but on pullbacks, adding to some long exposure has worked. And so thinking about that, what can we do at 74 days to look for a move up there? 4-to-1 risk to reward. It's a sizable contract, SI, but SI has been working here. I'm going to use the dip to get some more silver exposure.
In a completely different thing, and I know this is a futures show, but I'd be remiss not to mention this. There is a ticker today that's up close to 40%. Take a look at MSOS.
It's a different kind of commodity.
It's a different kind of commodity, but hello.
That's how they want to classify it. There's been over the years, there have been
Apparently
conversations like, well, could you have marijuana futures?
Yeah.
Right. Is there enough of the underlying staple, so to speak, and commercial activity to justify, because it's a perishable.
I mean, cannabis is
product.
a crop.
It's a crop, right?
So you'd think if you can have wheat futures, you can have cannabis futures. But this is a very interesting thing today because it seems completely uncorrelated to anything.
Of course not. It's part of the affordability agenda from the Trump administration.
I mean, I'm a little bit long as of a few weeks ago, and what I did was I bought calls expiring in January 2027.
Oh, just basically just bought the commodity itself.
Yeah, just basically saying like, it'll come up in the midterms. I want to have a little nibble in case they talk about it.
Oh,
people got to get reelected on the basis of something.
It's like, yeah, I bought a bunch of MJ futures and I took physical delivery, honey.
I'm sorry. So, we're now very deep into a surplus.
How would that even work? Like, yeah, because you couldn't do it because like, oh, I have enough to intent to distribute. No, I'm just a futures trader. I digress.
I'm sorry, I didn't roll the contract. What are you talking about?
Now I have all this so I can roll the contract. Okay, yeah. 535 here in copper futures. Volatility had still started to come in a little bit, 46. You see it in CPR here. I'm still playing for a breakout. Again, I'm not too worried about what's happening in the jostling today. It's been a decent enough week. 46 days to expiration on a 570, 580 call spread. It's just within the one standard deviation move. I think the odds look a little bit better now given today's price action. Would I wind something up like this? Absolutely. Am I sticking with it? Yes, I am. We need to make our way over to energy and then over to currencies here, Ilya, as we wind down the show. Energy just seems that weak. Forget the Venezuela headlines, although maybe not. This is the environment that oil's
going to be. Yeah, maybe don't forget the Venezuela headlines.
They look closer than ever to being realized. And I know the moment I don't roll out a position for a geopolitical hedge, something's going to happen. But Trump did say last night that land operations in Venezuela will begin soon. I guess oil just doesn't.
Trump says lots of things. I think you get to a point where the boy has cried wolf too many times, not necessarily on this subject, just on subjects in general.
I mean, think about how weak energy is right now. Russia, Ukraine's raging. We have this shift. We have mud season coming in. Gosh, I can't believe I didn't pay attention to the Chicago traders who were complaining about mud season earlier this week. But how right they were to do so.
I had no idea there was such a thing as mud season, but you've taught me now.
I saw this chart this morning. For those that are listening and not watching, it's the NOAA 8 to 14-day temperature outlook. And basically 93% of the population is going to be seeing above average temperatures as we make our way through Christmas. So for those of you who are hoping,
also it's going to be a warm. It's going to be warm here again in San Francisco. It looks like it's been a little chilly. Very nice. Okay,
it's
no mud season here.
No, but all of a sudden the country is looking at a big heat dome that's coming up for the mid portion of the month, and so natural gas prices having erased all of their gains in the past 6 trading sessions. They have erased all of their gains since October 30th. It's been quite the round trip.
This is why I don't trade natural gas, as I mentioned yesterday. I'm afraid, and I don't want to go down the dark alley.
Being afraid is probably a good thing, but a 71 IVR, Ilya, a 71 IVR. You can still lay out. Forget the I don't want to say forget the volatility, but depending upon where you put your strikes, you can still find trades that are uncorrelated with anything directional in stocks right now. And this is the important point. Don't look at it in isolation. We're not looking at it directionally. But with a 71 IVR, if we want to harvest volatility here, we can still line up decent risk to reward. Even at something like close to 70%, you're still getting 3 to 1, not quite 4 to 1 there.
Yeah.
It's worth looking at. I have my exposure.
All I'm saying is, what does it tell you that me, having been fighting the stock market all year, I'm too scared of this?
That does say a lot, and it does alarm me.
I'm just going to put that out there. I have been fighting this stock bubble all year. I am too afraid of natural gas.
It's not a bubble. Powell told us the other day it's not a bubble. Dollar here, 98.
That's one way to read what he said. Yeah.
That's what I heard. My book does all the talking, though. The euro's having a tougher session, although it's off the lows now. The yen here on the
I'm a little bit long the euro at this point. I'm a little bit long the yen at this point.
Is the dollar cooked?
Euro is doing better. I'm a little bit long the pound. That's not really doing anything particularly great, but it's also holding the breakout, so I'm not concerned.
Not bad for a currency where a rate cut's expected next week.
Yeah.
But you know what? There's no volatility here. One of the things that we like about the currency futures, Ilya, 6E is the most liquid. 6J works too. When you get to the others, getting filled in the futures options can be more difficult. But part of the reason why we're drawn to it is because you have seen it stretches this year relatively high volatility. IVRs in the 60s, 70s, 80s. Heck, the Canadian dollar just had a stretch a few weeks ago where the IVRs peaked above 100.
Yeah.
At the end of November, right? That's not the world we're in, but that's not the world we're in right now.
No. And this is the great thing. This is what I love about these currency futures. If there's not vol, you go down to the micro contracts and you can trade the futures outright, and they're not heavy duty and they don't take up a bunch of capital. And when the vol is up, trade the options.
Ilya, what's next on the calendar? Well, we get to Monday first. And of course, next week is a big week. But next week, if you're trading 6C, keep an eye on that Canadian inflation data. They had a much better than expected jobs report recently, and we're looking at Canadian inflation starting to bump up. Maybe that's a good sign for the U.S. They are a Canadian canary in the coal mine of sorts for the United States economy. And so signs of building aggregate demand there. Thank you. That is something that we should not ignore. Everyone's favorite Fed speakers are also coming up on Monday. Stephen Miran, because he's President Trump's favorite Fed speaker. And then John Williams, the guy who saved the market a few weeks ago when he told us that a December rate cut could be coming. We had that Friday morning where rate cut odds jumped from 38% to 75% on the back of his comments. So let's not dismiss the fact that come Monday morning, the vice chair, well, the head of the New York Fed, and a vice chair overall at the Federal Reserve, like this is the guy who could actually do something to set us up for that.
Williams is really who should be the next Fed chair if we're just being honest with ourselves in terms of experience, and Chris Waller would be a good option too.
It wouldn't hurt.
Probably not going to happen, but
you and I will have more to discuss in about an hour because we will both be back for last call here today to wrap up the trading day and the week. So we will see everyone at 3:30 Eastern, 2:30 Central Time. Until then, though, a lot more Tasty Live programming coming at you. First up, Dr. J, Dr. Jim Schultz, with From Theory to Practice. Stick around, folks. You're watching Tasty Live.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
What is theta? Options lose part of their value over time as they get closer to expiration. That's why they're called wasting assets. Theta is how fast the option's value changes in a day, not taking any other factors into account. Way far out, an option's price doesn't change as much as time passes. But at about 60 days till expiration, the time part of the option's price starts falling, and at around 45 days to expirations, it starts dropping much faster. If you bought an option, you'll feel time decay pushing down on that option's price. If you sold the option, though, time is on your side, and keeping the credit from the opening trade becomes more likely. Even though options lose their value over time, tasty mechanics say to exit the trade near 21 days.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Jim Schultz, and this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast. Man, welcome to the Friday edition of what it is that we are trying to do. I appreciate you guys, man. I appreciate you guys so much. It is only because of you all that we can do what we do, so thank you guys so much. If you're watching over on the Tasty Live Network, I would actually bounce on over to YouTube because you can join the conversation and join the discussion, and you can communicate with your brethren who are also watching the program, and you can hop into the chat, you can ask me questions, you can talk to your friends who are also watching the program, and it is a good time had by most indeed. So let's go ahead. Ryan, bring us into the market here. Let's take a little look at what might be going on with, let's see here. Let me do one thing really quick that I forgot to do before I started. All right, there we go. So let's go into the market and let's take a look. Did you guys keep it above zero for me? It looks like you're struggling. You only had one job to do today, and you are struggling to do said job. Even the S&P is down 74 on the day. You've got the risk-free instrument not doing risk-free things. The NASDAQ futures, which is an extremely high-risk product, to be very, very clear about that, down 465, and you've got the boomers down 239. Russell 2000 futures index down 31. You got bonds down a point. You got notes down a couple of ticks. You got oil down 20 cents. You got UB40 down a point, a little over a point. You got the shifties up 14. But man, somebody check on their local hunt brother. These days there are more than two. There might be a whole group of them. Silver down $2.63. It ain't good. It ain't good at all. So silver down $2.50, but down to 61.98. That's pretty crazy if you think about it. Right? We talked about this yesterday. Silver's been on a historic run. It's been on an unbelievable run over the course of the last 13, 14, 15 trading days. And so the fact that it's down $2.60, but it's down to 62, man, that's some pretty savage stuff if I've ever seen it. And so if we go to silver, though, let's take a look at the chart of silver, because I think it got right over 65, right? Didn't it poke right over 65 this morning? So we're looking at a daily chart. I mean, this doesn't give us, this gives us the whole daily picture, of course, but you don't really get a full appreciation for what has happened in a given day by only looking at the daily chart. What do you need? You need the Arrow Coleman settings. Like, what do you need? You need the 1 minute chart. You need the 2 minute chart. You got to unlock those EC settings, and then they can really kind of show you what happened. But if we look at a daily bar of silver, you can see the high was 65.08. So it got right over 65. I think that was early in the morning. We're going to look at the Earl Coleman settings here in a second to make sure we can pinpoint down surgically when this guy got over 65. And then they just squashed him. They just totally squashed him. We are now under 62, or right at 62, I should say. That is quite a reversal if I've ever seen one. Gold is hanging in there. I think gold was up to maybe 4,400 today. Did it get over 44? No, 43.87. And so 43.87. And you know what's funny? So here's a quick little, this is just a little, I don't know what you would call it, a gripe. I'm not exactly sure what you would call this. So back here, do you guys remember gold a couple of weeks ago? So this would actually be a couple of months ago now, right? If you go back to, the middle of October, gold up here, looking at the chart, that looks like, I'm no technician, but that looks like it. Right? Well, anybody who was trading gold back then knows it did not hit 44.50. It didn't even get over 4,400. Right? And so this is a product of the rolls, and it goes back in and it kind of retroactively changes the prices to kind of fit the new roll prices, the new contracts, what have you. I don't know if I love that necessarily. Like, I'm not completely in love with that little phenomenon where it's like, I don't know, man. Like, do the big number bros, like, are they okay with this? Like, somebody check. So check on your local hunt, brother. Check on your local big number, bro. Are they okay with this? Because it never actually legitimately got through 4,400. Now, it got through there on a roll, but does that count? Like, do we have to wait for a tweet out of VIX HQ to see if this counts too? Like, I'm not sure what we can believe anymore. You got VIX prints, you got gold rolls. It's like, man, I don't know. And so gold back a couple months ago, it did not get over 4,400. I know that it didn't. I would bet my bottom biscuit on it. And here we go. We see a high of almost 4,450. I don't know, man. So right now we've got gold. This one, I do know what's going on because it's happening right in front of my face. At least I think I know what's going on. Again, this could be lost season 6. It could be lost season 5. Even lost season 3 got a little bit hairy there for a minute. Like once you met Desmond down in the hatch, like everything changed. Like y'all know exactly what I'm saying. Like I think that opened up the beginning of season 2 or season 3. Like once you were down in the hatch with Desmond, pressing the button every 14 minutes, like everything changed and you had no idea what to believe. I kind of feel that way right now looking at the gold chart. But anyway, I digress. I see you guys in the chat, by the way. I see you guys pumping the algo, and I appreciate you guys for it. So again, pop in the chat, ask me a question, communicate with, the other 500 people that are trying to do the exact same thing that you're trying to do. And then if you have nothing better to say, just drop a little deal in there for the love of the algo. Just give me a little for the love of the algo, and everybody goes home happy. But if we take a look at what's going on in the portfolio, speaking of going home happy, it appears that Dr. Jim's heater is now over. So can we officially put this thing? Can we put the heater to rest? Because we completely missed the mark on Lulu. But it's Costco, well, I don't know, maybe the heater, so maybe it's just like a little pause in the heater. We may not necessarily have to retire the heat check. We may not necessarily have to retire the hot streak. We'll pick it up again next week and kind of see where the wind blows us. Because Costco right now is basically at a scratch, and it has 35 days to go. So I'm not going to chalk this guy up as a loser just yet. This is still TBD. So that guy is TBD. If I look at Lulu, yeah, we missed that one. We missed that one because again, I was going all in on Lululemon, and Lululemon got me. And sometimes that happens, right? It's like, man, they're charging a premium price for what they believe to be a premium product. Well, you can get the same thing from Lululemon for 80% of the cost. But anyway, Lulu up $20 on the day. We played a butterfly to the downside, and it did not work. It did not work. It's going to go out to pasture. It's just going to be gone. Come time Monday, it'll be like nothing happened. And then, of course, that will be that. So Lulu is not going to do anything one way or another. And so that's that. Costco, again, we have to wait and see what happens over the course of the next, 35 days or what have you. But, we didn't exactly get the move that we wanted from earnings last night, but it could have been worse. It's only down $4.40 here on the day. And so that's not really too bad. Like, that's not too bad at all. and we have plenty of time left in the trade. This is one of the huge advantages, by the way, to what if you want to play earnings, play earnings. Like if you want to use it as a catalyst into a normal trade or whatever, like by all means, go ahead and do that. You've got some volatility crush. You may get the binary move in your favor. Like there can be a lot of redemptive qualities of just getting in for an earnings trade. But generally speaking, it's going to be a smoother ride from start to finish if you choose a normal expiration cycle for that earnings trade, as opposed to doing something in the front week. I'm doing something that's more of an overnight play, like Lululemon, for example. If you get it, it's amazing. Like if it's Oracle from yesterday, it's amazing. But if it's Lulu from today, it's not so amazing. And so, you have to understand what you're signing up for, of course, which we say on the show almost every single day. When you choose something 35, 40, 45 days ago, you just have a lot more time to give yourself opportunities to manage that trade for a positive outcome, right? Whereas if you do it overnight, if I do something in just a 2 or 3 or 4 day cycle, I don't have as many opportunities. Like I don't have as many chances to kind of wriggle away with some kind of profit. So Lulu is not going to work, but Costco is still TBD. And so that's our earnings picture from last night. It could have been worse. It could have been better, of course, but it could have been worse. And so that's Lulu and that's Costco. Look at Starbucks, man. Starbucks just pulling the weight today. You got Starbucks up a couple $100, and obviously we're getting hurt on MES and MNQ. And then you've got SLV, which is right around even. We're up a little bit on the strangle, but I'm just gonna sit tight for a little bit on that guy. So, all right, what I want to do though, I see you guys, man. I see Mount Go Rails here. Man, look at Shawshank in the house. Shawshank's in the house with a little algo drop. I appreciate that. Ranch in the house. Man, Jason in the house. John Covington in the house. Man, I appreciate you guys. I see a bunch more of you guys too, and I'm not getting to every single person that's in the chat, but I'll try to get to as many of you guys as I can here in just a couple of minutes. I usually get to anywhere between 1 and 3 questions per show. And so the earlier you get your question in or your comment in, the greater the likelihood that I will get to. Or you can just bank, you can push all your chips in the middle on a surprise and delight. I mean, that's kind of like if you get your question in early, you're going up to the roulette table playing red or black. It's like you got a reasonable shot. But man, like if you're kind of a bit of an underachiever, like you're rolling in like right now at 238, 239, 240, and you slide a comment in there, like are you going to get in my feed, in my line of sight? It's not as likely, but it's possible. Right? You roll that ball, you could get a 00 print. Like it could happen on the old surprise and delight. So definitely put it in there anyway, because again, the algo needs it. They need to see it. And so pump it in there and go ahead and do that. So let's go ahead though. Let's see here. The show's a little bit off the rails, but it's only 32 minutes to go. Don't worry. It's going to be over before you know it. Let's get, so obviously got a huge volatility spike today. We've got volatility futures. Wow. Volatility futures unchanged. Volatility futures up 17 cents. I did not see that one coming. Volatility futures not really reacting to the NASDAQ down 500, even the S&P's down 75. That's kind of wild, man, if you think about it. Volatility futures unchanged. Spot volatility, as the voice cracks a little bit there, spot volatility as it cracks again, $1.32, up $1.32. So a pretty muted response from volatility today. I would have expected a bigger response from volatility today. And that's really interesting that volatility is not really responding on a day when, the market's down pretty significantly. And so everybody who came to the Tampa event on the volatility question, when there was a lot of, people were upset, man. People were upset. Like I was pretty convinced I'm going to be fist fighting some of y'all in the parking lot when this thing is over, right? Like I was almost certain it was going to come down. Now, thankfully, we were able to extend some olive branches and things of that nature. I had a fun little quiz at the end of Tampa Leaks. I thought it was fun. I had a good time, but people got upset, man. There was a question about like VIX movements relative to SPY movements. And I gave the answer, right? I asked the question and gave the answer. And there was a little bit of disagreement amongst the crowd as to what the answer should have been. Now, the beautiful thing about being the king of the jungle is obviously I decide what's right. I decide what the answer should be. So of course that was correct, but there was still a lot of back and forth. And there was kind of some mud being slung around there. There was some mud being thrown around there for a little bit. And so today, actually, with the VIX only up $1 or something on a pretty big down day, score one for the crowd on Tampa. And so Monday's market movement, that was kind of a score one for Dr. J. And today is more of a score one for the crowd type of movement. But that was really one of those you kind of had to be there type of moments. And so, all right, let's go ahead, though. What do I want to do? Let's do a couple of trades. So I want to go in here. Let's go to, let's see. If I do thinking let's do some SPY. So let's go into SPY and, you've got volatility rank, IV rank at 14. So it's not amazing, right? But it's not single digits. And so we've got a little bit of a pump today, a little bit of an increase in volatility. I'm thinking let's not just go completely ballistic with allocating a ton of capital, but let's get a little something working. We still don't have that much going on in the portfolio. We've got a little MES, we've got a little MNQ and a couple of other things, but it's Costco, it's Lulu, and then Starbucks and SLV. That's the whole kit and caboodle. So I'm like, man, let's do a little bit more when it comes to just getting some things working here in the old hopper. So I thought, let's go to January. And you know what I wanted to do today? We haven't done an iron condor in a while. Now, you guys know, if you've seen the show for any length of time, don't love iron condors. I don't. I'm just being honest with you guys. I think they can have a bit more friction than people quite realize in terms of trying to get where you're trying to go, if where you're trying to go involves making some money. Right. Again, that's a crazy assumption on my part. But should you find yourself in that spot where you're like, yeah, sure, I could use a little money. Iron condors, they're okay. They're fine, but they're not my favorite. Let's just say that. But I thought, let's go into an SPY, and what if we do something that's a little bit wider than what we've done in the past? So what if we do something that's maybe a little bit closer to a strangle? So let's get something that's more of a synthetic strangle type iron condor, and let's see if this moves around and behaves a bit more. It's a little bit more friendly to, the profit seekers that might be out there. And so with SPY, it's a big product. I don't necessarily want to do like $20 wide or $25 wide, but I'm like, man, let's widen this guy out a little bit. Let's try maybe a $15 wide iron condor. I don't think I've done a $15 wide iron condor in a while. Maybe I've done a couple like last year or whatever, but it's been a minute since I've done these guys. And so I kind of thought, yeah, let's just sprinkle this in there and let's kind of see, let's see what happens. So looking at the strikes earlier, Amelia suggested, she is my intern for the show. She's my trading assistant. She does all of my trading analysis for me if you're brand new to the show. She is also my 5, soon to be 6-year-old daughter. Her birthday is in March. She said 665, 650 on the put side, and then 700 for the big number bros, 715 on the call side. And so there you go. You're $15 wide. Right, so we're risking about 1,000, a little over 1,000 to make a little under 500. So we're risking, this is about 3% of the account, a little bit. Yeah, it's almost right, almost exactly 3% of the account, because we're a little bit over 30 these days. And so that's not bad from a position sizing standpoint. I mean, a lot of times I'm usually between 1% and 2%, so it's going to be a little bit bigger than what we normally do. But I kind of want to tap into it. Like, we're not doing anything completely ballistic. We're not completely off the reservation. We're maybe like a foot off the reservation. We're at least kind of riding parallel with the reservation. Like, you can still see us. We're kind of still on and within property lines. But when you look at the position sizing for defined risk, you want to make sure that you're somewhat consistent from one position to the next. And so if you generally like to be between 1% and 3%, I would try to cluster around, 2% if that's what you're comfortable with most of the time. I don't think it has to be there every single time. I think you can allow yourself at least a little bit of wiggle room, kind of here and excuse me, kind of here and there. But yeah, so this is a little bit larger than usual, but I want to do it. I want to see how the iron condor behaves when we widen out the wings a little bit. So this is going to be about 465. It looks like 467. Let's push this guy out, and then we can kind of see what is what. So let's see if I do 464. All right, no takers at 464, but let's do. Let me see here. Let's try 462, maybe. All right, so we got 463 got improved. All right, so there you go. There's the high frequency guys, right? And the payment for order flow guys that took us down by giving us an extra penny. So I'm not exactly sure how that works out, but I'm sure the financial media will remind me of exactly how that works out. And so that was SPY. Let's also go in here. I want to go into GLD. So we don't have anything on in gold right now, which is surprising just because gold and silver have absolutely been in play as of late. And so that's really, these are the types of indexes and these are the types of things you want to be trading. Like if you're a volatility trader, these are the things that, you want to have positions on. You want to take advantage of the high volatility. You want to take advantage of the back and forth. And so I was kind of like, man, let's get a little something going on in gold as well as maybe some SPY action. So going into gold, going into GLD, if I go into January, same cycle, still got 35 days to go. So I go into January it's a $400 stock. So I'm not going to do anything undefined risk in here. Like I'm going to need to do something defined risk, much like I did in with the Iron Condor with SPY. We could go into one of the minors too. You could do like a GDX or like a GDXJ or something, but maybe we'll come back around a loop and do that on Monday or something. But for this one, for GLD, you've got GLD up $1.95. I mean, when you look at the world around you, like when you look at what's going on, like outside of your window, how can you not be bullish gold? How can you not just be mega pint bullish Peter Schiff and all the shifties? Now, maybe you look at it and you are concluding something totally drastically different from me. That's going to be very good for you, as evidenced by my Lululemon earnings trade, as evidenced by even my Costco earnings trade, which is not necessarily a thing to behold right here on this very day. But I am thinking, let's play gold to the upside, and let's do it with a wider put spread, similar to what we did there with SPY. So we're not going to have as much capital at risk like what we have with SPY, but I don't necessarily want to do something super small that's like only $5 wide. I mean, that would be fine, of course, but in the spirit of position sizing consistency, I don't necessarily want to be 1% over here and then 3% over there. And so for today, given the fact that it is a Friday and we are typically a little bit off the reservation on Fridays, let's do something, I don't know, maybe $10 wide here on GLD. So what if we did like a 393, 383? Okay, so that looks really, really nice. So 393, 383. It looks like I'm going to be able to collect about 388 on the mid price. We'll see where we get filled here in a couple of seconds, but 388 on the mid price. This is a 393, 383 put spread in GLD. Just a very straight, plain vanilla Betty Crocker put spread in GLD, and we're playing it to the upside. And you've got gold up to 400. It's like, man, let's go to 425. Let's go to 450. Right? It's like we buy them high, we sell them higher. That's been the strategy from day one. You can check the tapes along with my boys playing this weekend. Right? Granddad Rivers, like he's doing it, man. He's getting under center. He's doing it 100%. And he's probably going to need a nap sometime around the second, maybe third quarter, but they'll figure it out, man. They'll just run the ball. They'll get the other guy in there or whatever, and then bring him back fully refreshed after a solid 90-minute nap for that fourth quarter. And man, it's going to really be something if he takes him down. It's going to totally be something. If he goes into Seattle and takes him down, it wouldn't surprise me because I've been following Phillip Rivers for a very, very long time. He's been my guy. He's been my guy from the very beginning. Y'all been sleeping on Phillip Rivers for a really, really long time. And so you're gonna see on Sunday, he's gonna come to play. And by come to play, I mean you might have to wake him up around kickoff. So let's go ahead and let's get this short put spread on in GLD, and then we can see what's what. So all right, 385, no takers. Let's try 382. We'll see if maybe we get a taker at 382. All right, beautiful. So 382, there you go. All right, so we did GLD, we did SPY. Oh my gosh, we're right around the halfway mark of the show. Perfect. So let's go ahead and E-mini S&P's down 74, NASDAQ down 471, and everything else is right around the same as to where it was. And man, let's do it. Where are we at? Where are you guys at, man? Look at you guys doing. Man, you guys are just doing some work out there. Look at this, man. You guys are pushing that alcohol. You're pushing it hard, man. Nice job. Nice job indeed. So let's see here. Let me go ahead. Let me go in here. Okay. Oh my gosh, you guys got me. Oh, this is so good. Oh my gosh. So Con HB says, Dr. Jim, my wife asked if Woo Woo Women is a real brand. Tell your wife there has never been anything more real than Woo Woo Women, right? She needs to be Googling Woo Woo Women right now. And this is going to be great. It's going to be great for her. It's going to be great for you. It's going to be great for everybody, right? Absolutely everybody, because they're stylists, they're this and that, they're whatever. And, oh man, Woo Woo Women, right? That, and you even, I'm pretty sure you spelled, no, I don't think you spelled it's not women. It's not Woo Woo Women. That doesn't work. It's Woo Woo Women. So it's WEMON, right? You got the woo woo part right, but it's got to be women, not women, women. And so push that guy into the, oh man, you got me on that one. I wasn't ready for that. I know I've gotten a couple of y'all on the Woo Woo Women's, but you just reverse got me on the Woo Woo Women there in the comments. Nice job there, Con. Very, very nice job. Oh my gosh, that's too funny. But push that out there in Google, man. Push it out there. You can even bang it if you want to. I'm pretty sure they're not around anymore, but give it a shot. Hey, ask Jeeves. Jeeves knows about Woo Woo Women. They've been there from the start, man. So yeah, It's definitely a thing. And by definitely a thing, I'm like, I don't know if it's a thing, but it should be a thing. And so let's go ahead and oh my gosh, that's too funny. No, it's definitely a thing. So let's go ahead and let me try to. I don't know if I can recover from that, man. That's really funny. Con, you got me on that one, man. I wasn't ready for that. I was in like all business mode, like I'm ready for trading questions. I'm ready for, people asking me about, iron condors and put spreads and something. And you guys got me on that woo woo, man. That's funny stuff. And so, but let's see if I can surprise and delight somebody else in here. Here, well, I see Margin Walker's in the middle. Margin Walker says, where's Margin Walker at? I had Margin Walker a second ago. Oh, it says, what up, Dr. Jim? I appreciate you. Are you still holding the put ratio in MES and the short put in MNQ? I am, my friend. They are right here, and I'm not going to do anything with them today. This is just a kind of a wait and see type of situation, right? I mean, you can see that the ratio spread is holding up just fine, actually. So the ratio spread, we're still up a couple of bucks on, and we're still out of the money on the strikes. And so right now I'm going to sit tight. And the reason why I'm going to sit tight is twofold. Well, threefold, really. Number one, nothing's been tested yet, so there's not really a reason to act. Number two, I'm not at my profit target yet. And if the market rallies from here, then I'm going to see the mark price on this spread go down, which is good for me in terms of profitability. And then number three, I don't necessarily want it to go down, but if it does go down, I could potentially make more money if it catches it right in the middle of that spread. Now, I'd have to hold it closer to expiration and take it much further inside of 21 days to get to that point. But it's a possibility, right? Like it's definitely something to consider. But right now, I think the move is to do nothing. And very similar with MNQ. I mean, this guy, I've got this short put here. There's nothing to do here. This is very much a wait and see type of scenario. We're not at the profit target. We're not tested. I just wait and see. I just wait, I see, I do nothing, and then we see where the wind blows us from there. But let's see. Can I find somebody else in here? I don't know that I can. Well, I see Dylan Bertucci saying Merry Christmas. Merry Christmas to you too, my friend. Thank you for being here. I don't recall you having been in the chat before, so thank you, Dylan, for being here very, very much. I appreciate you. If I can ever help you in any way, please let me know. It's my absolute pleasure to help however I can. And so let's go back to the beginning, though. Man, let's do it. So Adam Armfield in the house. Hey, Jim. What's going on there, Adam Armfield? Hi, I'm tantalizingly close to break even on your last Chipotle earnings put. That's impossible. But Adam goes on to say, I was less a devil may care than you and sold a 35 instead of a 37.50 and rolled out 100 days when it dropped after earnings. Where is it now? Is it at like 40? Like, there's just no way. 36. Okay. Up $1.40 today. So Chipotle having a nice day for itself, which, when you think of flight to quality, do you think of Chipotle? I most certainly don't. But apparently we're both wrong. Apparently it is a flight to quality. When the market's down, people buy Chipotle. Like when the Nasdaq's getting crushed, people buy Chipotle. Like when the Hunt brothers are going out of business, like, well, I can't get pizza anymore. I'm going to get some Chipotle. It makes some sense, I guess, if you really kind of piece it together that way. But nice job out of you there, Adam. So Chipotle is dead to me. Like it's over, it's done with for me and Chipotle. I'm not interested in that stock any longer, at least not for a couple of days. And so nice job out of you though for hanging in the trade and, trusting the process, right? You trusted the process. You let it play out. You're rolling, you're adjusting strikes. Personal feelings about a given stock aside, that's why we have those things in place. That's why we have, kind of the adjustment protocols at the ready. And so Scramble Everything, greetings from sunny Los Angeles, Dr. Jim. What's going on there, Scramble Everything? I didn't know you were in LA. That's pretty cool. Is that a new thing? Are you just traveling or is that home base for you? Let me know there, Scramble Everything. That's some cool stuff. And let's see. I hope you got a good pump from all that heavy market lifting you've been doing recently. Don't blow out a hammy so you can be available for the Colts call. I won't. But I'm more worried about Granddad Rivers blowing out a hammy. I'm a lot more worried about my man. Like, he's probably got some plantar fasciitis. Like he could have, some other things going on. And it's like, man, I really hope that homeboy can still sling it. Like I can't wait to see what happens this Sunday. And so thank you there, Scrump Everything. Ash Finn in the house. What's going on there, Ash Finn? I appreciate you, my friend. Appreciate you so much. The Sonacone, 6113. Dr. Jim, I called it. You called what? Is this the Event Horizon? Is this another iPod Touch deal? Like, I don't remember you calling it. I didn't write it down, which that doesn't mean it didn't happen, but that just means I didn't write it down. And so from my vantage point, I don't recall you having called anything. And so you'll have to remind me there, Sonacone, if you did indeed call it, what did you call? Did you call silver getting smacked around? That would be an impressive call. Did you call the market getting smacked around? Would also be an impressive call. Did you call? Oh, wait, were you on the other side of my Lulu trade? That may have been it. That may have been it. And so if that was it, nice job, my friend. And yeah, I mean, once again, if you're just doing this as like a hobby, right? If you're just here, you're kind of just passing through, you're like, okay, it's a good time. I sprinkle in some trades here and there, whatever. I'm not taking it super seriously. Then, do whatever, right? Follow my trades, like do whatever. But if you are like serious about making money and you're like, man, I take my financial future seriously. Like I really want to get to financial independence as quickly as possible. You need to be the opposite of me, sight unseen. Don't look at the stock. Don't even look at the strategy, right? They need to have a fade Dr. J button on the follow page. The fact that it's not up there is kind of like, man, it's a disservice to you all. Like it is a disservice to all of you serious traders out there that are really trying to, do the best you possibly can. And so I think that's what it was, the Sonic Kone. I think it was Lulu. Oh, you actually went on to say on Woo Woo. Yeah. You guys got me twice on the same show. Oh man, I got to bring my A game on Monday because I wasn't ready for this. I'm like, it's Friday, it's a Friday, right? So we got Friday vibes, we got Friday feels, whatever. But you guys are coming with some B level trolls, man. Like I'm pretty comfortable with the B minus trolls that you guys normally bring, but you guys have ratcheted it up a little bit today, and so this is pretty good, man. And so yeah, Sonic Cody, it was Lulu. So nice job, very nice job. But Wolf Wolf says, Dr. J, after your 2-week heater, which is now over, I think, you and Autumn should go grab some bang bang shrimp and split a well-done sirloin with lobster tail from Bonefish. You deserve it. Have a great weekend, man. Have a great weekend to you too, my friend. I will not be getting bang bang shrimp because I'm allergic to shellfish. And I probably will allow Autumn to get a sirloin though, because, with this Lulu debacle, no fillets for my girl tonight. Like it's just, I can't do it. I can't swing it. I can get your sirloin, and yes, we are splitting that sirloin. And so that is the way that it has to be. But Ashvin says, Dr. Jim, those Memphis Tigers are going to get rolled tomorrow in the KFC Yum Center. Oh, man. So Andrew Fansler was asking me about the Memphis bowl game, too. And, I could not name a Memphis Tigers football player, except for that really good running back. That was like, how many years ago was that? I don't remember his name at all, but he was great. I think he won the Heisman, actually, or he was in the running for it. He's the only one, and I can't even remember his name. And so Memphis, that's where I went to grad school. That's where I earned my PhD from. And basketball, they're a lot more well-known for basketball. And I don't even know that I could name any basketball players. I was so busy working on my PhD and also maybe doing other things that I don't remember too many of the sports players from Memphis. But good luck to you, my friend. And I don't have too much loyalty to the Memphis sports teams. Not like I do Central Michigan. Fire up chips. And so Ron Vashar says, let's go the half hour of power. It's actually the 3/4 of an hour. It's the Dr. Jim power 3/4 of an hour. And so there you go, scramble everything in the house. Theta Trader in the house. I hear Theta, and I thought Liz was talking to me for a second. Perhaps I need less screen time. Just focus on Dr. Jim in 2026. Oh, I wouldn't do that. You need something to balance it out, right? You need something like to restore the pH balance, like on your palate, right? I mean, you can do 42 minutes of Dr. J. That's probably 6 or 7 minutes too much. Like, let's be honest. But it's like, okay, if I have to, push a little bit over the red line, like I'll power through, I'll do it for the love of the algo, whatever. But it's like, no, then you need some Liz and Jenny to balance out the palate. Like you need some Mike and Jamal to balance out the palate. Like you need some Tim Knight to balance out the palate. Like you need something in there just to restore the pH balance, I think. Again, this is just basic stuff. Chris Mackey in the house. Dr. Jim, I love you, brother. Man, I love you too. Or Chris Maxey, I think it is. Thank you, my friend. Thank you so much for being here. I don't recall you having been here before either. But again, my blueberry intake's been a little spotty lately, so I could be misremembering. That's very possible. But thank you, my friend. Thank you so much for being here. And it's really only because of you guys that we can do what we do. So thank you guys. It means so much to me that you guys watch the show live, watch it in the archives, whatever. Like, it just gives me a tremendous amount of purpose. And I'm very excited for the things coming on down the chutes in 2026. It's going to be the best year ever, of course. And so my kids, man, they're so pumped. Man, they are very clear. Like, you remember what it was like to be a kid, right? They're very clear of the Christmas concept, very clear of the concept. And now that we're inside of 2 weeks, like, they are like, my oldest, Penelope, she'll be 11 in January. We were just talking last night. And she was like, Dad, it's 2 weeks. It's going to be so long. Like, it's going to just take so long. And I'm like, that's how every kid since the beginning of time has felt about Christmas. And like for me in autumn, we're like, this time is gonna fly by because we have like so many things to do, like so many different things to do logistically and gifts and just all the stuff, right? That you guys are all doing the same stuff. But like as a parent, like as an adult, because of all the responsibilities you have, it flies by. It totally flies by, especially since Autumn has to do all of it, and I'm not really gonna do any of it. It makes it doubly hard on her. And so, man, like my heart goes out to her, like thoughts, prayers, all of it, man. And so it's like, yeah, but as a kid, it's slow, like it's super slow. And anyway, I'm not exactly sure why I brought that up, but it felt right. It felt right to share that tangent in that moment. The Preston in the house, though. Dr. Jim, are we going to rally? Keep up the great work, my man. Man, I don't know. It ain't looking too good. But if they bring him back to Unch today, man, that would really be something. Like if they bring him all the way down to scare all the children, right? They're scaring all the children. They're scaring the equity children. They're scaring the silver children. Like, are they scaring the Bitcoin bros? Probably, right? You got Bitcoin, yeah, Bitcoin down $1,900. Like they're spooking across the board, right? It's spook city, just across the board. And then if they just rally it right back up to unched on the day, man, that would really be something. It doesn't feel like that's what is going to happen, but again, I mean, feelings aren't facts, right? And so I don't know that that's worth it too much, but I appreciate you there, the Preston. Joel James, Dr. Jim, can you put on a 3 DTE SPX trade? Oh, I'm ready. So I know which way the market will move. I need the trades from the man with the waves. That hair. Yeah, I don't know. I think we might be getting a cut here pretty soon. I need something. I need some kind of help because it's actually doing okay right now. But a lot of times on the sides, it just wants to go down because there's just too much weight. Like the actual strands of hair, like they need more training or something. They need more musculature or something. They can't hold up all the hair. And so I'm like, man, we might need a little something. I don't know if I want to go straight mullet yet. Like we'll be doing that later on whenever I make the transition back to short hair, which will be sometime in the future, I'm sure. But yeah, we might need to do a little something. I don't know, a 3DT, like an overnight, like an over the weekend type of play. Man, I don't know. I kind of had shut it down mentally in terms of the new trades I was going to do, but I'll take a look. If I go into SPX, so over the weekend, I mean, you got to play it for the upside, right? You got to play the bounce. You have to play the bounce. I mean, you got the Santa rally, you got the December 15th rally, like it's all there. It's all lining up for the bounce, right? So if I were to do a 3-day trade, if I were to do just a tiny little butterfly, like what would this look like? 68.40, 68.70, 6,900. Is it like $4, $5, 665? Yeah, I'm going to pass on all that noise. But this is how I would play it, though. Now, maybe it doesn't count because I didn't actually put it on. So that may not help you at all. Like when I put it on, like, all right, I'm taking the opposite, 75% pop, like at a minimum. Like, that's the way that it works. And I completely agree. But when I don't put it on, that's probably one of those deals where obviously I would have hit, I would have did all these different things, whatever. I'm not going to do it, though. It's a little bit too expensive. And we already did like a super wide iron condor in SPY. I mean, it's not like super duper wide, but I mean, 15 points wide that's a little something. We did that, and then we did the gold put spread. So I'm going to pass on this for now there, Joel, but I appreciate you, my friend. I hope that you know that. Anderson Homestead says, howdy, algo lovers. Yes, that's what I'm saying. See, you're mixing it up. You're using a little creativity and innovation. Like, I appreciate that very much because the algo is smart. It's smarter than I am for sure. It's smarter than all of us collectively at this point. And so we've got to find crafty ways to kind of sneak in there and just kind of trick it, man. Just kind of fool it. And so Sam L, Friday Vibes, Doc, thanks for another week of keeping us entertained, educated, and slightly confused. You guys got me again because that's 100% right. And so that's really good, man. Oh my gosh, you guys, I can't recover from this. Thankfully, we're almost done with the show, but that's pretty good. I mean, is there anything better than saying, man, I'm smiling, I'm having a good time, and I kind of don't have any idea what's going on. Like, is there a better feeling than that? That's exactly what Lost Season 3 was all about. That's when they roped us in. Like, they got their hooks into us in Season 1, so we kept watching. And then Season 2, I don't remember exactly what happened. I think it was like fish biscuits and some other stuff, whatever. But we were like, I got to keep going. And then Desmond shows up in the hatch, pushing the button. You have no idea what's going on, but you're like, I love it. I kind of wouldn't have this any other way. I'm trying to do my show in the exact same manner. And so that's pretty funny, man. That's pretty funny indeed. So AGR Dubai, what's going on there? Greetings from Dubai, man. I appreciate you. The show just went international. Man, that's awesome. Actually, I mean, I don't remember Dubai showing up, but certainly like the UK, Canada, Australia, Finwest is all over the place. And so he's hit a couple of countries, I think, while we've been on the show. Well, let's see. LP Maz, and then a bunch of other stuff says, why are cannabis ETFs up, Dr. Jim? And is it too late to jump in? Man, I don't even know. What are the cannabis ETFs again? I don't know. Is it, I know Mara's one of them, right? I think Mara's one of them. Isn't Mara one of them? I don't trade the cannabis ETFs. I know they were big a couple of years ago, and they've kind of maybe fallen out of favor now for some reason. It's not something that I'm personally interested in. And so it's not really something that's on my radar from a professional standpoint either. So there could be opportunity here. I'm actually not sure. I'm not the best person to ask. And so I would ask Josh. I mean, he looks like somebody that has a lot of experience in that category. And so let's see. Sam L says, Doc, who knew yoga pants of all things would be the one to break your hot streak of earnings trades? Not even the fade doc strategy saw that one coming. Yeah, I agree, man. I totally agree. I mean, Lululemon. And you know what was crazy? Didn't the CEO step down? Like, I think the CEO stepped down, and that apparently is the reason for the rally. Like, how crazy is that? Right? I mean, Lulu's been has it not been doing well for itself? I know it's kind of fallen on hard times recently because of the competition from Lululemon. But if you look at a chart, like you just zoom out a little bit, like if I just go to like a monthly chart and I go like 5 years, it's actually been getting wow, this thing's been getting completely hammered. Wow, it is on the bottom of the barrel. Why didn't you guys tell me this? Man, I sold them in the hole and you guys didn't stop me. Man, look at that, man. I sold them in the hole and you guys didn't stop me. Unbelievable. You guys took me down, man. You guys 100% took me down. And I'm not going to let you forget it. And so, yeah, CEO steps down. Yeah, I guess that would make sense. Looking at this chart now, looking at a monthly chart, it's like, yeah, you need somebody else in there. And so, the stock rallied pretty hard on that news. And so, let's see. Oh, there's Dylan Bertucci again. So, thank you, my friend, for being here. There's Margin Walker again. There's Ranch. What's up with their Ranch? Anderson Homestead says, still over 60. What is over 60? I can't remember what that might be. But let's see. Theta Trader says, I'm engaged in this content and commenting in the chat due to my engagement and willingness to spend disposable income. That's correct. That's 100% correct. And so I appreciate you, my friend. Steve Aguilera for the algo. That's what I'm saying. Sam L feeding the algo. That's what I'm saying. Doc's cats are Delta, Gamma, Theta, and Rho. Only Rho moves when Uncle Jay talk. You know what's pretty funny about names of my pets? It's been a while since we've had these two. So we had two little dogs. We got them when we were in Charlotte, and we took them with us when we moved to Chicago. And then we had to, when we were about to have Eli, my son, who's 8 now, it was too crazy. It was too chaotic. You know, being in the city, living in Chicago, whatever, we had to rehome the dogs, but we were not going to take them to a shelter or whatever. So we actually found a good home for the dogs. It was a great situation. Just a young girl. She was like 17 or 18, and we met her a couple times. It was perfect. It was great. But we got these two dogs, right? One was a little Maltese, and the other one was like a Maltese, like Bichon mix. And my wife got to name the big one, and I got to name the little one. And I always wanted to have a pet with this name, and it was absolutely perfect. So we named the bigger one. He wasn't big, but he was like 10 or 12 pounds or whatever. We named him Teddy. And then the little one, who was like 4 pounds, his name was Crouton. So we had Teddy and Crouton was our two dogs, and it was amazing. Like Teddy and Crouton, it was so cool. And everybody obviously thought it was hilarious that we named somebody Crouton. But I mean, Croutons are amazing. Like, you tell me that there's a better name for a pet or a better item that you can buy from the grocery store than a crouton. I don't think you can do it. And so anyway, I got to go because I'm out of time now, but I appreciate you guys. I appreciate you guys so much. If I missed you today, please come back on Monday. Come back on Monday. Get in early. I try to go sequentially, as you just saw, and I'll try to get to as many as I can, as I always do on every single show. But I appreciate you guys so much. If I can ever help you guys in any way, please shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Tim Knight coming up next with Trading the Charts. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys on Monday.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
I got a good feeling. I got a good feeling. Yeah, I love this life and I'm living it up. You can't stop this dreamer. I'm a mad hatter, call me one of a kind. I'm a true believer. I got a good feeling. 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 I got a good feeling.
Oh, am I on? Okay. Hello. I think I'm on. Tim Knight here. It's Friday, end of the week, and it's been a long week, but ending on a good note. It's been the best day in a while. Feels like the one good day this week for me. We got red all across the screen, and it's a bit of a surprise because just to recap the past 50 hours or so, we had the Fed announcement on Wednesday and the podium talk, Q&A, and Powell seduced the markets into lifetime highs and announced stealth QE, more hundreds of billions of dollars of debt being issued to keep things propped up under the guise of just keeping things working smoothly for the Fed on the plumbing, but it's QE. And that got people excited, and they bid things up to lifetime highs. And then Oracle came out, and that was a big old splash of cold water on the market yesterday. But then Broadcom announced last night. And at first, it was a good, solid report. No surprise. AVGO was up about 400-fold since the financial crisis. Been a good stock. But then after the conference call, it soured. And things went a bit south. So when the market opened this morning, the NQ was red, but it was a pretty stable looking day. It was green otherwise. For whatever reason, around half an hour before the opening bell, things started to slip. And we're red across the board now. Nothing dramatic. The Dow's down not even 0.5% off of lifetime highs. But, 1%, 1.33%, almost 2% on the NQ. We are getting some red out there, which is cool. Metals started off really strong, and those have soured a bit as well. And I got to say, just broadly speaking, it's still kind of annoying how tethered the precious metals, palladium in particular, seem to be to equities. Like, aren't these like different things? But they don't seem to be. They seem to be really joined at the hip. So I've got some charts loaded for you, and one or two things to say about some of them. So let's jump in. And we begin, as we always do, with a spider. And on the one hand, we got very close to a lifetime high yesterday. That line marks the lifetime high that was set back on October 29. Got very close yesterday. It looked like with AVGO last night, we could easily just fly above it. We've been red all day. We've basically undone any of the gains for the week. And we're trading now where we were trading back before Halloween. So lots and lots of smoke, very little in the way of fire, just net, almost no change since October 27 or so. The diamonds were at a intraday lifetime high today. They opened strong. They went even higher. And now they are in the red, but they're still above this breakout level. That is to say, the former high here. So we went flying above it. So we had a very strong Wednesday. Thanks, Jerry. Very strong Thursday. We've undone a portion of Thursday. So not really anything for a bear to celebrate, but at least it's going in the right direction. A bull could argue that we are finding support at this level. Absolutely could be happening. It's really got to crack below that to mean anything. The small caps, by way of IWM, also lifetime high today on an intraday basis. However, we have undone all the gains from yesterday. Now, just like the Dow, we haven't broken below this line. The line is the same idea. This was the former high. We beat that on Wednesday, thanks to the Fed. So we're still above it. You could absolutely argue this is bullishly configured. In fact, you could go so far as to say not only is it bullishly configured, but it's at a good price because we've, instead of paying what you paid end of day yesterday, look at the bargain you're getting. Get it while you can. It's got to break this level to be sort of sour as a breakout. It hasn't done that yet, and it almost assuredly won't in the next, 40 minutes before we close for the week. But the kinds of stocks which have had an accidental relationship with the market's psyche, I think, tell an interesting story. This is a very minor stock, but I still think it's kind of amusing. The company called Bullish, BLSH, would be so indicative of the market sentiment. This is down about 3%. And so broadly speaking, we did recover for a few weeks there, but it's just sort of lapsing lower again. And just about any IPO from this year, Klarna comes to mind, has been not so good in terms of its general price direction. So let's take a moment to look at crypto. Here's Bitcoin. We're hanging out around 90,000. It's been banging around all week between about 90 and 95,000. No real sense of direction. My oft-repeated ceiling of 98,000 may have been too high. Maybe the high that we saw this week is it. Maybe it's more like 95,000 or so, because that's a very powerful wall of overhead supply that I think will hold prices back, in spite of all the pundits like Tom Lee and like Kathy D. Wood talking about $5 million a coin, $10 million a coin. And Michael Saylor, same thing, talking about, what if you could buy something worth $10 million for $90,000? You'd be a fool not to. Okay, Michael. I don't think so. I think that we've got an interesting reversal going on right here. And 2026 is going to be a fascinating year because we're going to get this interesting melange of finance, inflation, the economy, and politics. Because there's going to be about 10 short months between the start of the year and the midterms, and they're going to do everything they can to bribe John Q. Public into thinking things are just peachy keen. And it's kind of an interesting quandary because, let's say it's we got to drop interest rates. That's the key. Okay, try that. Drop interest rates. Ooh, inflation's starting to perk up. That's not good. Well, we can fake the numbers, I guess. So it's going to be a very interesting situation to see how they, and like I said, it's not out of the question that they'll just ban short selling next year if things start getting really out of hand. Because if there's one entity that the human race loves to blame for their problems, it's short sellers. It's kind of like blaming the mirror for how you look. It doesn't work that way. The reality is you, not the mirror. Okay. Wow, what a tangent, huh? Back to the charts. Speaking of, here's Circle Internet Group, and that's down about 5.4%, and a very pretty right triangle pattern on that one. I think this was the organization that dealt with so-called stable coins. You can see how well they're doing. And then things that are obliquely related just to the whole AI/crypto zone. CoreWeave also down almost 9%. CRWV coming off of that really pretty rounded top. This hasn't been public very long, and it's been, oftentimes you need decades of market history to really suss out what the personality of a financial instrument is. This one revealed itself pretty swiftly. It's had a couple of big rounded tops, and it has tumbled away each of those times. Good heavens. Okay, that's good enough. So yeah, pretty cool stuff there. Getting back for a moment to Avgo, the world's oddest ticker symbol. Some ticker symbols make sense, like, Budweiser's Bud. Perfect ticker symbol. But Broadcom is AVGO, but there it is, and it's looking really, really bleak because it had a great night last night. They announced earnings, and people celebrated, and it spiked higher. And like I said, the earnings data is one thing, and the conference call's another. And Broadcom is doing quite poorly right now. We opened low, and it's been sinking ever since. So unlike Oracle yesterday, which kind of opened trashed and then closed not as trashed, this one's just looking worse all the time. So that's helping. And in fact, we may look back months from now and say that this is the week where the AI mania finally broke between, Oracle and Broadcom. And just the general, I follow AI really closely, and the bloom is kind of fading from the rose because the sheer scope, the sheer size, the literally multi-trillion dollars of obligations that have been made in this circular financial arrangements, it's a house of cards. So, yeah. Boy, Tim, you're chatty today. Why don't you get back to your charts? Fine. Okay, so SMH, which is internet slang for shaking my head, and maybe that's getting more appropriate these days. This is down hard too. We were at a lifetime high Wednesday. It was a breakout. This is a failed bullish breakout. This is not what the bulls want to see. You want to see follow through. You want to see new highs every single day. You don't want to see the past 8 days wiped clean because of one stock that really nobody's really ever heard of in everyday life take down the entire sector. So there we have it. So we've basically Control-Z'd this back to October 24 or so. And then in turn, naturally, the leverage instruments like SOXL, SOXL, it did not reach a lifetime high, and it's reversing hard. It's down about 14.5%. This is the leveraged semiconductor bet. And I barely have time to be drawing anything, but let's just hammer this out. Bang, diddy, bang, dang, boom. There you go. Something along those lines. So you can see that failure. Cool stuff. We have 3 minutes and 40 seconds left. Okay, let's make the most of it. The cubes are on the weak side, thanks again to Broadcom. And the cool part here is that the gap was not closed. The gap proved itself formidable resistance. And the closest we got was on Wednesday when Powell was lavishing hundreds of billions of dollars onto the bulls to plunge the country deeper into debt as we approach $40 trillion in debt. That'll never be repaid. And so we got close to that. And what did he get for his hundreds of billions of dollars? Well, he got 1 day of adulation, and now it's just barfing all over the place. So we've done a couple of weeks to gains there too. So that's interesting. Over in precious land, mixed feelings on this. I make money off precious metals, but I've avoided the big wins, but I've also avoided getting skinned by these things. Here's gold, for example. We have not broken out. It got close, but it is, as I made mention, it seems a little too respectful of what equities are doing. So if equities go plunging, then precious falls right behind, which is kind of weird. The ETF itself, GLD, closed its gap, but it has not broken out above the former high. Now, there's nothing bearish looking about this. It's not like this is ruination. It's just, you're not getting the kind of gusto that'd be nice to see. I'd like to see it have a mind of its own and not just basically tick for tick, do whatever equities you're doing. Silver is having an unusual weekday, down 4.4%. We've undone yesterday's gains. Intraday, lifetime high today. But we've wiped out yesterday's gains. We're kind of back to where we were on Wednesday. Net for the week, a small gain. The miners were at lifetime highs both yesterday and today, but we're down a little bit right now. We had a very strong opening. Metals were very strong across the board, but they've been selling off. My old friend Palladium, I have for the 9,000th time ditched my whole position early in the day, made a nice profit, glad I got out. And if I just bought when I noticed the pattern like last autumn and stuck with it, obviously I'd do it a lot better, but nice not to be taking those losses. So this is down just a little bit, 0.23%. The good news for Palladium is that it has the breakout is intact, and this is still looking like a very positive long-term pattern. Just by way of mention in the neighborhood, Platinum, PPLT, also opened strong, sold off some today, but it too has had a good week and a good month as those continue to break free. I just want to see them not care about stocks so much. Over with Rivian, just the one long thing I'd mentioned, finally a really good day. This is up 12.7%. It's been a real trickster because yesterday was their kind of product announcement, news announcement. The stock slumped hard. It threw all those concerns away today. So we've got an important new multi-year, I think, high on Rivian. Not a lifetime high, but it's definitely based nicely. Just a few moments left. You know what? Let's just finish up with bonds because this, I think, is a real concern. TLT, down as the pattern predicted. And that's not what Powell wants to see, I don't think. And so this implies that interest rates, belong in an upward direction. Doesn't imply it. I mean, that's what the market's doing. The Fed just kind of copies whatever the market's been doing. So it could well be that until smiling Kevin Hassett gets installed as the Fed head, that's going to be the last cut we're going to see for a while because bonds look pretty weak. Okay, well, pretty red day, looking like a good close, so I will leave it at that and wish you a good weekend. Last full week of trading next week. So I'll see you Monday. Bye-bye.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
tastytrade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. tastytrade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. tastytrade, pro-level tools, intuitive design, total control.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at tastytrade.
Ring the alarm. Hey, ring the alarm. Boys, turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Ilya, we are back. It's the final 26 minutes of the trading day of the trading week here on Tasty Live. I said it's last call. I'm your host, Chris Vecchio. He's Ilya Spivak. Ilya, how is your day going? I'm assuming a bit better now, given where stocks are.
Indeed. And I'm glad I took the opportunity, as we were talking on Futures Power Hour, to sell more because there was a little bounce there. We were mentioning that I got filled on my NASDAQ short. And indeed, it did look like that intraday bounce that we were talking about ran out of steam. And we're back toward the lows now. And that's looking pretty good for me.
We are back towards the lows here as the session's going on towards that close. The S&P is down 1.19% right now, 68.24 here on the screen. Our NASDAQ is off 2%, losing its trading range over the past few weeks and really the month of December so far. That's 25,190. Dow's off 0.64%, 48,437. And the Russell's off 1.6%. What had been a really strong week for the Russell undercut here, 2551. You could say the same thing about crypto, which has had another weak session. Bitcoin down 2%, 90,165, and Ethereum off 4.8%. We hopping over to the bond world, where perhaps this is where some of the angst is coming from. Treasuries are hitting new lows for the month at the long end of the curve. ZB down by a full point now to 114 and 20 ticks. Notes a touch weaker, off by 8.5 ticks now, down to 112.06. You're seeing everything come in, and it started coming in this morning at 10 a.m. Eastern. The metals themselves were not immune from that either. Silver prices off a healthy 4.5%, $2.92 right now, down to 61.68. Can't believe we were north of 65 even just a few hours ago, Ilya. Gold prices as well tried breaking out. Dave came back in a little bit, 43.22. That's still a gain of 0.22%. Quickly, though, energy, oil off by 0.42%. Natural gas off by 2.5%. The evisceration continues. And then a US dollar, which is trying to stage a minor bounce today. Mixed bag, up against the euro, the pound down. Up against the yen, the Aussie, and the British pound down versus the Canadian dollar and the euro. The big movers today, as we go into the individual stocks here, and before we go into some chit chat, Broadcom. What a different story than where you and I were together 23 and a half hours ago.
Yeah, there's that wick in north of 420. That's when we were looking at it.
That was when we were looking at it, and that's now a stock that's down 12% here, 357. The earnings call itself yielding maybe there's not a lot of pent-up demand, not as much backlog. Oracle here, likewise, there was a report this morning that they are going to be delayed with building out some data centers, rumor that they tried to dismiss, the market not buying it, down another 4.6%. And that's really where we start this discussion, Ilya. What had been a new high close for semis just 2 days ago, they've now erased all of the gains for the month of December. November 28th, we closed at 352.28. We're at 353.47. What's going on here in tech stocks? Is this just another one of these earnings kerfuffles like we saw at the end of October, beginning of November?
I actually don't think so. I mean, to some extent, of course, there is that element. Yesterday, obviously, the markets liked Broadcom. So what can you really say about the markets having this or that earnings response? It seems more like the markets are, as we were saying before, starting to feel pain. And that isn't because the pain wasn't there before, there were no reasons to feel it. I mean, consider, where were the earnings for the Mag 5, let's say? Because Tesla reported before the Fed in the last cycle, in the October cycle, the third quarter cycle. But the other Mag 6, and NVIDIA was later, so you sort of had early on Tesla, late on NVIDIA, and the Mag 5 was basically within 48 hours-ish of the Fed. Were the earnings bad? Meta aside, no. And where do we find ourselves? Lower, and then lower, and then lower, and then lower. So the issue here doesn't seem to be the substance. It seems to be the sense that the markets have been priced for perfection for quite a while. And what was holding them up was the hope that the Fed would give everybody more Vicodin. And the Fed said no Vicodin.
That's a good reference. I'm watching House right now.
There you go.
It's like one of my nightly shows. I didn't know that was the central theme of the show. Anyway, I digress.
I haven't watched the show, but it makes sense.
The market didn't get its drug. Yeah, you could say that. We do see that rate expectations are up for next year, slightly net at the end of the week. Let's get the proper contract in here. SR3Z6. We've added about 10 basis points from where we were after the Fed meeting, right? 3.25 year-end Fed funds rate down to 3.15, one could argue. The way that you surmise this, for those wanting to do the math at home, you take the y-axis number, subtract it from 100. That's the implied Fed funds rate at that contract expiry. And here in the futures market, Z is the December month, 6 being the calendar year 2026. So that really hasn't jiggled today. No. There's actually no movement today. Yesterday there was slightly more priced in. It's a half a basis point. Yeah, 3.155 now as opposed to 3.15. I don't think that's a material difference. I'm also thinking about what's going on in the VIX, right? Is there something destabilizing happening here? VIX is basically back to where it closed on Wednesday after the Fed, a little bit more than that. Look along the VIX futures curve. It's not exactly a huge bounce here, right? This is going to be the second lowest close in this contract's duration, this history.
Yeah.
Is this just a wiggle? I'm curious what you think. Is this just positioning jitters around what's going to be a big data week next week? I'd encourage people to watch Futures Power Hour. We don't need to get into it here, but go check out the start of the show to see that conversation on the data. Are people just winding down their books, taking profits in the winter? What is this today? Because I'm not seeing any panic in the vol term structure to suggest that this is anything more than, well, just that, repositioning.
It could be that. There's a lot to sort of say that endorses that idea, but does that really matter? And what I mean is, if you look at NASDAQ, if you look at S&P, things are crossing important levels. Things have been crossing important levels. NASDAQ, I would say in particular, SMH is looking very emphatic. So if people are taking things off the board, it might just be that they're realizing their profits. We talked about this idea that, look, nobody wants to look crazy before year end. Nobody wants to end up looking like they underperformed on a year that was this emphatic. And so you probably don't have a huge desire out there for people to go and outright short the market, unless you're me. But I'm crazy, so there is that. But if you're a big money manager and you're answerable not just to yourself, but you're answerable to investors, and you have to produce returns, your high watermark looks great this year. You've had a wonderful year. Maybe you're just taking the money off the board, such that you go into 2026 having been well paid, and because you're not necessarily confident that 2026 is going to be as good a year as 2025, maybe you want to realize as much as you can to get paid as much as you can.
Yeah, Ilya, I'm using this opportunity in the market today quickly here, thinking about what we can do with this uptick in vol, so to speak. I mean, looking at the futures curve, I'm going out to the G26 contract, the February expiry. I'm looking at the weekly. Volatility is closing lower across the curve nearly every single month out. We could go to the VX H26, the March expiry, same thing, similar story. So what you're seeing here right now, this week before expiry, OPEX is next week, expiration. I'm not going to get too bent out of shape about it. What I do want to do, though, and I think it was actually executed during the interim period after Futures Power Hour. No, not yet. It wasn't filled. I am looking at this pullback in silver. I'm working in order to get long the 67, 68 call spread. And I know that's not like the typical Tasty way, but we've been outlining a technical case here in silver futures that not only is the channel still in place, but it's a channel that's ultimately targeting the high 67s following this cup and handle breakout. I've been enjoying trading silver futures a lot this year. I think people who've been watching Futures Power Hour over time know that, which I suppose is a great time to bring up the 12 days of trading. Why might you say that? Because today's day 5, where we talk about futures and crypto content in this 12 days of trading program. So first off, what is that? What are you missing out on? It's a holiday special from our friends over at Tasty Trade. This 12 days of trading email series is a daily email with trader-ready topics, easy reads, and good reminders as we head into the new year. So if you opt in now, it started December 8th. It's going to run through December 23rd, and you can opt in at tastytrade.com/12 days. But you'll get this content that will help you learn how to trade into the futures market like we've been doing. I think futures offer a great way for diversification. And quite frankly, because of the constrained nature of the hours of the stock market, Ilya, you and I are both spot FX people by trade in our first vocation. So having that 23/5 market at our fingertips and able to operate in something like MES or MGC or now 10Z or even something like SI here, it's, I think, been enjoyable for our macro personality style. So for the folks
I
out
immediately
there,
start thinking of 10Z as you're talking, because it's much more convenient than, let's say, GLD.
Right, exactly. So sign up. Go to tastytrade.com/12 days. Sign up for this email list. Get today's email, why futures and crypto diversification is important. It really is important for your longer term portfolio and even your trading portfolio. We're going to get away from silver here real quick, Ilya. I want to talk about gold prices as we go back to our charts. They didn't have the week that silver had, and silver had a absolutely wild week. But we see here that prices have started to break out again. I'm curious about what you think comes for the metals in 2026 here as we go into the close. More gold, silver gains, copper gains on the board. I mean, what's driving this market right now? I ask that in the context of, I know there are a lot of people who look at this market and go, that's too high, too fast. I've got to short this thing. And that's been a very difficult trade in 2025.
Very. There were periods here when things were stuck and I was looking just to extract vol. So there were periods where I was de facto short, but I was always selling vol. And there were times that I was doing that with a bearish bias. There were times that I was doing it with a bullish bias. But right now that kind of standstill that we had from about April into the fall, where things were just doing nothing and all you could really do was sell vol, now, different story. Obviously, silver has had a massive run. Gold had a little bit of a slower going recently, but I would argue over the past 24 hours, what you've seen is a breakout. and you're not challenging the bounds of that breakout here, even though things are looking a little soggy. You didn't get all the way as far as you could have if you kept at the highs today, but that's neither here nor there. You had a breakout, that breakout held. You don't necessarily have to have everything happen all in one day. But the important thing is that in my mind anyway, and this will be my opinion until it isn't, because of course, when markets move, my opinion will change, as well it should. At the moment, this looks like a clear-cut bullish breakout. And I'm long, and it's holding. So Godspeed, gold. Keep going.
You know, one of the interesting observations that people probably are tired of listening to us talk about, Ilya, but it is the difference in relationship between metals and vol compared to how equities respond to volatility.
It's an important distinction.
People panic buy safe haven assets. They panic sell risky assets. So gold, especially over the last 2+ years, it's had this contemporaneous relationship with volatility where when vol rises, it's usually in hand with stronger prices in the metals. And as we just saw in silver, which in the lower panel here in the chart, that's what you're looking at. It's the IVR. And we'll go to a 4-hour time frame for the sake of this. As silver breaks out in late November going into December, volatility, the IVRs, they're ticking up. The IVRs were in the 20s and 30s, and now we're sitting here at 75. And so I go back to that gold chart right now, and I really do want to drill down to a lower term time frame to make this point. But we see here in recent days, as gold prices are moving up, IVRs are going from 30s, now we're up into the 40s. Volatility expanding with the breakout. Volatility staying higher during this period where we break out and pull back and then start to move up again. I feel pretty constructive on this going into next week, even though next week is a week where it is really a macro heavy week. We have the Bank of England rate decision, ECB, European Central Bank, a Bank of Japan that looks like they're going to hike rates. And, you know, Ilya, maybe that's what really caused the market to get a little itchy today, that we have a BOJ rate hike coming. The funding currency cost is about to go up. Of course, all the U.S. data, the non-farm payrolls, the CPI, the retail sales. So there's a lot to digest, but
There's a lot.
I feel better being long gold right now, given the action today, than I say to, you know, I'm still long stocks. I thought we were getting the breakout last night. It didn't look like, now obviously today's price action speaks a different story.
Right.
But this is a chart that's uglier. We're not exactly heading into the close with strength here. I'd prefer to stay long.
NASDAQ looks worse, which is the scary thing. We talked about this yesterday, this idea that we might get some rotation, but given how much market cap is in tech, you're probably not going to get a meaningful market rally unless tech participates. There is just not enough other places for things to rotate into.
The rotation trade today is still holding up, I would argue, right?
Yes,
I look at RSP, it's only down by 0.7%, and this is going to be this second highest close ever for equal weighted S&P, which I think is, you know, on a red day, I think that's noteworthy as well. QQEW, it's off by 1.15. That's compared to the 2.05% loss.
This is annoying too, because this is, again, as with the cash indexes, this looks like a break.
It's just an ugly chart, right? Morningstar cluster. Well, that's no longer, and you know, not something that.
No, this looks like a bearish engulfing to end bullish bearish engulfings. This is textbook.
New high relative to yesterday, closing below yesterday's low, and setting a new low for the week with that move. It doesn't exactly make you feel super duper comfortable on stocks in the short term. But then again, I balance that out with, if I was listening to myself 2 days ago, when even after the Fed, it looked like this was a market sitting up north of 6,900, right? So let's wait to see 6,910 break. This is the seasonally weak window of the month. So from now through the Tuesday close, it's typically when stocks pull back in. From December 16th through the end of the year, and you say the S&P 500 produces a 1.4% on average on gain on average since 1950, something like 1.32% of that 1.4% comes from December 16th onward seasonally. So, like, let's see what happens next week after OPEX, after we get the CPI data, after we get the non-farm payrolls data, and then, if ES is breaking out of its range, the NASDAQ is a very different looking chart. But if the ES is breaking below 6,800, 6,810 here, you get your pullback, you reassess. But I'm not panicked right now. I just feel a lot more comfortable in gold and silver than I do in ES.
I mean, I don't think there's any reason to panic in ES. And one would be remiss not to acknowledge that this market has had so many false breaks, chop, fits, starts, that who knows what anything is. You really have to assume follow through is not going to happen, and then just be nimble enough. It's part of the reason why, for example, in gold, I'm not doing options or spreads on GLD. I'm using the 1 ounce future outright because you can trade it overnight. It's small, it's nimble. For stocks, I'm using verticals and I'm using ETFs, not the futures, to keep things small. When I rolled my S&P position today, it got down to the lows. I took profits on the position that had only 7 days left to expiration. I've now kicked out duration, but I also reduced size. I only put half of it back on. I've added NASDAQ, so it's a little bit bigger now, but NASDAQ looks awful. So it would be, I think, premature to say, oh my God, this is the spot. But also, there's enough here to nibble on if you're opportunistically bearish, as I am, and then we'll see. But over extrapolating any of these moves feels like a recipe for trouble.
Elliot, breaking news. Trump says Kevin Warsh is at the top of Fed chair candidate list and that the president should be consulted on rates.
What did we say?
But before we get there, let's go to our last bumper of the session here. It is something special for the holidays, maybe. We did that, production team. Sure, perhaps we should talk about Refer a Friend. I think that's a good one. Let's talk about Refer a Friend. When a referred customer opens a new account and funds it with a $2,000 plus initial deposit using a friend's referral code, both the referrer and the referee will receive a $100 bonus. Go to tastytrade.com/referral. Refer your friends and you earn bonuses. It's really that simple.
Just look at how much fun we're having. Don't you want your friends to have fun? Come on. What are we talking about here?
Yeah, like I can do something with my friends that helps build generational wealth. Okay, cool. 68.28 here on the S&P 500 right now. Market's not necessarily moving to the Kevin Warsh headline. I was peeking in on bonds earlier when you were speaking on that. They've bumped up 2 or 3 ticks on the move. Gold prices a little bit lower, $2 or $3. Can't say the same for silver.
In fairness, purely subjectively, Kevin Warsh seems like a better option than Kevin Hassett.
Yes. For the from the market's view.
Yeah, he at least knows how things work. Kevin Hassett is at this point basically a think tank shill. You hear him talk and you go, that's not how economics works, sir. You have a PhD in the subject. How don't you know these things? You do know them. So since you do know them and you are not this crazy, you're just saying things for political ends. I would rather you be ignorant. And so from the market's perspective, in terms of running the Fed as an institution, Kevin Warsh is probably a safer pair of hands. Chris Waller, another rate cut aficionado, would be an even safer pair of hands, I think. I think the markets would love a Chris Waller nomination. I think stocks would cheer it.
Speaking of what's going on with the Fed, rates here, 10-year yield 4.2% to close the week, it looks like. That's going to be the high close that we've seen since the start of September.
Yeah.
Is this a sign that yields are bound to go up further? They had a little reversal yesterday, but we were not able to sustain the drop. We haven't talked much single stock here today, but there is one stock that's kind of standing out as an outperformer, and that's Tesla. again, these companies, Ilya, in the AI space that aren't subject to the overfunding, the overspend, the debt buildup concerns, they've seemed to do a little bit better when these issues flare up. Tesla, of course, who are they? They're not relying on Oracle or this is just, they're their own game. Tesla here having nice volumes today. Frank tells us that we have over 4 million Tesla options with calls over puts by 1 million. It's a lot of little options, by the way, with 0 to 20 deltas being 37% of all volume. So people punching some lotto tickets here. Check out the volume in today's Teslas. About half of the 4.5 million that have traded. 0 DTEs. Wow. SPX here, over 4.5 million have traded hands, with over 40% of those trading in between the bid ask. So I think it's a Tony thing. Always work your order. Maybe people are listening to Tony. So customers are learning. They're working their orders. They're not just taking what the market's giving them. They have a price. They're willing to wait for it. That's a good thing. More puts than calls in SPX for what it's worth. But Tesla here, Ilya, strengthened to the end of the week, back to the top side of a multi-month trading range. Uptrend off the April lows very much intact. Now, if you're playing the AI space, I see a Tesla, I see a Google that's down less than the broader market today, sitting right at its 1-month moving average at a 9 point. Oh, Ilya, hold on a second here. How many times has Google hit that little yellow line on our chart and bounced over recent months?
I mean, it's tended to, but such is the nature of moving averages, which is why I don't put much stock in them.
Oh, don't be like that. Let's have some fun here. Let's have some fun here.
It's just arithmetic is all.
Can we get filled on a move up to 330? Can we get 330, 340 call spread filled here? I'll punch that ticket for let's punch that ticket before the day's out. Maybe it gets filled. Okay. Little trade to go home with, Ilya. I'll go home with a little Google trade, outperforming the rest of the market here, and Tesla holding up. And if it's OPEX week next week, you know what? Volatility didn't go anywhere. So a tough day for stocks to close down 1.1% in the ES, 2% in the NASDAQ. Fed week, of course, is in the rearview mirror. But you and I have to talk about all the data due out next week, even if earnings are going to be light, because, Ilya, next week, CPI, NFP, all those rate decisions from around the world. Thankfully, we'll be back together on First Call this weekend.
Yes, sir.
We get to bookend the week every week, which is really nice. So I suppose we can wind things down here. 68.33. Nick Batista told me earlier today this market was bound to stick around 68.50 for the foreseeable future. And the man's right. You got to give him credit. I certainly was not today. You had a better day than I did. But you know what? We're done here. I'm not going to keep anyone else for any longer. Ilya, I hope you have a great weekend. I hope the listeners have a great weekend. Very much thanks to our audience and, of course, the production team for putting on the show. I've been Chris Vecchio. He's been Ilya Spivak. You've been watching Last Call. This has been Tasty Live. Catch us on Sunday when markets reopen 5:55 Eastern to 4:55 Central here. Nowhere else. Tasty Live.
Have a great weekend.